And we're back. Friday.
Big time.
Glenn
Frank.
Glenn Freibarger and Frank on Friday.
Who let this happen?
Weird week. I'm
Very.
getting used to the 4-day weeks.
Pretty nice. Could
Chop
be
it up.
worse. The Thursday was a little weird. It's better than the Wednesdays, though. Definitely better than the Wednesdays.
Thursday off day.
Yeah.
Yeah, we were talking. Today is both synthetic Monday and true Friday.
So a lot to pack in today.
Motions all over the place. It was hard. It was hard getting up, but
Yeah.
by the time I finally got here, it's like
One
it's
day.
like any other Friday. I don't have to work today.
Exactly.
You know?
Here, 30 minutes. We could do that.
Showing up is that what they say for like working out? Is like showing up is
50%.
It's only 50?
I'm hoping it's at least 50.
I thought
Half the
showing
battle.
up was going
I
to be
thought it
like
was half-
80%.
I think the saying is like it's half the battle.
Showing up is half. Okay, I could deal with that.
Okay.
Glenn, how did you pay respects to Jimmy Carter yesterday?
Oh, beautiful service, I will say.
Did you watch?
I did,
Okay.
yeah. Frank is beautifully off of social media, and I applaud you for that.
Yeah.
But that means that I have to fill you in a couple times.
I have no clue what
a week.
happened.
It was
So you watched it. So this is what happens. I was talking to my girlfriend Callie's younger sister was in town.
okay.
And she is very much on the internet.
Sure.
And all of what the internet has to offer. She knows things about the Rizzler and like all these people. I've never that kid, or is he a man?
He's a kid.
He's a kid.
Not
okay.
not a kid.
He's
man.
associated with the Costco crew,
Correct.
but he doesn't go to Costco.
He's not related to the other Costco crew members.
Does he go to Costco with them?
Yeah, because how else do they get the double chunk chocolate cookie?
Okay. I have no clue what any of that stuff means, but she knows all about it.
Right.
But we were watching. She was like, "Oh, Callie and her family are from Oklahoma," and she's like, "Oh, apparently Oklahoma City is playing the Cavs. This is Wednesday night.
Big,
it was like a big
huge game.
Yeah. And I was like, "Oh, do you watch OKC?" And she was like, "No." And I was like, "Well, so how do you know what's going on? Social media." And so this is a classic case of you didn't watch the Jimmy Carter
I actually
funeral
did.
service.
I did.
You just got on social media and saw all the coverage.
I did watch it. It was very nice. A lot of kind words about
Okay.
a very kind man.
seemed like a good guy.
But I will admit, I did hop on Twitter, saw there was a clip already, and said, "Oh, I got to turn this on."
What was happening?
So they had Kamala sitting in like the front row, and then they had all the former presidents except for Biden. Biden was up with Kamala.
Okay.
Everyone else in the same row,
And that
right behind
is
him.
Trump?
It's Obama, Trump,
Okay.
George W.
W.
Clinton.
I forgot about
Yep.
Bill Clinton. Okay.
And
Because we don't
Hillary.
have HW was the last to go.
Correct.
Okay.
And so, what a row. And so we had Trump sitting next to Obama, and
What a row.
and Trump was cracking him up. That
Really?
was the clip. Is that Obama's like flipping through the pamphlet, Trump's like in his ear just talking, and then Obama's like, and just actually starts laughing, and it's really funny. And then Kamala
Is Trump laughing as well?
Yeah,
Is there
he's
there's
like-
lightheartedness about
Yeah,
it?
no, he's like trying to get him to laugh. I think it's what it looks like. And then Kamala turns around. She turns around like this, like just like glares at Obama, and Obama's like,
Wait, Kamala does
yeah.
this? Okay.
Kamala turns around, sees them talking, and Obama tries to like be cool, and then she turns back around, and he goes back to talking to him. So funny. And then
Boys will be boys.
Exactly. And then great segue, because then George W. is trying to get in their row.
He's a character.
Dude, he's so funny. So Obama stands up, and George W. just comes up to him, gives him a little belly tap, walks right past him.
Dude, I thought you were going to say you gave him a sack tap. And I was like, then this is over with.
It was
The
kind of
whole
close.
politics thing was
It
a
was
joke
kind of
at this
close.
point.
And that's I think the consensus on Twitter is like, we're getting too upset about this. They're all just having a time.
So I didn't see any of this. Obviously, I'm not on social media. I have no clue. This is my first time hearing this. My instant reaction is this the WWE? is politics just
God.
like they get up there for the debates and like it's like, oh yeah, tariffs are crazy, like we're gonna take Canada and Greenland and like hide your kids, hide your wife. We're taking everybody. But then, like, in actuality, they're just like dapping
good
each
show.
other up. Like,
Man, you were on fire today. Yeah, thanks, man.
the tariff stuff came out of nowhere.
Yeah, just-
hilarious.
No, they ate it all up. Yeah,
That's
I don't
pretty
know.
sweet. I guess, yeah, at that level, you gotta. I guess you just gotta respect.
Yeah,
Like you've made it to the top position on the planet in this era of humanity.
right.
And so, like,
You
way
gotta,
to
you
go,
gotta blow
man.
off steam,
We
yeah.
might not agree, and like, there's literally constant news about how like you're awful and I'm awful, and this whole thing is awful. But when we're getting together, it's actually kind of a beautiful thing.
It was. Seeing Obama just like laugh was like I had an emotional reaction of like, oh, like that's really sweet.
So literally, if we look at the last 8 years, I don't know how many instances of this have occurred. A president has to die for there to be a celebration where everybody is kind of on the same side
Yeah.
and happy. That's what has to happen.
Yeah,
Okay.
and then Pence was in the row behind.
Wow, I
and-
forgot about him.
Yeah, and there was some like saltiness
he's not.
with like
He's not associated with this Trump.
no,
presidency.
because the January 6th thing was arguably
Oh,
like
he was on the not Trump side.
correct.
Okay.
He like confirmed the vote, and so
Gotcha.
him and Trump supporters I think are not so cool.
Gotcha.
But
He's
they
like the
shook hands.
Fredo of the situation.
Yeah, they shook hands.
Wouldn't go
It's
on
all
vacation
good.
with Trump if I
Nope.
was him.
Yeah, no boats.
Damn. Okay.
Yeah, so it was nice. A lot of good singing.
Sweet. Singing.
Oh yeah.
Who sang? Jimmy Carter's favorites. Who would
Yeah.
who would that have been?
I don't know, but
Big Mama Thornton. Like I don't even know. Like Billie Holiday.
No, I don't know. They had like the Marine Orchestra. I think
Oh,
they had Garth
okay.
Brooks sing "Imagine."
Garth Brooks sang John Lennon's "Imagine."
I think so.
That actually might be
It
good.
was okay. Yeah, there's a woman there too. I didn't read the
There was a
caption.
woman there.
It was a duet. Yeah, but
I
it was him on the
understand that
guitar.
Trump is back in the White House, but like we don't need to go full boys club, where it's just like
I don't
you
recall.
don't remember any.
I don't recall
any woman that was there.
who The
don't need
esteemed
her. Don't need her name.
female artist that performed.
It was Adele.
with him. It's America. It's not. It wasn't Adele.
Forgot it. I forgot.
Yeah.
Well, she's like L.A. now,
That's true.
so I feel like America is claiming her. at
Adopted
this
her
point.
like Beckham. We got Beckham.
If we have to take that Prince guy, then we get Adele. What's his name? Prince.
Harry.
yeah, that
yeah.
guy. If we got to take that guy.
Well, he's like married it. I guess Adele is also she's seeing Rich Paul.
That yeah.
Yeah.
What is he? He's a big sports
Yeah,
agent.
he's LeBron's agent. Ever heard of LeBron?
I have heard of him.
So you're probably pretty good.
Yeah, he's pretty set. Adele also, she apparently does pretty well for herself. Well, that's pretty sweet. Yeah, I didn't do any of that. Didn't know any of that stuff happened.
But you're wearing your Notre Dame shirt, so
damn.
go
I did
Irish.
I did see this morning that Notre Dame won. I caught the first half.
Yeah.
And I was hoping that Penn State would win.
That's a good
I
game.
went to Michigan. I also grew up on the south side of Chicago and have been a Michigan fan for most of my life. Weirdly, because it wasn't really the reason I went to Michigan.
Mm.
It was just the best school I got. Well, best school, and they gave me some money to go there.
Nice. That is
and so
critical.
that was the end of that. And so I don't like seeing Notre Dame win.
I don't either. I told my roommate went to Penn State, so I told him I'd wear a Penn State shirt on the show
That's too
if
bad.
they won.
Penn
and
State, they just
yeah.
get super close,
close.
and then they just can't put it together.
And they really blew it. Yeah.
but that's also what you would say. Notre Dame doesn't get very close, but they like are supposed to be good, and they never
Right.
put it together.
yeah. But
Well,
yeah.
so then who's playing tonight?
Ohio State and
State.
Texas.
Oh God, these teams. If it's Ohio State, Notre Dame,
I'm not watching.
pretty brutal.
I don't care.
Yeah, that's going to be a tough one.
But Ohio State looks good.
All right, well, yeah, I caught that. What else? I watched The Social Network. I don't know if you've heard of that movie. It's pretty good.
Love it. So good. Man, that's up there for me with like The Devil Wears Prada of like making me want to, do
What does
some
The
stuff.
Devil Wears Prada make you want to do?
Oh, it just makes me want to work hard.
Okay, gotcha.
That's the
Makes you
point,
want
right?
to act like Stanley Tucci.
Oh yeah.
It's
Yeah.
wild that you watch that movie and then Stanley Tucci has just been like one of the most prominent heterosexual men of the last 30 years.
No, he's outstanding.
Great wife, then he cheats on his wife, and then now he's got a great situation again. Like,
Sure.
Edie Falco. Can you believe that? Do you know who Edie Falco is? She was the mom in Sopranos.
Okay.
Yeah. He was,
Okay.
I think, married to someone, and then he cheated on that person with Edie Falco.
Ooh, that's sticky. He also has like a whole Netflix show about him just eating around the world.
I
He
believe
got that.
I thought that was a CNN show. Is it on
Oh.
Netflix now? Yeah. Isn't it? What's it called?
No clue. But it looks like the life.
It's like
that's
Stanley
like the that's like
Tucci
the
in
dream.
Italy, right?
Yeah.
Yeah. I saw like 30 minutes of it once.
Yeah.
And yeah, he's literally just getting drunk and eating pasta on the streets.
Yeah. I can't watch it.
Good for him. But yeah, I caught Social Network, took Scout for a walk. The sun was out yesterday in Chicago,
Actually,
even
really
though it was
nice.
20 degrees. I went to the park and took my jacket off and just had a short sleeve shirt on so that the sun could hit my
Soaking
skin.
it all in.
And I think everybody thought I was insane,
Yeah.
which is fine. But yeah, nothing much else. Respect Jimmy Carter. Glad that all the other presidents had a fun time.
Now it's Friday.
And now it's Friday.
It's a big Friday.
Big Friday.
Huge.
Markets are a little bit calm ahead of non-farm. If you didn't know, we buried the lead maybe. It's
Now
10,
you know.
10 minutes in. First non-farm of the year here on January 10th because of all the weird scheduling of the last week or so. And Glenn, last night, or I guess not last night, last night, the pound got absolutely annihilated, taken all the way down to 122.5. It's rallied back to now sit just north of 123, but this is becoming an interesting story here in sterling. The one currency you thought maybe was safe from this unprecedented dollar bull run is now giving back ground, got close to 122, and let's just take a look at 122 for the last couple of years. You probably know better than I. Yeah, this market has gotten down lower than these levels, obviously, in recent years, but trading near 122 now, that's the low since
October.
fall of 2023, so a little bit more than a year. And then, of course, you go back to all the craziness in 2022. This market broke all the way down to around 110, took one, crazy shot down to 105 before bouncing back. I mean, out of all this data, Glenn, this is weekly data for the last, almost a decade, about 6-7 years here. Not a lot of data points below the 120 marker, and we're getting dangerously close.
But I will say that this one's been a funny one timing-wise because, dollar, you can't stop it right now. And we saw this move, and you're like, wow, 122, let's zoom out, as we just did. And compared to all these other extremes, this one, now you're thinking about it, and you're like, wow, why hasn't this happened sooner? Mm-hmm. That the pound has been a bit held in a lot better than a lot of these other currencies like the Australian dollar, where you're looking back to that 62 handle, and there really isn't a lot going back in that same time frame. Euro, even the same. I mean, we're pretty much there. That flashes lower, obviously, when we went below parity. But other than that, we do see a few instances where that pound is that weak. But for all these other pairs, we've been there in that territory.
Yeah, the pound has definitely been the strongest. And let me put these all on the weekly so we can rotate through and take a look. Yeah, I mean, you look at this and you say, okay, well, until this week, this pound market has not even seen lows for the last year of trading because it held in above 125 amid all of this dollar strength and currencies abroad weakness. You go over to the Aussie, and it hasn't held anything for the last couple of years. And keep your eyes on this 2022 data point here for good measure, because that's the craziest move in U.S. dollar for the last several years. I would even say, keeping in mind the pandemic, and you might say, well, Frank, the Australian dollar got lower during the pandemic. Well, keep in mind that Australian dollar a lot of times is a risk on trade. And so Aussie got hit pretty hard in March of 2020 because not only did US dollar, it actually saw both sides of the trade. It saw some weakness and then some strength as well as a flight to quality relative to Australian dollar. But also Australian dollar does act a lot like an equity market. Like I say, it's way more risk on than a euro, than a pound, than a yen, of course. And so that noise there is a little bit crazy to me. And thus the 2022 move here that we're already through when it comes to Aussie is really crazy because you look back at euro, and again, now that you take out that risk on kind of mentality, you see, in 2020 around the pandemic, this euro market did not get anywhere near the lows of 2022, thus making my point. That's really been, honestly, in my whole career of trading, coming out of university in 2015, so now closing in on a decade. Wow. Thank you. That 2022 move is the craziest.
Yeah.
I mean, we don't have any kind of basis for trading below parity for this euro dollar. Euro dollar, one of the highest volume pairs, one of the most quoted euro area, US, the two largest economies on the planet. You have to go all the way back to 2001, 2002. You're not born at this point. Are you?
2001.
2001. Okay.
So I'm there.
And I am rounding out, what is that? Second grade?
Yeah, 7 years old.
7 years old. And so in my trading career, again, this 2022 is the craziest moment. And one of those crazy moments, Glenn, that you think, okay, we got the mean reversion for, let's just stick on euro dollar here for a second. We got below parity. We spent a handful of weeks below parity. I don't want to make this seem like that British pound move where it was like got down there and then rallied right back. But we saw this mean reversion, Glenn, back to 105, 110, more normalcy here in the 110 to 115 range. That's probably a more historic average, more accurate for the last 10, 20 years of trading in euro dollar. And now we're getting right back down into that territory. And so it'll be really interesting to see, especially because this pound is now breaking down. This now makes it become, it already was a US dollar story, but it's even more, I mean, depending on what side of the trade you're on, scary or good, whatever, because this pound is seeing a lot of weakness. It's not holding up at all.
Yeah, and you make a great point there of this robust dollar story, and you're thinking, we're looking at these markets and we're talking about historic mean reversion, and maybe, yes, eventually everything comes back and it's all good, but really we haven't had any reason why now. And so we'll look to this non-farm number today, maybe for to see if there is some slight reprieve. But right now there hasn't really. We have the price action and the historic charts to look back on to make a case for reversion, but there hasn't been a momentum. We thought early this week on Monday that they're on that tariff rumor, maybe Trump will be nicer than we thought, and that just got completely erased by both U.S. data again, and then different reports on Trump tariffs saying no, papa. I might use some executive power to really bring the hammer down. So this is super interesting to me, and we're at levels that we haven't seen, but not really seen a chance for all these other
mean reversion
right now.
Mean reversion is a tough thing because you look at one of the most classic mean reverting markets, historically speaking. Have to give that caveat because of course anything can happen.
Right.
Like options prices can be the most expensive they've ever been forever, and VIX, which is one of the most mean reverting markets, can fly off the page and never come back theoretically. It hasn't historically happened. So with these mean reverting markets like a VIX or like we just went down with a euro dollar or any currency markets, a lot of commodity markets as well tend to be mean reverting historically. Timing is the thing.
Right.
And to your point, we kind of looked at this rally here to start the year and said, okay, this might be it. Maybe we've gone to the extreme of the tariff talks and the U.S. data that's separating from the global data that is causing U.S. rates to potentially stay higher than those global rates abroad. And now the market's right back down to where it was for an Australian dollar, for a euro dollar here on the daily basis. You saw this nice rally, broke right down close to 102 to start the year, to end last year, to start this year, and then bounced all the way back above 104. Couldn't hold it for even a day. And we're right back down to 103, right back down to those lows. And yet, I mean, do I go into a number like today with non-farm, and the number is expected at 160, previous was 227, and you can see we've been doing a lot of bouncing back between those levels of mid hundreds to above 200, and on those above 200 days, you've seen the dollar rallies and the U.S. Interest rate rallies and some of these crazy moves. Do I go into a number like this, Glenn, saying, oh, this could be the number that turns the dollar over, and so I'm going to go full boat into short dollar going into this event? Absolutely not. If you're looking to trade non-farm payrolls, then trade non-farm payrolls like you would any short-term event. Now, if you're a swing trader, which is maybe a multi-day strategy, or a long-term trader that's looking for that long-term reversion, maybe this number gives you a move in one direction or the other to get into a position or start to get out of a larger position. Maybe you've been short dollars, the number comes in lower, you see a big dollar sell-off, and you get out of some of that position, then great. But yeah, I wouldn't necessarily go into this, because I do agree with some of the sentiment you were getting at. This is the type of number, like an FOMC event, where nothing crazy necessarily happens, but the market can start trending in the other direction. Right. And obviously, you look across the board. I mean, I also want to pull up this CAD piece, because this is one that's quoted U.S. dollar on the front end of the quote and Canadian dollar on the back end of it. And you just look at this nonstop runaway train of a U.S. dollar rally the last several months, and you look at, they tried to knock it down, like we said, to start this year. We're right back above 144 and dollar CAD, and you're looking for anything to reverse this trend. Or if you're a trend follower, obviously
blast off mode.
Yeah, this number could come in hotter than expected, and you could say, okay, 144 is the new low part of the range. We're heading towards 145 and beyond. But yeah, you don't want to have a big position going into something like this, hoping that it goes one way or the other. Because this could be one of those that does turn that trend or exacerbate it further. And
thanks for highlighting this Canadian dollar as well, because we're getting Canadian unemployment at the same time, and so that's always an interesting one. And with the backdrop,
I have Canada on here.
The backdrop of that Canadian political uncertainty, we'll see if this is. That 6.9%. That's not where you want to be long term. Not sure how much any of these political decisions will depend on what this unemployment number is, but worth pointing out that at the same time, you're getting people digesting both Canadian unemployment and U.S. unemployment.
And this has become a huge number.
Right.
These numbers go in and out of vogue and importance.
Exactly.
And this number has become huge because the number has become huge. This is not one of those scenarios. Sometimes you'll see like Turkish inflation is like triple digits. And it's like, I guess that's how they get down in Turkey. And it's like Canada doesn't normally have 7% unemployment. That's why their interest rates have fallen from close to 5% to 3% in like 2 or 3 meetings. And that's why, part of the reason why the Canadian dollar is getting annihilated relative to the U.S. dollar. And so, good call by you. I mean, it's a couple of North American employment data points here today. Maybe the Canadian dollar piece doesn't really, or the Canadian unemployment piece doesn't really hit equities and isn't as, asset class divisive as the non-farm number. But man, for Forex markets, those are a couple of numbers that'll shake up the ending of this week and could potentially change trends for the rest of January. We've got a bunch of inflation stuff coming up the next couple of weeks and a Fed event by the end of this month. So watch these numbers and watch these prices. We'll see what happens with this continued dollar bullishness. Glenn, thanks so much for jumping on, covering the Rizzler, covering Jimmy Carter.
You're very welcome.
The Trump, Obama, Kamala memes. Yep. Classic, as always. And hey, man, I think we call it. Let's get out of here. I think this is the end of Friday.
I'm drained. Yeah.
We've done our work. Let's hit the bar. All right. Thanks, everybody. Have a great rest of your day. Tom, Tony, and Vanetta are coming up next. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah, as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Sadnoff, you put me in the greatest of moods sometimes in the morning. You're better than sunshine in the morning sometimes. You know that?
I don't know what that means.
Sometimes I remember why I love you, Saznoff. I really do. I really do.
Do you want me to leave? Because I don't have to be here. Like if you, like if y'all just want to, be alone, then I can leave.
If you tell me that Boomer Spring Break is possibly back on, I might just have to come right down there and kiss you right on the boca.
Boomer Spring Break is for sure on.
Look at you. Look at you. I'm going to use tongue for crying out loud. I'm going to get over there. I'm going to make out with you.
Nope. All right. See you guys later. Bye. Wait, when are you going to go on Boomer Spring Break? Like March or April? When is it going to be?
Oh, we don't know.
Yeah, I don't know.
That's way too much detail.
You dummies, it's already January. Like you.
Yeah. We don't know.
Okay.
We don't.
Okay.
Yeah.
Okay.
Hey, we're high rollers. We don't care.
Sure.
There's something.
Oh man. We are something. No doubt.
Hey, did you watch the Orange Bowl last night?
I did.
Close game. It was a good game. Notre Dame was down by 10 well into the second quarter, maybe even into the third. But then they kept trying to even it up and then ended up winning 27-24 over the Penn State Nittany Lions. So Notre Dame headed to the college finals. So.
Yeah, you know what? And it was a good game. I actually made it through the entire game.
You did? It was on late. I went to bed, but yeah.
I made it through the entire game because it was actually a really good game, and I enjoyed it.
I went to bed when they were tied at 17, and I was like, this will sort itself out.
They can do this without me?
Yeah.
Yeah, you know what? It was it was good right up to the end. I mean, it didn't the game was decided in the last minute.
What was the line? Do you know?
I think Notre Dame was a small favorite, but I'm not. It was really close.
Okay, because Penn State was ranked higher, so
I know,
just
but
sure.
all the teams, the rankings aren't really that. I mean, Ohio State was ranked like 6th, and they're right now, if you did a new ranking, they would be number 1 easy. So, I mean, if Ohio State,
I think Penn State was ranked 6th, but whatever.
Yeah, whatever, 5 or 6. I mean, Ohio State.
I think Penn State was 4, and Notre Dame was Notre Dame was 5, and Penn State was 4.
Tonight, Ohio State's a big favorite. If Ohio State plays Notre Dame, that will be a very highly watched game. Well, even Texas, that'll be a big, either one of those teams, I guess. But Ohio State against Notre Dame, a little Midwest action, will be a very highly watched national championship game.
My parents are excited. My mom is like, they're going to burn this town to the ground if they win.
Well,
my parents live in South Bend.
Marcus Freeman actually went to Ohio State. So.
Oh, I didn't know that.
Oh, yeah.
I didn't know that either.
Yeah, no, he was a linebacker at Ohio State. So.
Okay.
And he's easily the best coach in college football. Easily. I love that guy. He's great. Everybody likes him. He is.
Everyone loves him. His players love him. He's doing a good job.
They will run through a wall.
I don't hate looking at him.
They will run through a wall for that guy.
Same.
But he is, he went to Ohio State, so that would be kind of a really, really interesting matchup. And I don't think Notre Dame's. They were in the final. I don't remember what year it was, but
The last time they won was 1988, and I remember that because it's the year we moved to South Bend from Texas, and it was crazy, and we were like, what is going on? But yeah, it was 1988. It's like the Rocket Ishmael era in Notre Dame. But that's the last time they won the whole matzo ball.
well, tonight's game is going to be it's going to be a good game tonight. Last night's game was great, and tonight's game is going to be great.
Who do you like?
NFL playoff football this weekend, too. A lot of games.
I know. I'm going to the game tomorrow.
What game, sweetie?
I'm going to Houston.
What? Wait, what?
I'm going.
Yeah, he's going.
I'm going to the Chargers game tomorrow in Houston.
What? How?
Well, he told you he's a high roller. Didn't he just say?
It's snowing here. How are you going to get out? Like, it's what?
I'm going to the game. I'm leaving tomorrow morning, and I'm going to the game in Houston.
Why? You're not your son's a Chargers fan.
I know. I'm meeting him there. We're going to the game together.
I think that's awesome.
So instead of supporting your daughter and your new grandson in a blizzard, you're going to fly to Texas to party with your son. Cool.
What's he going to do? What's he going to do with the kid? Where they
bring her food. It's snowing.
Listen. Where they left the kid, that's where the kid is. You put that kid down, the kid don't move. He's right there.
To be fair, the only thing I can do with a newborn is I could pick up food for the rest of the family. I mean, that's my only job.
Hey, you got nipples.
I mean, I can't do anything else. So, no,
what are you going to wear?
Well, it's indoors.
No, are you going to wear a Chargers jersey? Or are you going to wear, what?
Well, I don't have a Chargers jersey, but I'm going to go as a Chargers fan, yes, to support my son.
You identify as a Chargers fan?
I identify as a Chargers fan, even though I'm definitely not a Chargers fan.
I think they have enough.
Yeah, I am definitely not a Chargers fan.
Can you name anyone that even plays for the Chargers?
Man up, Sosnoff. No, wait a minute, man up.
I mean, the one thing I will say is I went to the Chargers-Packers game, not this season, but last season in Green Bay.
How did you identify then? What kind of fan were you?
I wasn't a Green Bay fan, so I had to go as a Charger fan that time too. And it was fun. The problem with Charger fans is they don't really travel very well. Like, there's not a lot of Charger fans.
Well, because that team's been all over the place. Like, it's hard to. I don't know.
And it's three quarters of the way across the U.S. I mean,
yeah,
it's a long flight.
Yeah, I got it. I know.
How did you get can I ask how much your tickets, how much are tickets for like a playoff game?
I honestly, Cole was going to go with his girlfriend and she has to work.
Isn't that his fiance now?
His fiance. He was going with her.
I was like, did she get demoted? She gets sent back down to the minors.
He was going with her.
No, put a ring on it. She's a fiance now.
That's so good.
Yeah, so he was going with her, and she has to work, so she can't go.
You were the best available.
I was the next up. I got the call.
Well, he doesn't have friends.
I don't know if that's an uptick or a downtick or I don't know what that is, but I would take it.
Well, it's a chance. I don't get to see him that often, so it's a chance to hang out with him,
mingle. Yeah.
I just hope he can. I'm not worried about me getting out of Chicago. I'm worried about him getting out of LA.
Oh well, yeah, of course.
Yeah, that's
I'm worried about him getting flights out of LA.
Yeah,
sure.
Yeah.
Well, if he gets into his car right now and starts driving.
Well, I mean, he's he's at ground zero basically in Santa Monica. I mean, he couldn't be more than, half a mile from everything. So, fingers crossed.
Yeah.
It's so funny. I asked you this the other day, last week, when this was all going on. You go, yeah, sure, he's fine, no problem. Now he's a half a mile away.
Well, I didn't think it was going to spread the way. I mean, I don't think anybody thought it was going to spread. I'm still trying to figure out how it got over the Pacific Coast Highway. It's crazy.
Sure. Yeah.
Yeah, I don't. I thought. I don't even know how it got to West Hollywood. I can't figure out any of this stuff.
Well, if you see those videos with 100-mile-per-hour winds, it's basically like a fire hurricane. So, it's just crazy.
Well,
the pictures are just, you can't watch them.
Yeah, they're horrific. He told me they went somewhere last night down the coast to a hotel because the air quality was so bad in Santa Monica.
Sure, yeah.
They couldn't go outside, couldn't walk the dog, nothing. So,
I don't mean to change subjects, get it back to a little bit of a lighter subject here. I've got some Taiwanese sources here that said you made some Notre Dame bets with them, but they can't remember what they were. But they're Irish, and for sure they bet on Notre Dame.
Oh no,
remember.
I was full rooting for Notre Dame last night, so I don't think
you're. See, that's what they said. They said that you would say that. Yeah,
I was all in on Notre Dame last night.
I mean, these people have Irish last names and stuff like that.
Yeah, well, listen.
To be fair, my last name is Irish. What?
Yeah, right. Her last name is Irish.
What are we doing?
My wife is Irish, and she was rooting for Penn State.
No way.
Yeah.
Good for her.
I like Notre Dame. I'm a Marcus Freeman fan.
Yeah.
All right. Well, what did you get up to, Bat? Were you?
You know what? I didn't get a chance to watch much of the game last night. I had hockey. We had hockey at 8:50 puck drop. Too late for these kids.
That sucks.
It was 11:15, and we still hadn't put the pads away and stuff like that. It was a late night. But I'm back,
kids.
Ready to go. Yep. Good win, by the way. 5-2.
Well, Vinny will be happy because we're getting some fresh pow today.
Yeah, Vinny's going to be happy, which means that Daddy's not going to be happy because he's going to want Daddy to go travel a couple hours to bring him to some molehill. I mean, it's like nothing.
That is the worst. That is the worst waste of time driving up there. How far are you from Wilmot?
About an hour, 50 minutes to an hour.
That's brutal.
Yeah. Well, it's the things you do. You know what I mean?
I'm telling you.
It's a life decision, Sadnov.
You flex this into going to the Mars Cheese Castle, and you bring your girl back some zucchini bread.
I pass right by it. Do you really want zucchini bread? I'd be happy to get it for you.
Yay!
That place.
Want zucchini bread?
That place is so freaking gross.
You're so friggin' gross.
I can't.
The Mars Cheese Castle lives up to the hype. It's really nice in there. You can actually have lunch in there. They have a really nice beer cheese soup. Recommend that. That's pretty good. And some pretzels. But they all have handmade bakery items. They have sausages. They have cheeses. It's a wonderful experience for the entire family. 2 thumbs up. Vanetta recommends.
That place.
I go there and get some beer. I mean, not there, but that's all you can get.
Yeah, you get New Glarus. You can get some Glarus spotted cow beer there.
Yep.
You get Racine Kringles there. You can get the apple pie in a paper bag from the Elegant Farmer in McGuanago instead of having to drive to McGuanago or having to spell McGuanago.
I can't even say McGuanago.
Yeah. Oh, bring me back an Elegant Farmer, the little one, the little 8-inch apple pie in a bag. Yeah.
You got
I'll take 14 of them.
If we go, I'll make a trip.
I'm just kidding. Anyway, that's good. Well, you guys are getting out of the house more than I do. So that's very exciting for you. And I had no idea you were going to Texas, Tom. That's crazy.
Yeah, it was kind of a last minute.
She bailed last minute, and then he got the call last minute. So,
it'll be fun. I'm looking forward to it. Yeah, I'm going out.
Have you been to that stadium?
No.
I don't know what they call it. Okay.
ERC or something like that. I can't remember what.
Okay.
But we've done 2 shows right down the street from there, so we've passed by it a couple times, but I've never been in there.
Sure. Yeah, I know you go to Houston a lot. Yeah, for work, but.
Yeah. So yesterday I was in the coffee shop. We had a special appearance by Nikki Batista.
Yeah, it's on Bat's Twitter, and Scott Sheridan was there too.
Oh yeah, Scott was there. Well, he was working. We hired him to clean up for the night before.
Yes, you guys had another bromance without me. It's okay. I don't care. Little.
You're not gonna drive into the city on your day off. You don't even.
I'd like to be asked.
You work here.
You can meet me there tonight. Tonight's comedy night.
Oh, sweet.
Tom, are you doing a tight 5? Are you doing a set, Tom?
What?
Are you the MC?
I'm not.
I would pay so much money to have you just do an open mic of comedy because you think you're hilarious.
I'd like to see Saz be the MC. He might say something like, yeah, I listened to this guy's set before you guys came in here. I don't think he's very good, but listen, enjoy him. Here's Mike. There, they send him out there.
No, they got a couple of headliners tonight. It's going to be good.
Beautiful.
Headliners. Oh, you play Zanies one time and you're a headliner. Get out of here. You're like, oh, I opened in Schaumburg once. Now I'm a headliner. Get out of here, man.
He opened for Burt Bacharach in the 80s. Yeah.
Yeah, whatever. Get out of here, headliners. It's not like Bill
good.
Burr is going to be at your coffee shop like this afternoon or like
you
know
never
what I'm saying?
know.
Like,
You never know.
No, I do know.
Are you going to visit the Coney Island dog or something like that while you're in Houston, Saz? My Taiwanese sources want to know.
No, I don't know.
The James Coney Island Houston dog. Sorry.
What?
The Coney Island
for us.
I didn't even know there was a Coney Island Houston dog, but no, I don't know if we have time to go to anywhere but the stadium.
Oh, I am interested.
James wants you to go to the Coney Island dog. I didn't say
he wants me to go to the Coney Island dog. Yeah, I don't know where that is.
Mm-hmm.
I am interested in the stadium food in Texas, like what they are, bringing together or, bringing to the table.
Well, what I can tell you is it cannot be worse than Soldier Field, and it cannot be worse than Lambeau. And those are the 2 most recent stadiums I've been to, so it has to be better than those 2 places.
All right, we will get live reporting from Tom, boots on the ground. Hopefully they have good stadium food in Texas.
I hope so.
I hope so too.
Pictures or it didn't happen.
Yeah, you should post more to your Instagram.
Maybe I will tomorrow. I got to see what's going on. I don't know.
Post a pic of you like in your cute bedazzled jersey, being like, "Ooh, hello, Texas. This ain't Texas," and then you put the Beyonce song on there, and then make the duck face.
It's gonna be a long Friday.
Anyway, hey, we got a great show for you today. I know it's weird because we weren't here yesterday, but we are back today, and we got a great show for you today at the top of the 8 o'clock hour. Finally, after seemingly 4 weeks of vacation, Jamal is back, and he's this week in stocks, the first one of the new year. He's going to talk about New Year jitters. I'm all joking aside. I love this segment, and Jamal will be back to take the reins. That's at 8 o'clock, 8:40. We got Fast Market, 10 trades, the viewer submitted trades. The Tom and Bat are going to see how many they can do. That's at 8:40. And then 9 o'clock for the first installment of a new series, part of our Bad Taste segment, Julia's going to be in talking about the history and potential market impact of quantum computers. No one else knows what the hell this means in our company except for Julia. So it's actually going to be part of a series, which I'm actually very interested in. I don't know a whole lot about the subject, but I do want to learn more. And Julia's going to...
We got a lot of requests from viewers to just begin to cover some, because a lot of people here, there's a bunch of different quantum computing stocks that are trading, that have been like kind of high flyers the last couple of months. They got killed towards the end of last week. They just got destroyed, lost 35% of their value.
Sure. Well, it was actually, earlier this week on comments from Jensen Hong at CES, but yes.
Right. But, so they've been very volatile. They've been all over the place. And a lot of people that are trading, quantum computing stocks and stuff like that aren't really that familiar with the topic or what they can do. And I also care about it from a digital asset perspective, specifically Bitcoin, which is kind of like a math equation. And, the question is, how fast can quantum computing solve some of the Bitcoin the Bitcoin equations to mine Bitcoin and things like that. And so it's actually really interesting. And I know we're 10 years away and all that kind of stuff, but Julia has some experience in quantum physics. And so she's going to do a 2 or 3 part series.
Some experience. She's a master's degree in quantum. Some experience. Like some experience is like, oh, I watched a YouTube video. No, she's a master's degree in like quantum physics. Put some respect on her name.
I have some experience.
Yeah.
I have some. I've watched one.
Put some respect on Julia's name.
Yes.
Trust me, I do respect what she does.
Yeah. Okay. Anyway, but that's going to be, like I said, part of a new series. We are very much looking forward to that, and not to tease too much, but we will also be having some additional, content creators coming into the fold from the Bad Taste side of Tasty, but I'm keeping that under wraps. I've already said too much. But then also today, you're going to get live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade and taking your calls today. Again, not now. It's around 9:30. But if you have questions about the brokerage side of the business, we would love to hear from you. Scott will be in at 9:30 to take your calls. So that's the run of show. Do you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Jump in.
In today's headline. This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's already January the 10th. I hope you've been able to keep your resolution this far. If not, don't worry about it. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
So we're getting a jobs report today in like 7 minutes, and it could present a mixed view of the labor market. Economists expect the Bureau of Labor Statistics to report a gain of 155,000 in non-farm payrolls in December, a step down from the surprising 227,000 increase in November. But details of the report will be key. Wall Street is expecting that the number could come in even a bit weaker. What is everything pricing in? Like, what's the expected move? Maybe, I don't know.
That's a good question. The expected move this morning.
Remember when we looked at ES on Wednesday, Sadloff, before we went to our break here.
The 0 day is about $55.
Okay. Oh, okay.
Which is
maybe a little bit less, but yes.
Which is a pretty big expected move, and
we talked about that on Wednesday. How it was much larger than in previous times. But maybe because of the extra day off, we'll see how they open here this morning. If they kind of collapse volatility real quickly, we'll see. Volatility right now is up 23 cents to 18.20.
Fed officials are worried about the inflationary impacts from Trump's policy. That's according to the latest Fed minutes that got released. Fed Reserve officials at their December meeting expressed concern about inflation, the potential impact that President-elect Donald Trump's policies could have. I want to talk about Treasury yields because they've been all over the place this week, and what you're doing as we end the weekend bonds.
Bonds back under 112, so no,
Yeah,
111.29.
I bought some this morning at 111.27 right here.
111.27. You are correct. The low is 111.26. You're genius.
I bought them at 111.27. I offered them at 03, and they traded there, but I did not get filled. So I am going to see if I get filled, because all I was betting on is that they could go back to even, unchanged by the time the number came out. So I'm going to wait until 7:29, and if I don't get filled, then I will re-enter the order about a point higher. You know, like in other words, I'll take my profits up for the next 4 minutes if I can get them, and if not, I will cancel the order and wait till the number comes out and hope it's, because the expected move is like a point.
Okay, that's a plan.
So I will wait, and hopefully I get a
Everybody
point
got
out
a
of it.
plan till they get punched in the mouth. Like Tyson.
So I'm betting that they're going to trade unchanged between now and 7:29 and in 30 seconds before the number. And if not, I will. This is an old trader trick. And if not, I will cancel the order and see what happens after the opening.
An old trader trick, like putting Vicks Vapor Rub on your feet.
Call it whatever you like.
You got to put the socks on though. But yes,
It works. It works. Of course, you got to put the socks on. It works.
Hey, just real fast before the number comes out, energy stocks take an early lead in 2025 as natural gas outshines. They have outperformed the broader market just to start the year, with a grain of salt. It's only the 10th day of the year. But the S&P 500 energy sector, XLE, is up 2.8% this year to date versus the broader indexes, only 0.6% rise. I don't know if you have any particular plays that you like right now in energy,
crude's up almost $3 today, which is a huge move.
That's a massive move.
Yeah. Crude oil up almost 4%. Tom is right. That's the big.
I hope someone didn't get blown out. What happened in crude oil? Oh my goodness.
Nat gas is also up 4% too, around 13 cents. So they're both moving in tandem. Okay. $76 and change, almost 77. In oil. That's a number that we haven't seen since September. So
is volatility expanding in oil?
IB rank of 18 right now. We'll have to see after we open.
Okay, well, we'll see. We'll see how that goes.
Even the S&Ps are down 11. I know you got about 2.5 minutes, but even the S&Ps are down 11, and bonds are down around 6 ticks or so, right at 111.30, just to let everybody know.
Gold seems to be holding steady after a 3-day gain with U.S. payrolls in focus. Let's talk about gold before the number comes out. What are you doing there?
I don't think
up 12.
Yeah, I don't think gold will. I don't think the number will influence. I don't think it'll impact gold very much.
You don't know.
Gold is up $12.60. Dollar is pretty much unchanged. Euro is up small.
Okay. Bitcoin, let's talk about that. Bitcoin briefly slips to 91,000 level as inflation worries return. What are we doing in crypto to finish the week?
Well, it actually is up 3,000. It's 95 again.
Well, that's why I said briefly slips.
It wasn't so briefly. It was trading around 92 for what felt like almost a full day.
Yeah, I know.
Yesterday. So it was
I can't do anything right, so it's fine. I know. Thank you, Bat.
Yes, you can. I'm correcting him. You're good.
What are you guys doing in crypto and Coinbase?
Nothing. They're unchanged today.
Okay.
Yeah, Coin's unchanged.
By the number?
Unchanged.
Huh?
Say again.
Is Bitcoin going to be impacted by the jobs number today?
No.
Okay.
No.
All right. I was just curious.
Coin's actually up $1, 261.
Okay. Well, I was just going to pause here. I didn't know if I should go to the next story. We should just like talk amongst ourselves because it's 7:29 and 30 seconds. Tom, what are you doing with your bonds?
One of the best things that we like to do here is when you're talking is
I'm going to
interrupt you
cancel
and
my
talk about
bond
the number.
offer. I'm going to cancel my bond offer in like about 2 seconds if I don't get filled. Maybe 10 seconds if I don't get filled. I've been waiting.
They just traded 112 again.
Yeah, I've been waiting. Now I cancel. Sorry, bonds. I tried.
You did try.
Now I put it in way above the market.
Okay.
Mm-hmm. Even the S&Ps, there we go, down 40, Sadna, 40, 44. Bond flirting with 111 instead of 112 where they were just a moment ago. Even the S&Ps down 60 right now. That's a big move in the even the S&Ps. NASDAQ down 260, 70 and change. Russell down 46. They don't like the numbers, Sadnov. A Dow down 380. Volatility only up by 3 cents. I don't get that, but it is trading 1870. Bonds under 111, 110.29. Oil held its rally up $2.80. Even the S&P down 55. Sadnov fade the first move in the equity markets.
John, you can go full screen.
I don't know. I'm gonna try to buy some bonds here at 30.
Volatility up 58 cents now, caught up to the market.
I got a small fill at 29, but missed the 30s. Yeah, this is not, well, what are they down now? 44?
Mm-hmm.
They no like.
Nope. Close all watertight doors, fade the first move.
Oh, I'm not going to fade the first move. No. It probably, if you fade every first move, it's worked for the last 15 years, but I'm not
That's
fading
correct.
it.
That's correct. That's correct.
I'm not fading it.
Okay.
Good to go, Vanetta.
All right, we will see what happens. Hey, California's insurance is in crisis, and the solution's going to cost homeowners a ton as the devastation continues to unfold in California. Many homeowners actually got a surprise at the start of the year when their insurance policy that they'd held, one couple had their house for 75 years or something in that Pacific Palisades, and the insurance company canceled their insurance earlier this year, and they were just like, what the hell? What do we do? How do we move forward? Because it's not just California, it's in other places too, looking at you, Florida. But how do we reconcile the whole, I don't know, how broken our insurance system is?
I don't know.
Does anybody have this answer?
I don't know how I'm not so sure the insurance. I don't know that there's an easy solution because I think that insurance wasn't necessarily designed, conceptually the way insurance works, it's a very difficult, the model doesn't work that well when you're talking about 5, 10, 15, and $20 million and the replacement costs for that kind of stuff. The model it's a very different model. But they have this, obviously it's a crisis in California. It's a crisis in Florida. This is it's not just California. It's, places where there's hurricanes, where there's.
Sure. Yeah, I that's what I said in the lead up to this.
Yeah, no, I understand.
Yeah.
I don't know how unless they figure out how to do it through some kind of backing of, some kind of maybe it becomes more universal. Maybe there's a government agency that deals with it because, you can't take out loans without some kind of assurance or insurance. So in case, there's a default or a natural disaster, whatever, I'm not sure how they're going to deal with this in different places around the country. I really don't know how.
It's a issue.
It's an issue.
And imagine you're that couple that's been paying into this system for 75 years, that you've owned your house or whatever. And then all of a sudden at the last possible second, they kick you off and then you've lost everything. Like,
yeah, I mean, I don't know how true the stories are, but I've read numerous articles on how, these companies over the last year have slowly taken back, not allowing people to get insurance or charging, $500,000 a year for insurance on some of these. I mean, granted, big homes and stuff like that, but still, it makes it so economically unfeasible for these people. It's horrible.
It is
because you're
difficult.
locked into your, like, what? It's not like you can just go find another, doctor.
Right.
Like health. Like, it's your home. Like you can't just not live there. You're like, okay, well, I guess I won't live here. Like,
Yeah.
I'm going to tell you right
I don't
now,
know.
it's difficult to get homeowners insurance in Chicago, which doesn't make any sense.
Well, for you, because your credit is terrible.
It's really difficult to get homeowners insurance everywhere now. And because the model is broken.
Yeah.
Sure.
And these insurance companies, they really don't care. Like you can.
Yeah, I know. Now people are tweeting. They're like, now who's the CEO? And I'm like, no.
Yeah.
I mean, it's not like the numbers they throw out there are insane. They're insane. And, what are people going to pay in California now? Even if they can rebuild Pacific Palisades, which I don't even know how they rebuild Pacific Palisades or Malibu or building permits and I don't know how they're going to do this, but they will.
Right.
Yeah.
Because the area is so spectacular, but
they've already estimated it's $135 billion of just economic impact for the area, and the numbers just continue to keep growing.
Yeah, but who's going to put, how does anybody sell the properties? I mean, obviously speculators will come in, they'll buy the property because it's worth something. It looks over the Pacific Ocean. It's spectacular, that whole area. But the commitment to put capital in there to build stuff when who's going to pay $25 million for a house now that can burn down in 2 seconds? I don't know.
Yeah.
I don't know.
Yeah.
I don't know how
All
they
right,
deal
well,
with it.
Hey, the World Economic Forum released their biannual survey on what employers worldwide expect their businesses to look like in the future, and much of the attention is on generative AI. A majority of employers, 77%, expect to help train their existing staff to work with AI, but 44% of employers, again, this is globally, say they expect to reduce the number of staff they employ as AI automates more tasks on the job. This was a survey of 1,000 employers worldwide, covering 14 million workers in 22 different industry clusters. That was the methodology. What are your thoughts on this?
I think that if you looked at today's current job structure, the answer would be yes. I would agree. I would probably think that, I don't know if it's 41% of employers worldwide say they'll reduce staff. I think that if you ask that question with or without AI, that would be a reasonable answer due to technological advances, no matter what. The difference is that AI will allow these companies to grow, and therefore I'm not so sure that it's a net negative number at all.
Okay. But speaking about this, Microsoft is confirming that performance-based job cuts across departments are going to be carried out soon. When people are not performing, we take the appropriate action. Yikes. What are you doing in Microsoft?
No position.
Okay.
Microsoft MSFT has had an IV rank of 49, which is very good. It does have earnings coming January, looks like January 29th. So at the end of the month, about 19 days away. Microsoft's been a market leader that's been going sideways as of late.
AMD stock is slumping after a double downgrade on AI revenue concerns. AMD shares fell Wednesday before we had our little break as analysts at HSBC offered their downgrade. The firm cut its forecast for AMD's AI chip revenue. Let's talk chip stocks to end the week. NVIDIA, AMD, what have you.
They're all.
So I don't know if I think my son took you down Wednesday in AMD, didn't he?
He tried to, but I didn't listen to him. Thank God.
Ha! You're smart. AMD down around $4 or so. 118 and change. That'll be a new low for AMD if it stays there this morning. Nvidia 136 and change, also down around 3.5 or $4. Both have a okay Ivy rank. Nvidia's 22, AMD is 68. AMD has earnings coming early February, and Nvidia has it in the middle of February.
Supreme Court justices today are going to hear oral arguments on the challenge to the TikTok ban. It is unclear when the court will hand down a decision, and if China's ByteDance continues to refuse to divest TikTok to an American company, it will face a complete ban nationwide. That's January 19th. Again, I am not the litigant in this case, Tom. I am just a reporter. I am just telling you that the Supreme Court's hearing arguments today, but the ban still remains imminent.
I think one of the greatest dangers to the U.S. economy, especially small businesses, will be a TikTok ban. The importance of TikTok on small business growth, marketing, and just in the whole economic chain depends so much. TikTok is such a big portion of that a TikTok ban would be the worst thing possible for this economy. I mean, I can't even imagine anything's worse than a TikTok ban for small businesses.
I'm sorry, have you ever bought anything from a small business on TikTok?
Well, I've definitely gone to places that I've seen on TikTok.
Okay.
No, but my son has, and they come straight from China, and they're usually
No. I don't buy from the TikTok store, but I mean, I've gone to a million restaurants that I've seen for the first time on TikTok for sure.
Right, and there's no other social media company that operates in America that also could show businesses of women eating in their cars.
That is correct. That is correct. And not only that, food reviews on TikTok are absolutely spectacular.
All right. Hey, keep it moving.
A TikTok ban would be disastrous for America. Disastrous.
Make America TikTok again.
Hey, I'm skipping a story here, John.
I think Trump doesn't want a TikTok ban. His administration doesn't want it.
Again, it's a law. It's not a whim. It's not I can't stress this enough. It's not an executive order. It's not a whim.
I know. I understand.
It's bipartisan law and Trump was the one who initiated banning TikTok first in the first place in his.
It's a bad idea. It's a bad idea.
Okay, but all I'm telling you is that it is a law that has been passed. So
laws could be changed.
Laws could be changed. This is stupid.
Well, it takes an act of Congress, though. Then I'm just trying to hold your hand when I tell you this.
Congress.
TikTok is the best app.
eBay.
It's the best app I've ever been on. It is the best.
Jesus. eBay added $3 billion in market value in one day, thanks to Facebook. Because of an EU regulation, eBay's stock price rose 10% on Wednesday. So good job there. John, I skipped a story. I'm on the eBay story. What are you doing in eBay? And let's talk Meta.
Nothing. It's not really tradable.
Okay.
eBay down $1.68 and change. Even the S&P down 48.
What about Meta?
Meta, let's take a look. I actually want to kind of boycott Facebook, even though I don't have a Facebook account. Meta down $7, $6 or $7. Meta coming off of its highs of around 630 to about 605, where it is right now.
I'm skipping another story here, John. JCPenney is merging with the owner of Forever 21, and a new king of the mall is born. I don't know. JCPenney is merging with a company that owns a number of once other bankrupt clothing stores, including Forever 21 and Brooks Brothers, to form a new ineffective company.
Yeah.
The historic chain that's been around for over 100 years filed for bankruptcy at the height of the pandemic. JCPenney did, but they're still around, and they're trying to form something new. So, good job there.
I thought they were already out of business.
No, they're still JCPenney's.
I did not know that.
Macy's also closing more stores. You can trade Macy's. You can't trade pennies anymore, but you can trade Macy's. They're closing another 66 stores.
Yeah, Macy's wrapped around $16. Looks unchanged, sideways on the low end of its range.
Yeah. All right. Here's something nice. Airbnb is offering free housing to LA wildfire victims. Residents forced to evacuate, which now number in the 180,000 people are under an evacuation order. You can call 211 to be connected to a free place to stay. Airbnb does do this in locations that are facing unrest or natural disasters. ABNB, we just haven't talked about the stock in a while, so.
ABNB, we have not talked about it in quite some time.
We don't have a position.
$32. It looks like it's up around $1. One of the few stocks that are up right now. Nasdaq down 234.
I mean, I know your wife is banned, but this is a nice thing that they're doing.
It is a nice thing that they're doing. We will take that under advisement.
Okay. AT&T says they will now credit you for outages and long customer service wait times. If you remember, not that long ago, AT&T's service just went out for over 12 hours one day, and people couldn't even call 911. They couldn't get work done or whatever. And AT&T's now you know what? Our bad. We're going to give you $5. And they did. They just credited people $5. And they're like, be so for real. You blew up my day. You blew up my business. And you're giving me $5? Get out of here. So now AT&T says they will offer better credits for outages. So could
$6.
Yeah, I know. Amazon is expressing interest in MLB and UFC rights in the United States. As more tech companies get into streaming, they obviously see how important sports are to the platforms. Netflix, even Apple carries some MLB games now, and Amazon already carrying Thursday Night Football. They want more baseball, and they want UFC. Netflix just started with Raw, WWE Raw, this week. What are your thoughts on UFC on Amazon?
I guess I don't really care. I don't watch a lot of UFC, so.
Okay. Or baseball. You gotta watch. What if you get to watch the Cubbies on MLB?
I mean, we're sponsors of the Cubs, so they're on the Marquee Network. We don't really have a lot of flexibility with that. So
that's true.
I care about the Marquee Network, which I'm not sure how many people get that, but that's where we're.
That's true.
That's where we're.
This is interesting. The National Hockey League announced they're going to hold 2 outdoor games in Florida next year. I'm sorry, girl, what? Hockey has seen real growth in the state over the last 3 decades, and the events are expected to attract 100,000 plans. They seem light on the details. One of the games will be in Tampa Bay, and the other will be at where the Marlins play. So one of them has a roof, and they're like, what we're going to do is we're going to keep a roof on to kind of keep it cold. And then right before the puck drops, we're going to open the roof. And then another, we're going to build like a bubble over the eye. This doesn't seem well thought out to me. And by 2026, I guarantee you it'll be 80 degrees in January in Florida. But what do I know?
Everything's going to Florida, Vanetta. You better jump on board. It's retractable roof. You're going to be fine. It was 40 degrees there just a couple of days ago.
It's too hot for hockey. Okay. I get to keep it moving. I don't want to step on Jamal's time. But finally today, because it's Friday, you know it, you love it. It's a little segment I like to call Will Tom Eat It? So I scour the internet for food for fat traders. And we went down a little bit down memory lane this week as we were talking about iconic Chicago prime rib restaurants and other historic things. But I found for you, this guy says he has found the best breaded steak sandwich in the Chicagoland area, and it is not Rico Bene's. Watch.
Uh-oh. This is going to be egregious.
I'm not buying this.
Here I come. So we're eating a breaded steak sandwich today, baby. Out in Roselle, have to check out this cute little Italian spot called Sonny's Italian Kitchen.
Where's Roselle?
Wow. So this big old boy is their breaded steak sandwich with hot jardiniere. I love how this looks and feels. The bread is toasted and isn't a soggy piece of shit like all the other ones.
Like them sloppy.
Oh. Damn, girl.
I love you, bitch.
The back seems to be juicier, so let's hit the back real quick.
Damn.
Oh, it's hitting. It's hitting. I'm telling you right now, this is better than Riccobetti's.
What did you say?
Immediate hit of the breaded steak on this bad boy. Seasoned fantastic, not dry inside, and it still packs a hell of a crunch. It's not sogged up. The bread is fantastic. It's toasted, it's buttery, it's delicious. Then you get a hit of the hot jardinere. Nothing special, but still doing its job. Obviously, the cheese.
See, how would you want to get rid of?
Anyway,
And then
thank you,
lastly, you get a hit of
John.
the red sauce.
How do you want to get rid of like food reviews in cars? They're so good. I mean, listen.
I pulled this video from.
You know what? I didn't see his breast, so I'm not sure.
I'm
I
not
pulled
sure.
This video from Instagram. I will send you the receipts. This video.
I
is
don't.
not
I
from
don't know
TikTok.
where Roselle, Illinois is. To tell you the
There's
truth,
a-
It's by O'Hare.
Where is it?
O'Hare. You pass it on the.
Oh.
It's just west of O'Hare.
Okay. Well, whatever. I mean, I'm sure that sandwich is good, but it's a copycat, so it's like you got to go to the original.
You pass the exit on the I-90, Saz.
Okay, I just never been there, but
You go on the way to the airport tomorrow. Hey, that's been my time. Bat, what's coming up next?
Bring a steak sandwich to your son in Houston. It'd be beautiful. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll be back in 90 seconds. Even the S&P down 56. 56.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
this is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
that is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your
There you go.
finger in all of our lunches.
Now complain about something.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a
in order to
blank
see it later?
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got,
we didn't, wait a minute. So
when I got in this business,
we used to open it at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
no matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. Before we do it, I'm going to quickly go over this time. I know we got a lot of questions. We got Jamal coming in for This Week in Stock. But even the S&Ps, big move lower after the job number, down 51. NASDAQ down 228 and change. Even the S&Ps are about $20 off of their lows, maybe a little bit less. Russell down 41, Dow down 327. The Russell's the weakest of the group, followed by the NASDAQ, and then even the S&Ps and the Dow. Volatility up 64 cents. Got as high as 1890, 1860 is where it is now. You can see volatility elevated over the last couple of days here. Bonds down big, under 111 to 110.28 on the low, 111.01. That's almost a 1% move, which is about the expected move.
Yeah.
Even the S&Ps, $50 some odd, about the expected move.
I'm sorry to interrupt you, but the expected move in the bonds was 1 point. They moved a point. The expected move in the S&Ps, just how good the markets are, was 55.
Yep.
They moved 54.
Yep. Another big mover today, oil up $3. That's a 4% move. That's actually the biggest percentage move across the board. Bitcoin showing up 1,900. That's the Bitcoin futures. They're up trading 94,000. They trade down around 92 and change, 92,350 as you see here. Gold up $20 on the high end of its range and breaking out from that little kind of sideways action that it has had over the last 5 or 6 days. So enough. That's all I got for now. We'll get to Jamal. Net gas up 5%. That's a 20-cent move in net gas, but I don't think a lot of people trade net gas from the retail side.
I don't think a lot of people trade net gas either. But anyway, Tom Sosnoff.
And currencies are basically unchanged. They were a little bit stronger.
I'm calling this the low in bonds for the 13th or 14th time, just so you know.
For all of 2025, that is correct.
You don't get 13 or 14 different opportunities to call the low. Unless you're doing your own show like we are. So that's the cool thing. But I just wanted to be on the record. Anyway, it's late. We're running late. Let's go. It's 7:58 Central Time. We are Chicago based. If you're not familiar with Tasty or you're new to Tasty, thanks for joining us. Yesterday was a holiday. Today is Friday, January 10th. Let's do it. This person writes, and we don't put the names of people on these. These come in from emails all over. Like we get literally 5,000 to 7,000 emails a day at this firm. So they're from all over the place. Yep. I have an account where I hold QQQ. When the market corrects 5 to 10%, I will sell those shares and replace them with TQQQ, which I believe is a triple leverage long. Is that what it is? I don't trade it. I think it's
It is a triple leverage long. So
it's a triple leverage long. Okay.
Yep.
So then once the market reverses, I will go back to QQQ. What do you think of this?
I absolutely love it, man. Tripling up to catch up. I mean, this is the way to go. Go big or go home. I mean, come on. Listen, you're holding a product that's down 5 or 10%. You're telling me you're going to get out of that and then kind of triple leverage yourself to the upside. I get what you're trying to do: buy low, sell high, kind of thing, or buy or sell low, buy lower, assuming that it's going to go higher. There's a lot of assumptions here. I don't think this is a viable trading strategy.
I mean, it's not something we would do, but it's worked for the last 15 years. So congratulations. It has been every time the market
Well, we've had
has
how many 10% corrections last year? 0.
Oh yeah,
how many
yeah,
5% corrections?
Yeah,
maybe
we haven't had a lot
2.
of 5 or 10% corrections, but whenever corrections we've had over the last 15 years, if you had bought the triple leveraged product somewhere near the bottom, which is obviously really hard to do.
If you bought anything somewhere near the bottom, sure.
Yeah, of course. I mean, listen, if this is working for you, keep doing it till it doesn't work. That's what I say. We would never do this, but if it's working for you, keep doing it till it doesn't work. Let's go to the next slide. A while back, I was watching you guys, and I seem to remember you saying that between 3:30 and 4 p.m. Eastern time, the last 30 minutes of the market, that the market goes up 80% of the time. Am I remembering that correctly? And if so, would it make sense to sell a 0 DTE out of the money put every day near the close?
Well, I'm going to piggyback Tom's answer from a moment ago. I mean, if you've done this every day for the last umpteenth year, it's worked out fine. I don't remember the segment, Saz. Do you remember? I remember it was bullish. I don't remember if it was 8%.
Yes, I'm going to clear this up a little bit. We did do a segment on this topic. However, what we said was when the market is up, the last half hour has a high likelihood, 75 to 80% of the time, I think it was 80% of the time, it closes up. It wasn't on any day. It was when the market was up, the market tends to close up. When the market's down, it closes down a less percent of the time. I think it was like 60%. So what the study was showing, not on any random day, it just said when the market's already up, it closes up 80% of the time. When the market's down, it closes down only 60% of the time because we've been in a bull market. That was what this study was. It didn't say that the market rallies 80% of the time every day at the end of the day.
It makes more sense. Thank you.
Yes, that is the clarification. But, I mean, I have no problem selling out of the money put every day near the close. So far, it's worked pretty good.
Yes, yes, it has.
Yeah, I wouldn't do it either. This is the second thing. I wouldn't do it, but that's up to you. Let's go next.
But it has worked in the past. Yeah, sure.
I just began trading last year. On a scale of 1 to 10, how would you rate last year for traders? I'm trying to gauge what a good market looks like.
And you know what? This is a great question because I haven't really reflected on 2024. I kind of.
I will tell you what I want to hear what you say, and then I'll tell you what I said.
Sure. It seemed like any other year to me. Like to me, all the years seem to. They are what they are. I don't know. I thought it was an okay year for opportunity. I would have liked to have a little bit more two-way action.
All right, what's your number on a scale of 1 to 10?
Give it a 7.
Okay, I gave it a 6.
Okay.
Pretty close.
I didn't get in the way of some things, I didn't get in the way of bonds and stuff like that. So maybe.
Whatever. I said 6, Tony said 7. That's probably where it was. Let's go to the next slide.
Mm-hmm. Yeah.
Something I have noticed, but am unsure if it's a consistent thing, is that in the first few hours, the 0 DTE and the 1 DTE have an absolute decay, actual money that is very similar. As a percentage, the 0 DTE wins hands down. But wouldn't it be safer to sell the 1 DTE options and make the same amount of actual money? Or is this something just in the current market?
Man, I don't think there's much difference between a 0 day and a 1 day. I think it's equally as, if we have a big move one way or the other, you're going to have some struggles to do. I think it's 6 of one, half dozen of another. And if we're talking about SPX, because you don't have anything in here, it certainly doesn't make a difference because you have no stock problems with the 0 day at the close or intraday or anything like that. So I would say it's 6 of one, half dozen of another. If you do better in the 1 day, stay there. If you do better in the 0 day, stay there.
I'm going to agree with Tony here. I feel like if you like the 1 days, trade the 1 days. I totally agree with everything this person wrote, is that on a dollar basis, they're going to be about the same. On a percentage basis, the 0 day is going to be significantly greater because the premium is going to be less. 1 day has a lot more premium than the 0 day. But I don't know that it's probably a little, there's obviously less gamma. It's probably a little safe. I don't know if I like the term safer, but there's probably a little less movement in the 1 day, a little less. Whatever makes you more comfortable is the simple answer here. Sure, if you like the 1 day, you will make about the same amount of money. At the end of the day, that's if you're doing it in the morning, in the first few hours. At the end of the day, things definitely change.
For sure.
Let's go to the next slide. And this is the last one, Tony. How does a dividend affect me if I'm short a straddle in an underline?
It's not going to affect you. I mean, I don't want to. 99.9% of the time, I don't know what product you're trading. It's not going to affect you at all because the dividend is not going to be affected by a straddle, which is at the money, short call and put, because it's basically all premium. There's really no intrinsic value to any of those options. A dividend is only going to affect in the money call options. And even then, the dividend so close to it, the day of the dividend or the week of the dividend, it's all priced in already. So any effect it was going to have on the pricing of the options is already in the options. So for me, a straddle has, I'm going to say 0, but it's probably 99.99% no issue.
Yeah, I mean, if you put a straddle on the day before a dividend, I mean, other than the SPY where you can get caught like just on an expiration thing, if it's an equity, it's never going to come into play 99.9% of the time. If you put a straddle on a month before a stock goes ex-dividend and the call side goes deep in the money, you could have a dividend issue. But if you do it like right before, 0.
Agreed.
And just remember, like Tony said, the options are already adjusted for the dividend because it's something that's known. So there's no impact on something. If it's a known dividend, there's no impact to the option prices.
If you sell a straddle or buy a straddle the day before the dividend, and for all things being equal, volatility doesn't change, the stock price doesn't change, the next day that straddle is going to open, regardless of what the dividend is, at about the same price minus the daily decay.
Yep. All right, that's
Let's
it.
Let's take a quick 90-second break and come back. Even the S&P is down 47, but we got my friend Jamal back this week in stocks. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, oh, joy, this guy, This Week in Stocks, Jamal. Welcome home.
Oh, Tony, I appreciate that, man. I appreciate that. How you guys doing? What's happening? What's going on? Notre Dame's in the national championship? How about it, huh?
It's a good game last night. It was a good game.
You thought so? I thought it was kind of boring.
Are you
for a
talking
while
about
there.
the youth hockey game last night, Sadnov, where we won 5-2?
It wasn't like the first half was pretty boring, but it was they played hard. They just, I thought both teams played hard. They hit hard. It was good.
There were good things going on both sides. That's cool. Yeah, it was a pretty decent game. It was. I mean, they're in the
Really? I thought it was kind of a slop. I thought it was a sloppy game. I thought the Joliet Jaguars came out and were playing a little bit too rough for the Stars.
Did you guys prevail eventually?
5-2, we won. Thanks for asking, Jamal. Yes.
Yeah, okay, nice. Good stuff, man. Good stuff. How'd he do?
He played well. Not his best game. I got to give him, call it the way I see it.
What's going on for the game tonight? You got anything on the line?
Sadnov, what time you need us over?
I forgot the game was tonight. I'm supposed to go to this comedy event, but I kind of rather want to watch the football game. So,
don't you have TVs at the coffee shop?
No.
Maybe you can watch it on TikTok.
It's one of those type of coffee shops, huh? Wow, it's a real beatnik situation there.
Yeah.
Market's giving us something here, huh? I think there was like 1.2% expected on this jobs report today. We got about 1%, the most I've seen so far. I don't know what the range has been, but the year starting off kind of slow, but this is the first real day here. We got a little movement. Volatility's picking up. Are we at 20 yet in VIX?
Well, we made the highs for the year on the third day of the year, so yeah, that's all we care about.
Yeah,
I mean,
right?
We're basically unchanged. I mean, we're down 50 handles in the NASDAQ or 75 handles in the NASDAQ for the year. I mean, we haven't really gone anywhere.
Yeah.
VIX is 1888 at the moment.
Yeah, we'll see what kind of day we get here, man. But obviously, the big thing is been bonds. I know you guys touched on a little bit ago, or you've been talking about lows left and right. But yields, I always like to think. You guys think of it in terms of bonds. I like to think of it in terms of yields. I guess the number really means more to me when I see 10-year at 4.7 and climbing, and market seems to be having a big problem with it. Which is so crazy, right? Because the economy is good. I mean, we got a good jobs number, but the market didn't like it. So that's bringing more and more volatility. And looks like we're going to be able to sell a few more things here. I mean, last I looked, SPY IVR was in the mid-20s, closing in, if depending on the type of move we get here today, could be close to 30s. Dow is in the 30s as far as IVR. Qs is picking up there. So we're starting to get to a point where we're going to get some real volatility, mostly because of bonds. And you talk about, speaking of bonds, now they're saying we might get one rate cut this year. Remember how it was a year ago this time? They're talking 6, 7 rate cuts. Now we're talking one singular.
Well, that's because look at what the bonds are doing. I mean, that's what the market is making them say.
I mean, how are they even going to get a rate cut here?
I don't see it.
Yeah.
What next meeting is the end of this month, I think, January 29th.
I don't see it.
So,
I need the bonds. I need the bonds to close up on the day today. I think they're going to. I know that sounds crazy.
No, I don't think so. I think at some point, we're contrarians, right? I think at some point, and I think at some point soon, I think we're going to get, I don't know. What's funny? Like the whole tariffs thing, right? Like, I think a lot of that is priced in personally, but that's the other story here, right? And how much is there going to be any change with the Fed because of tariffs, because of the new administration coming in? Like, I think that's kind of what we're seeing here in the market move around. And you're seeing that move day to day with bonds and stuff too. But
I think the tariffs. I don't think the tariffs. I think the tariffs were just a campaign. Were just campaign rhetoric. I don't think the actual tariffs are going to be next to nothing. That's why Trump's creating all these smoke screens right now, like Greenland and Panama. It's all just a smoke screen to get people away from talking about tariffs. I think the tariffs are going to be minimal at best. And if he even does any, they'll be non-issues.
I think we've seen some moves on it, though, don't you think, in markets? I mean, look at dollar, right? Like, look at dollar, look at bonds. Don't you think there's been? I think it's kind of been. I don't know if priced in is the word, but we've seen some movement in markets based on it, which we get the opportunity to take advantage of. It's just hard to sell the dollar. I mean, the dollar 6 weeks in a row.
The dollar was it was pretty ugly earlier when that number first came out, and now everything's kind of it's
the euro's actually lower. Sosnoff, it made new lows after being up earlier today, so the dollar's
but
back
I mean
higher.
they've come back about 50% off their lows, right?
I wouldn't say just about.
Yeah, it looks like it. The Japanese yen and the euro and the British pound they came back about 50%.
Yep.
A few things coming up. We got PPI and CPI next week. We also got earnings starting to kick off next Friday, actually. Bank earnings are going to be kicking off, JP Morgan and the like. So, yeah, I mean, it's like we had a sleepy end of the year and things are starting to pick up real fast here. But what's your favorite trade you got on right now? Is it bonds? Is that what it is? You need bonds up by the end of the day? When you
say favorite trade, that's a little misleading. My worst trade is my long bond position by far, but it's also my favorite trade because it's the only one. It's the most risk I have on right now. So it's like it's my worst position. I guess it's my favorite trade. You know what I'm saying? I don't know.
No, I know exactly what you're saying. I got a couple of those myself. I know exactly what you mean. The other thing I had to mention, there's a TikTok Supreme Court hearing today, I believe it is. And if things go the wrong way, they could act on it by the 19th. Are you worried, Tom? Are you worried about this at all?
I am not, because there is no way the U.S. economy can handle a TikTok ban.
Sadnov, I mean, the economy was fine without TikTok. I mean, you really feel like the economy is what's driving our market? I mean, it's kind of a I don't know. I don't want to speak like you have spoken to me in the past, but kind of a stupid statement, wouldn't you say?
Yeah.
I'm going to stand by it. A TikTok ban is very bad for this economy, period.
That's what takes us down?
Yeah.
Okay. I didn't think so, but maybe.
Okay.
Maybe it is. Anyway, yeah, it's going to be good, man. We're going to get some, looks like some vol selling opportunities. You got to be careful out there, folks, because, who knows if this is the real move. Again, we've been moving around here in markets early on in the morning after this jobs number, but volatility is definitely picking up, that's for sure. I mean, we've been hanging above that 16 in VIX, of course, 1% in either direction. So we've been hanging around that for a little bit. Now we're a little bit above that, closing in on long-term averages. So we're gonna get some vol to sell.
Absolutely.
That's all I got, boys. That's all I got.
Well, Stadlook, quick, sweet, easy. Even the S&P is down 43. We're gonna take ourselves a quick little break, Stadlook. We will come back. We've got what are you trading here?
I'm adjusting some gold, silver, and natural gas positions just to get my deltas back in line because I don't want to have to deal with them after the equity markets open. So just a few commodity things. I've also scalped
Russell Nat Gas, and you scalped some bonds, correct?
And I scalped
you reminded me about that. I forgot. Oil and nat gas. What about those moves? About 4%.
Yeah, I didn't trade.
Decent-sized moves.
I haven't traded crude oil, but crude oil is the biggest mover on the board today. It's up 360, which is a huge move.
Oil trading 77.5. Yeah, no, it's a big move for sure. You take a look at it on the chart here, you can tell by just the candle how big of a move it is, well outside the expected move. You think volatility expands in there, Sadnov? Ivy rank is only 17. It's been upticking the last couple of days. Still, it's going to expand. I think oil becomes part of the trading repertoire today, so we'll see.
I mean, the good thing is we haven't been trading it because Ivy rank's so low, which has saved us some money here for sure.
Yeah, I haven't been trading either. I actually kind of forgot about it until you just said about commodities. I forgot, but yeah, this is a big move here that we've been seeing.
No, it's big. Yeah, it's
Most
big.
definitely.
I mean, everything else in the commodity world is kind of pretty small today. Except, I mean, obviously bonds and S&Ps, but they're both inside of the expected move. The difference in crude oil, just to put some context around it, let's take a quick look. I think on most days, the expected move in what is it in crude oil is?
I feel like 90 cents, maybe. I'm just guessing. I feel like I looked the other day. I thought expected move was usually like 80 to 90 cents. I feel.
I think you're right. Like the expected move. Yeah, the next 3-day expected move is $1. Yeah, you're right. One day is about 90 cents or a little less, and today it's moved $3.50. So we're talking basically almost 3 standard deviations.
Very good, sir. Let's take a quick 90-second break and come back. We got the opening bell immediately following these messages. We'll be back in 90 seconds with Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, the opening bell, Sadnov, and what an opening bell it's going to be. We've got about 2.5 minutes here. Even the S&P is down 44. Sounds like a lot, and it is, just about 0.75% move. But we are off of our lows by about 35 handles. We are definitely off of our highs by about 40-ish handles. So we're about mid-range, believe it or not, down 44 and change. Expected move for the opening was about 50 and change. We're right there at 44. NASDAQ down 194 off of its lows by about 110 points or so. Definitely off of its highs, too, by about 210 points or so. Let's just call that mid-range too. Russell down 40 is the weakest of the group. That's almost a 2% move to the market's 1% or less. The Dow down 245 and volatility up 56 cents, staying steady after making a high at 1890. Trading 1857. Bonds, a little two-side action here. Sadnov, mid-range also. Seems to be a theme here, Sadnov. Everything is pretty much mid-range except for oil, which is at the high end of its range, 77.51, about 10 cents off of its highs,
gold,
a full $1.50 off of its
gold,
lows.
silver, natural gas, crude oil, they're all significantly higher today.
Good catch on gold. You are right, up 37, making new highs in gold. Silver doing the same on a percentage basis, even bigger with a 71 cent move. You are correct, Sadnov. As you always are, me lord.
It's my job. Just sit here and correct you guys. All right, let's get this party started. I'm ready.
Well, you've got about a minute and a half here, Sadnov, so make sure you're ready. Go over everything. You had, I think Walgreens, WBA, had earnings before the market opened. I don't know if you have a position on in there. I don't think. Yeah, stock looks like it's up around $1, $1.50. Be the first uptick in Walgreens in forever. And Delta Airline, DAL, trading 64.5, up around $3 or so in Delta Airlines.
Delta, don't ever leave the airport. I do not have a Delta position on, and we got rid of our Walgreens position. I would consider that Walgreens sale. Where's it trading now? About $10? I'm not looking at it.
Just over $10. Yes, you are correct.
I would consider that
there,
my only tax loss sale of the year. I was like, I am not carrying this stock into 2025 on my sheets. I don't want to see it ever again. Don't ever try to get me to trade.
I'm not carrying this. I'm not carrying this pig, is what you meant to say. But yes.
Yeah, I'm not carrying Walgreens Booths Alliance ever.
I don't blame you. It's kind of dead money. You really have to have a directional opinion in there.
Yeah, it's totally dead money. It's garbage, as they would say.
Yeah. Well, let's see what's bringing this market a little bit lower here, Sadnov. When I go through our list here, the first name that I know is Netflix, down around $11. Adobe down around $9. CRM down $5. Goldman Sachs down about $5. Crowd down around $4.5. Shop down $4 to 107 and change. Let's see what the big movers to the upside are, Sadnov. Costco up $6. Tough markets to trade in Costco. I've been trying to put a trade on there for weeks in Costco. Just markets are just too wide. UAL and a lot of the airlines. UAL up $5, South. I mean, how can you have a crash in the market when UAL is up $5? Delta up about 3.5. And
I don't know, but that's not a good move for me. UAL up $5. That's for sure. That's a crazy arse move.
That's a 4% move in UAL. Yeah, that's new highs for UAL. You are correct, Sadnov. Well, I'll tell you something. If you tried to travel this holiday season or looking for anything for spring break, well, you better take out your checkbook, Sadnov. They are gouging with the flights.
I don't have a...
I mean, you fly private. Is it any change there?
I do not fly private. Thank you.
Even the S&P is down 56.
I'll be flying on my own private airline tomorrow, which is American.
Yes, yeah. You're an equity member there now. You don't have any voting rights, but you're an equity member.
I definitely do not have voting rights. We're going to make a couple of very minor adjustments.
Volatility upticking here, Sadnov up 81 cents to 1878, giving a little bit of legs to this down move. Haven't seen volatility really come off of its highs yet, Sadnov.
I haven't seen too much movement on anything so far.
No, I agree. After the move lower, Tesla down $1, Nvidia down 3.5 for some of the stocks that we trade. Coin down $3.
Yeah, I'm just trying to get a visual here of where we have
problem children.
Yeah, I don't have a lot of problem children, as they would say.
That's a good thing.
Yeah, I'm trying to see if we're Intel, maybe gold, crappy ones, crappy problem children.
Crappy bad problems. You're saying?
Apple's taken a little bit of a whack.
Well, I mean, yeah, I mean, it's had a 2-week fall here. It continues to fall. Apple down around $4. Yeah, volatility really expanding in there. A 49 Ivy rank with the earnings looming at the end of January.
AMD, like you mentioned before, getting a little bit of whackage here. Yeah,
a little bit of whackage.
I don't know. Do you think these stocks can? Do you think anything can turn around today, or is it they're gonna take till next week?
No, I think you're gonna get a little bit of movement to the upside here, Sadnov. I mean, the stocks that we are trading here, I mean, to the downside, don't look as big as they did pre-market. I'll tell you that much.
You got some stocks.
Bond's got to get out of their own way, man.
Yeah, I agree. Got some stocks that I follow, like Baba and Baidu, here that are. I'm actually going to get a little bit.
When I think of the market, I don't think Baba Baidu.
Yeah, you know what? The markets are too wide. I didn't realize how.
Tighten up, Sadov. They will definitely tighten up.
The markets are wide.
Immediately following the opening.
The equity markets in there are wide.
Yes, they are. Yes, they are.
Especially I did not realize that. Yeah, all right. I'm
see, just go into a little bit of stock here. Look at you.
Well, the equity markets are a little too wide. So yep. I don't know. I'm not sure yet what to make of this. I'm not sure yet what to make of this opening.
I agree with you. Key on volatility, 1855, up 60 cents right now. Watch that. Volatility keeps going. Bid will go lower. If it starts to collapse a little, maybe you get a little bit of legs underneath yourself. Gold up 43. That can't be good. Sounding off for the equity markets either. Big move there, up $43. Now trading on its highs.
Yeah, we have a very small gold position, but we have a decent size GLD position, which I find to be so damn hard to trade.
I am so with you on this, Sadnov. It's not even funny. I wish I had closed my gold position last year and used it for tax harvesting.
I swear, man, I can't make any money in GLD to save my life.
I try to. I try leaning one way or the other. I just can't. It just doesn't work.
Nope, it doesn't matter if you get long, you get short. It doesn't matter. Doesn't matter. Yeah, no matter what happens in there. It could be the most difficult. I would rather trade GC any day of the week.
I agree with you. I definitely agree with you. I made a mistake. I stand corrected. I'm a good person. I did a bad thing.
Yeah, it's impossible. All right. What else we got?
Let's take a quick 90-second break. We can come back and we've got Sosnov, the moment you've been waiting for. Fast market. We'll be back in 90 seconds. Let's take you live.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke. Here comes Hanukkah. So much Funica. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up,
right?
I was waiting for somebody to say something, and if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now
it's in their
been sitting
refrigerator
out for hours.
Now I got to talk about the chili. Here's my comment about the chili. You were right. Not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was off.
You can chop him up a little finer.
And then maybe pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott. I really do. This is my favorite segment by far.
I made a little video. We have
no. Is this going to embarrass me?
The holiday spirit here at Tasty Live. So you're welcome.
Have we seen this?
Watch this. No, you've not.
I didn't proofread this. Oh, God.
You want me to get in first? You want to get in first?
Saz, get in here, you big stud. It's my bad arm. Been over your head?
So you're naughty.
I'm nice.
You're naughty.
I gotta read. I'm
no,
nice.
it's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. Even the S&P is giving it up a little bit, down 60 or so. NASDAQ down 278. But all that means nothing when you've got fast market coming at you. That's right, Saj. Fast market. Now that we played the music, we can go to fast market.
So it's weird. I feel like the markets are a little wider this morning. Not sure why. Maybe it's a pop in volatility. Maybe it's something else. It just feels a little thinner out there today than the last couple of days, which is
I'll give
weird.
you that. You're not getting filled around mid-price. You got to be a little bit aggressive. Yeah, I agree with you.
Which is weird. Which is really weird, given that
volatility is higher.
And no, it's really weird given that we're post the number. Yeah. AMD is the one I'm chasing today. There's one stock I'm chasing, and it's AMD, and I'm not happy about that. Little bastard got away from me.
Goldman Sachs today is my issue. Tesla down $1, Nvidia down 4 and change. Coin down 6, Osnoff. Even though Bitcoin is 94.
I don't have any issues in any of those stocks.
No, me either. Only Goldman Sachs.
Anyway, it's 8:42. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending your morning with us as always. Interesting day so far. Finally got filled at AMD. I had to walk that sucker down like 25 cents. Pissed me off.
And there's no worse feeling, by the way, after walking it down 25 cents because you had the right idea, right? Right price, right idea.
No. I started trying to chase it when the stock was down $4. It's down $6 now. So I chased it, the stock down $2 and missed it. I hate that because I could have got filled right away, and instead I got greedy because I was a pig.
All been there for sure. Me too.
No, I haven't been there once. I've been there 780,000 times.
Sure.
Anyway. Anywho, again, another weird week with a middle of the week off. That's kind of the third straight week where we've had either a Wednesday or a Thursday off, which is very strange.
It screws up everything, Sadnoff. It really does. From my sleeping patterns to school for the kids. I had been telling Vinny all week long that he was off on Thursday for the day of mourning of Jimmy Carter.
He wasn't.
And look, No, he was not. Wednesday afternoon, I came home. He was not happy with me. He was like, I told all my friends we're off tomorrow. He's like, they all say I'm wrong. I go, let me Google search it. And sure enough, I was wrong.
Yeah, well, you should have told him. If he was a stockbroker, he'd be off.
That's what I should have said. You know what? Banking was open. Tasty Trade Banking was open because banks were open, Saz.
Yeah, it was funny.
Weird day.
We were at Corinne goes, why are you around?
True.
Why are you here? Like, why aren't you working? What's going on?
Don't you have someplace to go?
Yeah. Why are you annoying me?
Corinne and I have a lot in common. I say the same thing about you. Not today, though, Sadnov. Today you are on my good boy list. You're going to stay there all day long. You made my morning.
Yeah. Well, I worked yesterday, but I hung out in the coffee shop with Scott and Nikki.
And my son. I know you guys had a little brunch date together, and nobody invites the bat.
You live too far away. Out of sight, out of mind.
Great. Thank you. Appreciate it.
Bonds coming back a little. They're only down 17. They've rallied almost 20 ticks off their lows, maybe more. I bought some this morning at 111.28. Did I say 111.28? And then I bought them at. Hold on. I bought bonds this morning. I got to see this for a second. I bought bonds this morning. I got to set my screen up.
Early this morning.
111.27. And then 110.29. The 110.29.
You don't get that opportunity every day.
No, the 110.29 is already sold at 07. The 111.27.
Okay, you're going to confuse people. You don't get to choose which ones you get to sell out. You know, you're in your warped mind. You can think
it's in the vault, Tony. It's in the vault.
It's all an aggregated price. It is what it is. Your P&L goes higher, or your P&L goes lower.
It's in the vault.
Yeah.
Okay.
Yeah, I got it. You're like my grandpa Vito. He's got a bank book in the vault for me.
Yeah, I got it.
Never did find that vault.
If I sell my bonds, if I sell right here, I'll scratch the whole day in bonds.
That's correct. That is the way to say it.
Which is a miracle, except for my existing position, but all my scalps. But the question is, do I sell right here and scalp? And actually right now,
show some intestinal fortitude, Sandro.
Or you hold tight and show some intestinal fortitude. I'm going to do that.
Show some intestinal fortitude. Hold tight, Sadnov. You got him today.
I don't know about that. But, all right.
This is the first time I've heard you not be confident, which makes me confident.
Well, let's hope. Let's hope there's
volatility giving it up here again, Sadnov. Never mind. Up 73 cents.
Let's hope there's something to that. Taking a look around, see if I need to do anything. I don't think so. All right, let's see what we got. Fast market.
I'm ready. Let's do it. Fast market.
From Singapore. Like a little. I like a little Singaporean trade ideas. /NG, which is natural gas. How about a 16 Delta Strangle? Well, you know what? Mr. Singapore, we are locked and loaded in natural gas. Not a good day for us, by the way, in there. We have the February.
No, sir.
We currently have on the February 325, 360. Let's take a look. I mean, there's some. This should be recentered at around. I'm going to do the 3. I think the 3405 makes the most sense.
Okie dokie.
3405. I'm going to do that strangle. I I have an existing position on in there. Essentially what I'm doing is I'm recentering my existing position. Nothing done yet. We'll keep you posted. I will keep you posted.
You do that, son.
Oh, filled.
Look at you getting filled like that in that gas.
3405. Let's go next slide. I'll get a price for it in a second. 3405 looks like 26 on the nose.
What are
26.
you trying to figure out?
3405.
Oh, yes.
26.
26. Yep,
TLT.
thanks.
Oh man, there can't be anything good in TLT today. Stock's down 46 cents, not as bad as I thought. Let's take a look and see what we got. TLT, we are currently long stock, short 85 puts, short 90 calls. Those 90 calls are not very helpful here.
Not helping.
Yeah.
So, what do you think has a higher monthly implied volatility, gold or TLT? They're both crappy, but which one do you think is less crappy?
I would say TLT is less crappy, but on a relative basis. But gold has higher volatility.
Gold monthly implied volatility is only in the 15 handle. Gold is in the 18 handle.
Huh. I'm surprised by that. It's crazy. Thinking about just selling some TLT at the money puts for February, or maybe going with a covered call. Mike from DC. Yeah, I mean, I like that play, Mike. I'm already short the 85 puts. I think you can sell more here. The markets are only a penny wide.
Mm-hmm.
I put a 148 offer in. Market's 140. It was 147, 149. Now it's 146, 148. Actually, I just got filled.
148.
But I covered my 90 calls that I was short because I have a covered call position in there, and I'm going to sell instead. That has nothing to do with this trade for Mike. Mike, I just sold 85 puts for you. That's all. At what I say, 148. Hold on. 148. Yep. All right, let's go next slide. Break Stone from Miami Beach. If the price has not bounced back too much, a naked put or put spread in 16 delta looks fetching to me. I like it. Both are multi-month lows. We are long both of these, Mr. Breakstone. In the British pound, we are short the 124.5 puts, and we're below that number pretty significantly now. And in the euro, equally as bad, we're short the 104 puts. We have no good positions in here. Adding to this would be foolish, but I probably will because I just can't imagine these things are going to be any darker than they already are. How about the 102 puts? Oh, how about I'm filled already at 620?
That didn't take long.
It didn't take long. I don't love that. That was too easy. Let's go to the next slide. Wow, these spoos are not
cooperating, down 72.
They are not cooperating. Yeah, let's see. What else do we have here? Oh boy, ugly. You ugly. What do we got here? AMD, Jack from Philly. What does Jack want to do here in AMD? Seems way undervalued. Well, Jack, if you thought it was undervalued yesterday when you wrote this, when you sent this in,
today.
Then you're going to love it today because it's down $6.73 and it blew through your strike.
Yes, it did.
I am short the 110 puts already, and I am short the 130 calls. I'm going to roll those down to the 125 calls, and I will, in your honor, Jack, Oh man, the 110 puts. Let's see. Where are these things? They're 525. Man, this stock looks like death.
It sure does.
I mean, it really does. I sold some more puts at 530, Jack. I don't love this on the 110s. Sold them at 530. I'm just a small number because I'm already short in there. Already long that stock, and I don't like it because it looks like duty. Let's go next slide. Jason from the Bay Area in California, long Tesla, strangle with long deltas, short GM, short the call spread. The latest Tesla self-driving car is incredibly good, and Tom's not buying another Model S priced in. Yeah, I'm not doing this trade. Jason, I'm not getting long Tesla. I am very, very much anti-Elon right now, so I'm not rooting for Tesla. My Tesla position is currently tiny. Oof.
Tesla down $6 and change after being up actually this morning for a moment.
Yeah, our Tesla position is actually, unfortunately, a little bit long here.
Now that's down $6, sure.
Yeah. I don't love my Tesla position here. That's for dang sure.
Tesla's had a little bit of a slide the last 3 or 4 days also.
Yeah. All right, let's go to the next slide. I'm not going to do this trade. I don't want to be long Tesla. I am not bullish in there. APP Jeff from Miami. You know, this is a stock that moves. I think we traded this once. App loving. If I remember, this is an insane stock to trade. But let's see, what does he want to do? What do you want to do, Jeff? High IVR stock, earnings on February 12th of a month. How about selling a strangle? 250. 250. Are you short 250? What does he want to sell? Feb strangle. 250. I don't think that's right. 450.
APP? I mean, APP is 300 and change. It's been sitting in this range of 300 to 350. So 250, 450 makes sense, Thomas.
Okay, well, look at the option prices. You're selling a $14 call and a $1 put?
No, 250 puts are trading $10, Saz.
In Feb?
Yeah, $10. What stock are you on?
Oh,
Apple
no. I had the wrong stock in there. Sorry about that.
Sadlov, you could do no wrong with me today, my friend. I don't care.
250.
You know what? It was probably the platform.
250, 450. Well, the stock's down $15 today, so let's go.
Yes. This 250, 450, if I'm taking a look at it, it would be a little bit skewed at the moment because of the stock movement lower, right? I mean, you'd be looking at around 3 long deltas. If you wanted to keep the same strikes, you're probably going to, the same area, you'd have to go like 250, 430 or something like that. Market's a little wide in here too on this $300 stock.
Market's a little wide. I'm going 220, 470. But
beautiful.
I got to do some price discovery in here.
Uh-oh. This could be dangerous.
Markets are a little wide.
Yeah.
I don't know. We're going to leave it in for a few minutes and see what happens, and then we'll. All right, I'm working it, Jeff. We'll see. Oh, filled.
Mm-hmm.
Hold on. 925.
Yep. That is correct.
925
on the 220, 470. Yep.
I did it small. All right, let's go to the next slide. Diego from Miami. A lot of South Florida today. PCG. What is that? Pacific
Good
Gas?
question. I don't know. Let's see.
Yeah, Pacific Gas and Electric. Have not traded this since the last fire in LA.
It's down 17, down to 1760 South, down $1 and change today. But this stock was over 20 just about 48 hours ago. Back to where it was in June or July of earlier this year.
Okay, what does he want to do here? 100 IV rank, okay. Buy 2 of the 19 puts, sell 4 of the 18 puts, sell 1 of the 21 calls. Hold it, Tony, help me out here.
Yes, sir.
He wants to do a 2x4, which is a 1x2. Oh, but he wants to do the ratio. 2x4 put ratio against 1 naked call.
Yeah. And he's calling it neutral. I don't know. I mean, do you want to be neutral on this stock?
He wants to buy 2 of the 19 puts, sell 4 of the. Well, I think that he did this before the stock was down $1.60 today.
It's not going to help.
Buy 2 of these, sell 4 of these. Okay, hold on. Buy 2 of these. I got to do the right ratio here. What he wants to do.
Mm-hmm.
Buy 2 of the 18 puts, sell 4 of the 17 puts, and then he wants to do which call? The 21 call.
Well, I mean, you're gonna want to change it probably the 21 call.
Yeah, but those are only 20 cents.
That's why I said you're gonna probably want to change it. Even the S&P down 81.
Jeff, I mean Diego, I don't like this trade.
Yeah, I said that from the beginning.
I don't like this trade, dude. There's nothing here. Markets are too wide. I don't get the ratio. Doesn't make any sense to me. I'm a pass. I'm
gonna pass.
I'm gonna pass. Let's go to the next slide. Why is the Russell down 50 today? That doesn't make
Russell's getting killed here, Sadnoff. Russell down over 2%, 2.25%. But you know what? NASDAQ is catching up to it too. It's almost up 2%, almost down 2%, 190.
That does not make any sense to me.
Even the S&P is down 90, Sadnoff.
Yeah, where'd that come from? And bonds just lost 15 ticks. All right, go ahead. What's the next one? Nike. Looks like a poor man's covered call candidate. Nike. What do we have on in there? Got a bunch of different stuff. Nike's actually up today. Yeah, we're a little bit long.
Coming for
Nike.
the pigs, Sadnoff. Coming for the pigs.
We are long a little bit of Nike. What do you want to do here? He wants to buy the March call and sell the Feb call. Nike. Buy the March call. Well, you'd buy the March 72.5 call. Sell the Feb 75 call. It's kind of like a poor man's covered call. Except we already have this stock on, but I don't care. 236. Let's go to the next slide.
236 is correct.
This is a hell of a
good job out of you.
Hell of a move right here. Did not see this coming out of left field.
Even the S&P is down 94, Sadnoff. Volatility 1926, about as high as it's been, at least for the year for sure, going back to the end of December, Sadnoff, when volatility traded over 22.
Yeah, this is what you would call, there is nothing pretty about this.
Not too many places to hide here, Sadnoff, I'll tell you that.
There are not too many places to hide. I'm rolling down calls right now fairly aggressively in different indexes. Let's go Manfred in Malta. Sell the Feb 620 strangle. Sell the Feb 620 straddle and buy the 610 put,
Sell a Feb.
that would have been an
620
awesome
straddle.
trade yesterday. It would have been.
Yeah, it would have been. Now, let's just say something. You're selling a $10 wide spread against a naked put spread against a naked call. This is definitely a bearish position. When you say bearish, this is about as bearish as you can get. I mean, having a $10 wide put spread is not going to do anything one way or the other against a naked at the money call.
Yeah. I like this trade, but I like it again. I like it yesterday. With the stock down.
Well, hold on a second. You would never have made this trade.
Never would
have. Bearish on Meta.
No. I understand that, but there would have been a better chance for me to consider something in Meta if the stock was up $8 yesterday, because I'm not a big Meta fan.
Yeah, sure.
But at this point, you're right. I'm not touching this trade.
Right.
Let's go next slide. Manfred, sorry, not touching it. Centil from Fremont, California. He's looking at Adobe. We don't have an Adobe position. Thought we did. We used to. ADBE. Stock is down $9.50 today, which is probably pretty normal. Beaten up lately. Adobe. Yeah, it's on its butt for sure. It's a $409 stock. He wants to buy. You're just bullish on Adobe.
He's bullish today. Today's a day if you're looking to collect, trying to get something. Sure.
If you want to get long, today is your day to get long Adobe.
Yep.
If you're bullish, I kind of like selling a put spread in there. How about the 400, 395 for a little over 1/3 the width of the strikes? Looks like it trades around $1.70-ish. Let's do a little price discovery. The markets are a little wide in there. So it's not the easiest stock to trade. 171. Penny better than I thought.
Even the S&P is down triple digits. Triple digits.
I am
100.
very, very surprised by this. Let's go to the next slide.
I am very disappointed in you, even the S&P.
I'm not disappointed. I'm just.
I'm not angry. I'm just disappointed.
I was super bearish. I think they're going lower. I mean, there's no doubt about it. I just thought the bonds would be up when they did that.
And I'm disappointed in you, Bonds. Then that's what I'm not angry. I'm just disappointed.
Natural gas, we sold a strangle in there. TLT, we sold a naked put. In the euro, we sold a naked put in the euro. We didn't do anything in 6B. We sold a naked put in the euro. In AMD, we also sold a naked put. Couple big down move today, sold a couple naked puts. Tesla, we did nothing. APP, we sold a wide strangle, very small. PCG, we did nothing. It was a complex ratio spread. I just didn't have enough volume in there. In Nike, a poor man's covered call to the upside. In Meta, we didn't do anything. And in Adobe, we sold a put spread, not a call spread. We sold a put spread.
Where's Beth when you need her?
No, this is way better. Beth couldn't do this. It was out of her league. We did 7 out of 10 trades, but here's the scary thing. Most of them were bullish.
Better today than yesterday.
For sure, better today than yesterday, but most of the trades we put on were bullish. I did them small, and that's what we call kind of buying into strength, I guess. I mean, I'm sorry, buying into weakness.
Weakness, yes. You are correct. But we do got a little bit of weakness going on here in the market side, that's for sure. Even the S&P down 101. We'll take a quick 90-second break and come back. We got more Tasty Live side up with Bad Taste and Julia. Up next, we'll be back in 90 seconds with Tasty Live.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend, as even the S&Ps go down 102, NASDAQ down 467, Sadnov, Russell down 59, bonds down 21, but all that means nothing. We've got Julia in bad taste. Julia, welcome to the show.
Hi, thank you guys so much for having me today. Yeah, no, what a day. What a day to be talking about quantum computing.
What a day to be. Where are those quantum computers? Turn them back on.
Turn the quantum computers on, geez. But no, thanks for having me. We're going to be talking about a topic that I never thought we'd be talking about on this show, so I'm actually really excited.
Awesome.
We talk about quantum computing a lot in this show. You're just not part of the conversation.
I can't keep up, honestly. You guys would go way over my head.
Yeah. So that's the challenge.
Oh, man. Well, I know it might be a little hard to focus on a day like today, but hopefully I think this is going to be actually an interesting piece. It's a little different from what we normally do. It's more of a market awareness piece. Because quantum computers have the potential, and I have to emphasize potential, to shake up a lot of major industries, actually. This is kind of the sister fields to what I got my master's in, so I thought it'd be cool to kind of talk about the history, potential market impact, and then next week I wanted to focus on how it could impact the crypto sector, because I know that conversation's been ongoing, and it's actually really interesting. It's really interesting potential dilemma. So yeah, that's what we got.
Although Ryan told me if I ever brought it up again at a crypto meeting, he will kill me.
Well, hopefully we'll have a constructive conversation about it, because it is actually a very nuanced conversation. and we're in the infancy of this technology, right? We're in the infancy of this technology. So there's a lot of uncertainties around, right, the potential. And what that's going to impact in terms of like crypto, cryptography, on the tier list of things that I'm concerned about if these things become commercially viable in the timeframes that experts are giving us. Crypto's kind of low on the list for me because there's a whole bunch of other cryptographic problems that we'd have to worry about in terms of cybersecurity.
I think it's low on the list for everybody. But the funny thing is that everybody in the crypto world does not want to talk about it as a risk, because they feel like the real risks in crypto are so much different than quantum computing.
It's going to impact.
Which I'm fine.
Which I understand. But that being said, again, it's a nuanced conversation. I want to dive a bit more into it next week because I think there are some cryptocurrencies that are at much higher risk compared to others.
Well, Bitcoin would be because it's proof of work, as opposed to anything that's proof of stake.
Well, with like the crypto. Well, you know what? We're going to talk about it next week.
Okay,
Bitcoin is kind of screwed for a different reason. But yeah, we'll talk about that next week. For now, I just want to talk about what these things not what they are. If we have time to talk about that, I'll explain what a qubit is, but I put that towards the end because I know I'm going to lose people when I try to do that. But let's dive into it, yeah?
Yeah.
Okay, let's do it. So let's go to the first slide. Okay, so there's been a massive investment in quantum computing. According to Forbes, about $55 billion from global powers into quantum computing. And this conversation got really ignited when Google announced Willow. It's this 105 qubit quantum chip that had an astronomical speed up for a benchmark calculation. We'll get a little bit more into that. But since then, it's been pretty important conversation topic. The CEO of NVIDIA kind of said what experts have been saying for a while now, which is that we're still like couple decades out from these being very commercially viable. But when NVIDIA man says it, then the market actually listens because some of these quantum stocks have been just like absolutely popping off until that happened. And then some of them like sold off actually pretty significantly. But either way, it's been a really important, or it's been a very prominent topic in the financial space. And so I wanted to talk about why there's so much hype around this technology and what sectors might be most affected by their emergence. Make sense?
Sure.
Okay, let's get into a bit of history. Okay, so the concept of quantum computing was kind of popularized around the 1980s by Richard Feynman as well as some other physicists. And basically what they kind of figured out is that when you try to simulate quantum mechanics on classical machines, and classical in this context just means not quantum, so on regular computers, you run into really significant performance issues, and they are very resource intensive to do on classical machines. So they just kind of thought, well, hey, so why don't we use quantum mechanical particles, like, quantum particles, to actually simulate quantum mechanics? Maybe that will be a bit easier.
What is a quantum particle?
It's basically just a single particle.
Oh, okay.
So yeah, think of like an electron, for example, like just one of them though. That's a whole thing. We'll get into that if there's time, a little bit. But basically, we're going to be using quantum states, basically, to represent information and do certain calculations that leverage the properties of quantum mechanics in a way that classical computers can't do. And again, if there's time, I'll kind of like talk about a little more of what that means, but it is actually pretty complex, and people use a lot of analogies because quantum mechanics is fundamentally weird and very different from like our classical world that we live in. Okay?
Yeah, I don't fully understand it, just so you know.
To be fair, I don't think anybody really does. Quantum mechanics is very non-intuitive compared to like the classical world that we live in now that we're comfortable with.
Yeah, I mean, this is all relatively new to me, what I'm saying. I'm having trouble putting it all together, like really understanding it.
Yeah. Shit gets weird when things get really, really small. That's the takeaway.
Yeah.
Sound up. The low is in. I have some breaking news. I just want to tell you the low is in the market.
Things get weird when things get really small, and things get weird when they get
really, really big too.
Fast. Really, really fast.
Really fast when they get really big.
Yeah.
Yeah.
Yeah. That's the challenge for me is I can't really. I'm having trouble like kind of measuring or putting context around the speed of all this.
Yeah.
So I'm still struggling with AI.
Well, okay, but here's the thing, and here's hopefully what will make you maybe.
I'm still struggling with algebra.
Well, okay, so if I try and I'm not the person to do this, but if I put a piece together explaining what a regular computer is, it would get really confusing really fast. But you don't need to know necessarily what they are or how they work in technical detail to be able to use them. right? And that's kind of what this piece more focuses on, which is like, again, what sectors are most likely to get impacted, because quantum computers, while they have potential to increase certain problems, or the speed at which certain problems can be solved, it doesn't affect everything, right? It's a certain class of problems, really, that we can expect these things right now, at least, to be able to address. Yeah, that's the history a little bit when this kind of started. Let's go to the next slide. So that's what gained a lot of popularity among physicists, right? As this type of technology that might be able to simulate quantum systems in a more efficient way, or in a more possible way compared to classical computers. But they got a lot more attention after Shor's algorithm was published in 1994. And basically, this is an algorithm that would be used on a quantum machine that solves prime factorization. And so prime factorization, like, so here's an example with 24, right? We basically just got to figure out what are the primes in 24. So 24 is 4 times 6, 4 is 2 times 2, 6 is 2 times 3. So the primes in 24 are 2 and 3, okay?
Okay.
It's easy with 24, but if I give you a number that's like 100 digits long, and I ask you what are the primes in this number, it's actually an extremely computationally intensive task to be able to figure that out, which is why prime factorization is used as the basis for a lot of cryptography. So a lot of public key encryption kind of uses this method. RSA is like the protocol that's probably the most commonly used. But basically, a lot of encryption is kind of based on the fact that solving this problem would take a really, 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 really long time for a classical computer to, like hundreds of thousands of years potentially for a classical supercomputer to be able to solve. But with Shor's algorithm, it got quantum computers much more attention because it demonstrated that quantum computers might be able to solve this type of encryption or break this type of encryption in a really short period of time, actually. And that kind of brought quantum computers into more industries, into more fields, a little bit more broad applicability. And then if we go to the next slide, Grober's algorithm was published pretty shortly after that, which solves unstructured search very efficiently. So now there's implications for cryptography, but with unstructured search, like that impacts like databases quite a bit. So anything that works with large data, large amounts of data, large amounts of databases, even more applicability for these machines. So that demonstrated that this, there might be certain types of problems that quantum computers can execute in really like very short periods of time in ways that might be infeasible for classical computers, as like kind of the history of where these things came from and where this initial hype sort of came from, at least in the more academic sphere. Make sense?
Sure.
So there's some additional motivations for investing this, especially from tech companies, because there are actually physical limits on how small transistors can get. If we go to the next slide. So modern computers and modern computer chips rely on these little things called transistors, right? And obviously there's concerns about energy requirements. As you get more and more transistors to do like more and more complex calculations, you obviously have to be worried about energy. But there's also a physical limit on how small these things can get, right? So transistors are basically like the foundational piece of technology for modern computer chips. And the smallest one that we currently have that I found is 1 nanometer big, right? Very, very, very teeny. It's 1/100th the width of a human hair and about half the size of a human DNA strand. It's the smallest transistor that I was able to find. It's still in the exploratory research phase. It's really small, and this is from Berkeley, I believe. So, right, as you get smaller and smaller and smaller, to be able to do more and more complex calculation and pack more of these things onto chips, right, you have to start worrying about quantum effects, like electron tunneling, basically an electron being able to tunnel through a very small, very thin wall. You got to worry about quantum effects as transistors get more and more small. So there's we believe a physical limit, right, on how, I guess, efficient classical computing can get because of some of these limiting factors. Make sense? Maybe? Sure. So a whole lot of motivations. Let's get to maybe the part that's a little bit more relevant to traders if we go to the next slide. So quantum computers, it's pretty ubiquitously believed that they're not going to replace classical machines because they don't achieve astronomical speedups for every type of problem. But there are certain types of problems where they have the potential to achieve those speedups. So when I think about which industries might be the most impacted by the emergence of quantum computers, at least what we believe now, obviously encryption, right? Cybersecurity, huge potential implications there. Huge implications there. But also what they were kind of originally intended for, which were quantum chemical molecular simulations that has a ton of implications for drug development, medical research, material science, nanotechnology. So companies maybe in those areas might be affected. Optimization problems, so like risk management in finance, logistics, actuarial science, energy, certain machine learning problems. If AI wasn't, speeding up quickly enough, we could even have more speed up for certain machine learning problems. And then search problems.
High frequency trading.
High frequency trading. Oh man, if you think markets are crazy now. But then also search problems. So that affects pretty much any industry that relies on very large databases. So healthcare, finance, retail, telecommunications, logistics, kind of everything actually, because most fields are becoming more and more data driven. If we go to the next slide, there's actually a really interesting forecast breakdown from BCG. It's called The Long-Term Forecast for Quantum Computing Still Looks Bright. If you want to go check that out, it was a really interesting read because they kind of broke down some of these different types of tasks and industries that might.
Why is it going to take so long?
What do you mean? Why is it going to take so long?
Why are we 10 years away?
We're more than that. If you've ever go look up a picture of a quantum computer, they look wild. It is a feat of engineering to be able to build them. They are actually crazy. I was going to hold off on doing the piece of like what is a quantum computer in a little more detail. Maybe we should do it. I don't know. It's going to be a whole thing. But
Julia, didn't the NVIDIA CEO say something like 10 to 30 years in his announcement?
Yeah, he did. Which I was holding shares of IonQ before he said that, which is like that's a big quantum computing name as well. And he said the thing that like every expert's been saying for years now. But then when he says that the market actually listened and my shares dumped like 50%, which was a little annoying. I shouldn't have been trading them anyway. It was a bad trade. But yes, we have quantum computers now, and we actually have cloud-based quantum computing services that are available at the moment. I'll talk about the specific names in a second, about which companies are kind of like the major names in this space. But we don't necessarily have the like quantum supremacy, or at least like clear evidence of the quantum supremacy that we've been kind of expecting. We're still like several decades away from that being kind of more commercially viable. Again, because like building these things, it's a feat of engineering. Error correction is a huge problem that's getting solved very quickly. But yeah, BCG, either way, has a really interesting report about this where they actually talk about the types of problems and the types of industries that might get impacted. And they put like actual like profit amounts, like how much they can expect to profit over certain amounts of time based on their analysis. It was a really interesting report. But they said that the kind of era of broad quantum advantage would probably begin around 2030 to 2040, which is pretty consistent from what I've heard from other experts in the field. That being said, we do have quantum computing now, but they don't necessarily provide the level of astronomical speed up and broad accessibility that we would kind of expect them to in several decades. So, and that being said, like I said, it doesn't necessarily impact every problem. It doesn't replace classical computers, because if you think about like a calculator that you used in high school, you don't need like AI for that. You don't need right? So there's certain types of computing tasks that are just like overkill to use a quantum computer for, and also like not really worth it because they don't offer the kind of speed up for every type of problem. But either way, it was a really interesting report if you guys want to go check that out. If we go to the next slide, here are some of the major players in the quantum computing space. We got Google is a big one. They claimed quantum supremacy in 2019. They released Willow in 2024. This was an excerpt from that sort of post. They performed a standard benchmark computation in under 5 minutes that would take today's fastest supercomputers 10 to the 25 years to solve, which is a number that vastly exceeds the age of the universe. Although I will say that it is a benchmark calculation, and private companies also don't have the same level of transparency that like a research institution would have, like a university would have. So I would just take some of these reports with like a grain of salt. But Google is still a major name in the quantum computing space. IBM is another big one. They started offering quantum computing cloud services in 2019. They announced their Condor, it's a 1,121 qubit processor, 23. Honeywell is another big name. Microsoft is another big name. IonQ, kind of more pure quantum exposure compared to some of these other ones, but still a very big name sort of in the space. And
Tomas.
I mean, we trade all these stocks, I guess, except not Honeywell. I don't think it's public anymore.
I think is it not public?
I thought they got bought out by private equity or something. Is Honeywell private?
HO1 is the ticker.
Then it is. Then it is still. Yeah, I don't trade anymore.
But in terms of getting some exposure to this, again, we're several decades out.
You know what's so funny too? These companies are are so old.
I know.
Yeah.
But I guess like when I think about like which companies would be the best posed to like, benefit. So like, okay. So there's a couple names like Rigetti, IonQ, I'd kind of put it in that category. Qubit is the ticker for another name. Like some names that have like kind of pure quantum exposure that are smaller, less established companies seem like kind of, I don't know, volatile trades, I guess, to do right now, but potential upside, right? But in terms of getting more established quantum computing exposure, like Google, IBM, Honeywell, Microsoft, there's some very established names that are in a pretty good position to potentially thrive from the emergence of this industry that are also a little bit more diversified, right? But in terms of just, industry awareness, these are the names that I would put as sort of the most prominent.
Okay.
Yeah. We are just about out of time, but I do have 2 slides on what the actual difference really is between.
Go ahead.
Yeah, you want to do it? Okay. So this is fun stuff, right? So the big difference between the primary difference between classical computers and quantum computers is really how they represent information. This is a little aside. It's not as relevant for trading so much, but if you're wondering where the quantum really comes from in quantum computers, it really comes from how they represent information. So bits, right, are units that store information about binary systems, right? So there's 2 possible states. There's off and on, true or false, yes or no. Binary systems, there's 2 possible states. And bits represent information for those systems. And in modern computing, right, bits are physically either the presence or the absence of current or voltage. Because if you think about, like, right, a computer, asking a computer what 2 plus 2 is, a computer doesn't know what 2 is. But they understand, right, the absence of current or the presence of current. So when we talk about bits, it's really what a bit is in like classical computing. Mathematically, that's ones and zeros, right? It's usually how we represent them. So like the number 20, for example, in binary is 10100, right? That's what a classical bit is for a computer. Make sense?
Okay. Well, it makes sense, but I didn't know that.
Okay. See, now we're learning new things. Now let's go to the next slide. But a quantum bit is a little bit different. The type of information or the representation of information for a quantum machine. So qubits are based on 2-state quantum systems. Again, I never thought I'd be talking about this on the show. The Bloch sphere, I had to look at this during grad school, like every freaking day. It's actually really cool. But quantum particles, right, have very different physical properties. And they have this property called superposition, as well as like a couple other properties that quantum computers really leverage that classical computers can't. But this concept of superposition, imagine like our 1 and 0. We have a quantum state that can exist as kind of a mixture, some kind of probabilistic combination of 1 and 0 at the same time. Whereas with a bit, it's either a 1 or a 0. With a quantum state, we have this thing that can kind of be like a probabilistic combination of 1 and 0 at the same time, which is kind of cool. That's a property called superposition. There's like kind of 4 major properties that quantum computers really leverage to be able to speed up calculations and execute algorithms that classical computers can't. But superposition is kind of the most interesting one, and it's also like fundamentally very different from how classical stuff just kind of works. You don't see superposition, like the quantum superposition in its classical world. Yeah. But this is kind of where all these sort of goofy analogies kind of come from. If you've ever heard people try to explain what a qubit is.
Why did you want to do this?
I wonder the same thing every day. I find it really
curious, at what age did you think, oh, this is interesting?
It was when I basically started doing research on, so I did quantum communication, which is different than quantum computing, but they both rely on qubits. With quantum communication, it's the transmission of information rather than using qubits to like perform calculations roughly. This is how do we use quantum information, or qubits, quantum bits, to transmit information in secure ways. We did a lot of quantum cryptography and that kind of stuff. But I think so I started doing that right when I started that research when I started undergrad, which was like, I don't know how old I was, 21, maybe. I think it's really cool. I liked it a lot, actually. Kind of getting this becoming a bigger part of the conversation in the financial media space and learning more about it, getting back into it, has been actually really cool. But yeah, when my research was working in the dark for 8 hours a day, which was kind of tough because we were working with like really, really sensitive, it was photonic. So I was like working with lasers a lot, single photons, that kind of stuff. For our qubits, it was in single photon states. And if you turned on the lights, that would just fry all of our detectors. So a lot of it was working with really sensitive setups in the dark for 8 hours a day, which I think I kind of realized I wanted to maybe do something that was a little bit more physicsy. Don't ask me why I'm here. That's maybe a bigger question, but yeah, it's really cool stuff. This is like sci-fi shit for sure.
Crazy.
Really crazy, yeah. So maybe if there's time, we'll do kind of more of a dive into like Grover's algorithm and Shor's algorithm and how they work. But it's really sci-fi level stuff, and it's also like
I don't know if is this the last slide?
This is the last slide.
I don't know if you answered Sadnov's question. The question being why, but maybe we can answer it next week.
Yeah.
Because I'm still struggling with the why. I get it. Sounds good to me. Sadnov, I know
This
you
is why we
have
didn't put
mastered
Julia
this.
back. This is why we didn't put Julia back with Jacob, though.
Please, let's do that. Let's do that.
No, this is why we didn't do it.
Let's take a quick 90-second break. Sadnov, did you happen to catch those 20 handles from the bat low, by the way?
Yeah, nice call. You are so public.
Oh my God. We are going to take a quick 90-second break. We got more Tasty Live after this. Oh, Joy, listen, we got Scott Sheridan coming up, so I got the phone lines open. So call in right now, 855-238-2789 or 855-BE-TASTY. Don't worry, I will correct Sadnov when he says something wrong, but I need your phone calls. Phone lines are open. I got 4 or 5 lines open. Give us a buzz. We'll be back in 90 seconds. This is Tasty Live.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, "Why would I ever leave? Why?"
He was going to go fishing, catch.
He's hurt on this one.
Muskies, some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10
a.m.
Yeah.
You didn't make it 24 hours.
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was.
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And that he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Tomas, we are back, my friend, but enough out of you. The sweetest sound in finance. That's right, my friend and yours, Mr. Scott Sheridan in the house from the Scott Sheridan Studios. It's the man, Scott Sheridan. Welcome to the show.
Hey, good morning. Thanks for having me. Appreciate it.
Well,
It's
thanks
good to be here.
You're welcome. You're welcome to my show anytime. I know I'm not welcome to your lunch or brunch meetings that you have. But
Okay, no, wait a minute. That was not planned. It was just people going to cool places, showing up at the same time. We did not coordinate that.
That's what everybody said. But you know what?
We took care of your offspring. Don't worry about it.
I thought you just told me he showed up unannounced. I mean, so now you took care of him too?
Well, we took care of him once he showed up. We're good like that. Tom didn't want to, but I said we have to.
I know Tom didn't want to. You know, I have a say in this too, you know. I mean, I know it's not all about you two.
I will say this. You drink coffee, right?
I do.
Okay. Do you drink cold brew?
I do, but it's not my go-to. I like.
Okay, but you've had cold brew.
Oh yeah, 100 times.
Okay, so you know how strong cold brew is.
Yes, it is strong.
Okay, so I'm sitting at a cafe, not to be named, but Dead Coffee. It was great. I'm just sitting there doing some work, and some guy comes in to order a cold brew. Now, what size? When you get a cold brew, what size? Like, what do you think you get?
Saznoff is size agnostic, as we used to say about 10 years ago.
Yes.
Big is small, small is big. It doesn't matter.
What do you think, like, a reasonable pour would be?
16 ounces.
Okay, that'd be a lot. Like 12 ounces because it's so strong, right? 12, 16? Not at that coffee.
Wants to put lead. Saz's mission is to put lead in everybody's pencil. And he's going to do it one cold brew cup at a time.
32 ounces.
32 ounces of cold brew?
32 ounces. So
he wants people to be walking around the shop going like this, hitting each other as they're walking into the walls.
I bring one to my son who drinks too much caffeine, like crazy amount. He drank like maybe a quarter, filled it up with water, drank a little bit more, and it's like, I can't drink any more of this. Just leave it. I'll have some tomorrow. If you drink 30, it has to be 750 milligrams, maybe 1,000 of caffeine. Like, I think your heart would just explode if you drank the entire thing. And because Tom, who only drinks iced tea, doesn't understand what he's serving to people.
I know. It's not a good situation, but we got a great situation.
Excuse me. You're going to tell me that if somebody wants to order something,
that I'm going to sit here and tell you, you can have whatever size you want. If you want to buy a gallon, I'll sell you a gallon. There's no law that says you can't. Like, what do you care? What if the guy wants to buy whatever? You care what somebody orders?
You're promoting a bad habit.
Okay, time out.
I'm promoting it?
Yes, you're promoting a bad habit.
So if you want to go to a liquor store and buy a liter of vodka, you can't do that?
That's different. Those habits are already well ingrained in our society. So let's stick to new businesses.
Now, wait a minute. You can get a small little 1 ounce of vodka if you want to.
Oh, vodka.
And you can get a handle of vodka. Can I get a small little 1 ounce of cold brew?
You can get 12
you know what?
ounces.
You liberal lesbian. You're just telling me what to do. Unbelievable. You're not giving me any choices.
Hey, hold on. If you want 1 ounce, you can have 1 ounce. I mean, we're charging you for
1 ounce.
We're charging you for 12 ounces, but you can have 1 ounce.
How much is 1 ounce?
I don't know, but it's good value. And if you save from Tasty Trade, it's better value.
Do you get a Tasty Trade discount?
Yes, and per Tom. And I had to argue because you didn't want to give me the discount, but I know people there. I will say, Josh, not our Josh, but their Josh, is the Toastmaster.
How was my toast?
Was your toast the butter, cinnamon sugar butter?
Well, I mean, it's my bakery. I mean,
it is not your bakery.
It would be no bakery if it wasn't for me.
Yeah, we did say that. The toast was outstanding. Perfectly crunchy.
That's all I wanted to hear.
Texture, perfect.
Buttery,
beautiful. Warm, nice little bites, little cinnamon sugar. It takes me back to my childhood. What more could you ask for? I mean, if you ever stop by, you would have a sample, but I know you don't like to come into the city when you don't need to. But you should go. You should go sometime. You should check it out. So, all right, why don't we get to some business?
Yes, because I got phone lines. Phone lines are full. Let's go. Phone lines are full. Come on, enough with your chit chat.
Enough with my chit chat. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15, Microsoft at a 53. For everybody else, NVIDIA at a 24, Tesla at a 76, AMD at 71, PLTR at an 86, Apple at a 51, TLT at a 52, DAL at a 68, Netflix at an 81, GLD at a 58, MSTR at a 40, Amazon at a 67, TQQQ at a 49, AVGO at a 39, WBA at a 46, and number 15 for Tom, Microsoft at a 53, rounding out the next 10, Meta at a 59, UAL at a 96, Coin at a 36, Intel at an 83, Google with an L at a 61, iBet at a 66, SoFi at a 68, SLV at a 31, and SMH at a 35.
Good job out of you, and good job out of you, our viewers who gave us a buzz and called in. I do appreciate it. 855-238-2789 or 855-BE-TAKE. Let's go to the first phone call. I'm going to go to Mitch in Texas. Mitch, how are you?
Good morning, gents, and belated Happy New Year.
Happy New Year, Mitch.
I got two things. One, for all the listeners, if you call in early, then while you're on hold, you get to listen to all the banter that happens during their commercial breaks, and it is gold. It's R-rated, though, so, take caution.
John?
John, that's a problem, John. John, that's a problem.
But it's awesome to listen to what happens behind the scenes.
John,
my question is about the platform. Is there any plans in the future where I can separate out my account into like two separate kind of folders, one where I want to keep long-term positions and then another fold. So everything's within the same position, but if I want to segregate long-term positions versus, the regular options trading, short-term trades kind of thing, Is there going to be an ability to do that?
No. So, Mitch, typically, and we do have a lot of customers that want exactly what you're asking for. The easiest way to do it, just have two accounts, because we allow multiple margin accounts. If assuming you're trading in a margin account, you got multiple cash accounts too. But we do allow multiple margin accounts. And the good news is that we will aggregate from a PDT perspective. So if somebody's worried, let's say they have $30,000, they don't want to go 15-15 because they're worried about the PDT issue being under $25,000. It's aggregated. So as far as Apex/FINRA is concerned, if you have two accounts, margin accounts, 15-15, not an IRA. Individual margin accounts, 15-15. As far as FINRA sees that, it's 30. So we're not planning on. It would be a lot of work. I'm not saying we couldn't do it. It's just really easy. Just go into your profile in CAM. Go into tastytrade.com, log in. You'll see add another account, and then if you already have positions, you can do an internal transfer to move your long-term positions over, or your trading positions, whatever you want to do, and then you have your two accounts. It's also going to be easier, I think, from a management standpoint.
If I sell a put and I get assigned and I'm like, no, I want to hold these shares, I can just move those shares to the other account if I have two accounts?
Yeah, absolutely. Just an internal transfer.
Okay. Excellent. Well, thanks, guys.
Yep. Yeah, my pleasure.
Thank you, Mark. Appreciate it. We're going to go to Mark. Mark in Denver. My man, what's going on?
Well, the 10th is too late to wish a Happy New Year, but I will say Happy New Year anyway. Even Larry David would say don't do it.
No, you're a couple days too late, Mark. It doesn't count.
Wait, what is Larry David's cutoff? The 8th?
The 7th.
You get a week?
I think it's the 5th.
The 7th?
Yeah. I think you're right. I think it's the 5th. Yeah.
My brother's birthday. All right, we'll take that one.
Well, let's talk the market. Tony, nice call on the bottom today. That was unbelievable. We were down 103.
Thank you very much. Thank you very much. I do appreciate it.
Hold on. While you're patting yourself on the back, is that a guarantee? The low is in for the day? That's guaranteed?
I just hope we don't go positive today. We could reverse and go positive. I don't think we'll go
if that happens, maybe someday I'll be on CNBC. You know what I mean? Tom's done nothing. He gets to go on all the time.
Well, I'll talk about Tom.
You missed.
Tom called the high of the day on the second day of the year. Maybe Tom's right that we've seen the high of the day like reverse of last year, but we saw the low of the day, the low of the year. I find that hard to believe, but. Well,
Tom did sell the high on that day. Tom did sell the high. He covered about 4 handles under that.
This is what I'm calling this the 1% move year. Every day's like been a 1% move. I think we're going to have more 1% moves, either up or down, than we've ever seen. Not necessarily with a huge move in the VIX, although the VIX is at 19. Any opinion on that 1% move?
I think Tom and I both said that we were going to, well, at least I know I said, I'll let Tom speak for himself, that I thought we were going to have good movement intraday and really not go anywhere, for the year or the month or the quarter. So far, and again, you can't go 4 days into the trading range. I mean, what are we down? 200-300 handles on the NASDAQ for the year? I mean, it's really not that big of a move.
SPOOs are down like 50 points.
Yeah, right. I mean, we haven't gone anywhere, but we've had big movement so far we've had that.
Yeah, we've had huge intraday movement and gone nowhere. I think we're all on the same page.
Yeah. Subject to change.
All right. Sorry about the Bears, but go Broncos. I think we're going to beat the Buffalo Bills in Buffalo. Hard to believe, but.
Okay.
You're just laughing about that comment, huh?
Hey, listen, I like optimism. What's the line on the game? 10, 12, 14? What's the line? I have no idea.
10-point underdogs. We're 10-point underdogs.
Okay, for good reason.
Bo Nix could be the next Josh Allen. Bo Nix is the hottest quarterback in the league right now.
He could be, but I wouldn't put your life savings on that one.
The locals are drinking early.
For sure. Do you have your Super Bowl tickets?
I can get them, but I don't have them yet.
Okay. There's a couple teams you're going to have to get through, but good luck. Good season for sure. Listen, better than the Bears.
Yeah.
I mean, we're basically the bottom of the bottom.
Yeah, no kidding.
Yeah, well, you'll get a good draft pick. Hey, Happy New Year, even though it's the 10th. Love you guys. See ya.
Happy New Year to you too, my friend. Happy New Year to you too. We're going to go to London. My man Ali in London. Ali, London.
How you doing, guys?
Hello, Ali.
Good. How you doing?
Doing well, thank you.
Good. Yeah, it was great to see you when you came down to London to see us. I really enjoyed it.
Thanks.
Thank you, man. Appreciate it.
No worries. Yeah, I just wanted to say, I've been in options for a couple of years now, but I bit the bug a few years ago, and I've never stopped. And your platform is fantastic. I really love it, so I can't thank you guys enough for that. I have to say, I'm slightly dyslexic sometimes, so when I listen to your market measure, it takes me a bit of time to understand it sometimes. Maybe I have to listen to it a good few times until I finally get it, but it's certainly very, very valuable for me. But I have to say, sometimes your vocabulary, your trading vocabulary, is quite sometimes hard for me to understand. Maybe we need a cheat sheet of what you say sometimes with your trading vocabulary. That would be awesome.
We have a small glossary down at the bottom of the tastylive website, but we probably should update it. You are correct.
The trader slang is a little bit. It's a little bit overwhelming sometimes at first, but then you get used to us.
But we do have that glossary on the bottom there.
Yeah.
I shall look into it. I shall definitely look into it. I just want to ask you, what do you think of just as trading GM? What do you think of GM? Do you think that's a good tradable?
Yeah, I think it's a good
right now.
I think it's a good, relatively cheap stock that you can, it's definitely one of those
tight option markets, right?
Yeah, tight option markets. It's
good IV rank 73. It has earnings coming January 28th.
Definitely tradable, and it's not like one of those crazy expensive stocks either.
Mm-hmm.
Awesome. Yeah, I'll look into it. I mean, I have a small account. I don't have a big account. And I've emailed you already about this, that I hate the PDT that happens in your country. It's one of the worst things. I can't stand it.
Totally. It's all Scott's fault, too, because we could have got rid of this if we had a better person running point on for us, getting rid of this. But
Since you guys can pay Congress, I don't know if you can ask them to remove it or just pay them a little money. They can remove it.
Ali, I can tell you there's a some quasi good news here. FINRA did appoint somebody to look into this. There's 30 firms probably that are involved with this. They are acknowledging something has to be done. My concern is he seems to be dragging his feet. I am hopeful that we get something done this year. My preference is we just get rid of it. I don't think they're going to do that, but hopefully we come up with something that basically eliminates it, at least for the firms that have the ability to do front end, risk before trades are entered. So I think we're getting close, and totally agree with you. It's a rule that didn't make sense when it was launched, and it makes less sense now.
Great, thank you. And lastly, when are we going to see you, Scott, in London? That'll be good to see you as well as the bat.
Well, I'm waiting for Tom to tell me that I'm approved to go with him on his trip this summer. So maybe this summer, but if not, I'm not sure.
And I'm scheduled to get my ankle bracelet off this summer, so maybe I too will be there this summer.
Yeah, awesome. It'd be great to see all three of you guys. Thank you so much for your time. Bye now.
Thank you, bro.
My pleasure. Have a good one.
We're going to Rob in the Netherlands. Rob, what's up?
Hey, good morning, gents. How's it going?
Hey, Rob. What's going on, man?
Hey, I have two questions for you guys. They're somewhat related to one another. One about the capability of the platform and the other about your trading styles. For the 0 days, I like to do trades where, I kind of watch the price of spreads, and if they go to certain price levels, then I'll enter. The only thing is that, if you're entering a limit trade, usually, if you'd enter a price that is higher than what it's currently trading, because if you enter it lower, it will most likely fill. Is there a way to kind of watch the price movement of a position, be it a vertical or an iron condor or what have you, without actually entering a trade in. So, you do your STX butterfly, 30 points wide, it's trading for, let's say, $10. And let's say you just want to watch that. Is there a way to do it without putting an order in? That's the first question. And the second question...
Sorry? Go ahead. No, go ahead. I was the answer, but go ahead. So what's your second question?
Yeah, and then just the second one is if you ever use that kind of methodology where you say, okay, if a position goes, if you're entering for a credit and the price goes down, if it hits a certain level, then you would enter the trade. Because I know you're getting less of a credit, but let's say the position has been moving towards your assumptions that the price would go down. Am I making myself clear for those two questions?
The first one for sure. I just want to clarify the second one. Is it a spread or a single option? I could give you an answer. It's either, but it's a spread. Okay, so for the first one, when you say you want to watch the spread, you just want to see how the price is moving?
Correct.
You want to see the mid price, how the mid price is moving.
So long as you don't want to do this for a million different positions, like let's just say you have 5, 6, 7, whatever the right-hand gutter, what you could do, if it's a 30-point wide butterfly that's trading for whatever, $5, whatever the numbers, doesn't make a difference. Put an order in, regardless of what your size is, just put an order in for a one lot at a penny to buy. If you're buying it, don't put it in for a penny if you're selling it. Put it in for a penny to buy. If you're trying to sell it, put it in. If it's a $30 wide, put it in at $30. And you just put a one lot in, and on the right-hand side, it'll show what your working order is, what your limit is, and then it'll show, it is going to show you the current price as that's moving. For the next one, if you wanted to, let's say, I think what you're saying is you want to, for example, the spread's currently trading for 2. If it goes down to 150, you want to sell it, but you don't want to sell it unless it goes down there because you think it's a momentum trade and that's the way it's going. Is that correct?
Yeah, that's exactly right.
So you could put a stop limit. So you could enter an order that says a stop limit. So we don't take stop orders on spreads because those become marketable, and a straight stop becomes marketable, and some of the fills are absolutely horrific. So, but you could put a limit. So you could put, for example, if it's $2, you want to sell at 150, you're willing to accept 145, you would put a 150 stop with a 145 limit. And assuming it doesn't blow through, you would then get filled to open the trade at, either somewhere between 145 and 150.
Scott, we have to go. The girls are.
Goodbye. Okay.
We're over.
Okay.
Yeah, and if you haven't,
thank you so much for your time, Jen.
You got it. If you didn't get your question answered, please give me an email, bat@tastylive.com. Thank you so much for your time, everybody. Let's enjoy your next piece.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caverna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
And welcome to the crazy Friday edition of the Liz and Jenny Show. My name is Liz Jerking. That beautiful brunette to the left of me is Miss Jenny Andrews. Happy Friday, Jenny. Happy Friday.
Happy Friday, Liz. I did not know what day it was when I woke up this morning because I thought it was Saturday since we were off yesterday. It was just weird having yesterday off.
It was bizarre having yesterday off. I almost didn't know what to do with myself with the markets not open.
I checked the markets 3 times, and every time I would have to remind myself, like, "Ooh, markets are closed." I forgot.
It's so cute because like I said, my son is trading now, and he was in school, and he's got his other little buddy who's options trading too, and his buddy had no idea. He's like, "What do you mean? What's going on? Why are these markets closed?" And JD had to be like, "It's okay." Every time I was like, he knows now.
Yeah. So I will say, like, our hearts go out to everyone in California. We had no markets open yesterday, so I watched I watched the TV all day, just watching everything going on in California. It's terrible. And I was saying to Liz, there should be some kind of like website where people who have extra homes could offer them up to people who don't have a home, because I'd be willing to give my place up for someone to stay in if they want to live in Michigan City.
I know. I think it's so funny because nobody's looking to go to Michigan City, right? Like they're not going to be like, from LA, let's see if we can get a home in Michigan City. But yeah, no, I know.
But I mean, there are so many people without homes. I think maybe they would just go into different areas just temporarily.
Yeah, for sure.
But it's awful. And that's what I did yesterday. Couldn't stop watching TV.
I have a slight surprise for you because I told you I'm taking back my life. I'm organizing everything. You are not going to believe what I found, Jenny Andrews, and I hope you can see it.
Oh, the old Timber Hill jacket.
The old Timber Hill jacket, and then in the pocket.
Is it your badge?
Wait a minute. Wait till you see this badge. I had 2 because one, this is how long I was on the trading floor for. We showed your badge the other day. Here, look at how beat up it is.
Oh my gosh, you got to move it a little further back. Okay, that's good. I can't believe
you can't. Can you see how like debacled it is? This is because I was on the trading floor for that long and I used to hold a computer up to it. So remember, like it would be held to my chest, and this is what it did to my badge.
Oh my gosh. I am glad you found your badge. You were always so upset you couldn't find your badge.
No. This is not the one. I have one that was good that I gave to Tasty, and they still have.
But at least you have that badge.
At least I have this debacle one.
This is mine. So mine is still intact, but you held your my computer was always hanging down lower. So like my badge was up higher and my computer hung lower.
I would hold mine like this all the time. And then I would look at it like that. So, kind of go down like this. I held it all day, every day.
That probably protected you. Mine was just hanging low. I'm surprised I was ever able to have kids having that computer hang on me. Honestly. That's not a joke.
I'm not going to lie to you. I'm going to bring that badge into the SIBO and just clip it on. Nobody can read it anyway.
No, I had brought this in, and what did they tell me? $5,000 fine if I tried to make a trade?
My name isn't even on there anymore. Like the Elizabeth is taken off.
But you still see the Liz.
No, you see IZ. You just see the I and the Z.
Hey, Izzy. I'm holding this up only to see the J and Y. So I knew I was going to be going on a badge soon. And I was kind of waiting for Johnny to blow out. I knew it was coming. And as soon as Johnny blew out, I was like, I'm ready. I'm taking J and Y.
Well, I'm Frank the Great. I'm sorry if I'm putting this on you. Frank the Great is the man in our YouTube chat. He is awesome. He's also a former floor trader. And I don't know if he knows this statistic or not, but I'm going to throw it out there to see if he knows. What was the blowout rate? Because I'm pretty sure it was pretty high. Blowout rate meaning you get on a badge, you lose all your money, you leave.
And you're gone. It probably was pretty high. I think back in our day, there were quite a few people who blew out.
Yeah, that's what I'm saying. I would argue if I had to make a market around it, the people that blew out, I would say 60%. I think it was more than made it.
I think there were so many people down there who were just trading, jumping on trades, and didn't know what they were doing, didn't understand options. And honestly, Liz, could you imagine if we were back in the 90s, back there, but had the knowledge we have now, how different it would be? Because back then, all we had to know was,
honestly, I knew my synthetics. That was it.
That's what I was going to say. All we needed to know is our synthetics and try to, arbitrage and lock in profits and keep a neutral position. But if we knew then what we know now, I don't know where we'd be, Liz. I don't know where we'd be, but I'd probably be living on a beach somewhere.
Well, and I know we'd be living on a beach somewhere because I would argue if we were 10 years older, we'd be living on a beach somewhere too, because we came in at the tail end of the heyday.
I know.
Tail end. Like we got just a taste of it. And then it kind of went. And that's what I think Tom and Scott and all those guys were smart, because they were still there when we were there, but they were walking out, right? They were there they overlapped. I think Tom and I overlapped for 2 years, and that was it.
Right. They were walking out when we were walking in. And honestly, I got on a badge, and I'm pretty sure I had like 3 months on a badge, and then we went to decimals.
Yes. So we had to have those fraction. I'll never forget. You gave your flashcards. You made fraction flashcards, and then after you learned them, you gave them to me. And I remember sitting in my mom's kitchen doing fraction flashcards.
Yes, because everything was in fractions. They weren't in. So the markets were literally like 2 3/4, 3 1/4. That's exactly how the markets were, or the 5/8 or whatever.
They were in 16ths. In 16ths, so not even easy fractions. Keep that in mind.
You could, they could be a myriad, but the minimum was 16th. But then I'm not on a badge like from the beginning. I was on a badge and they were fractions for a while. But when I left a big firm and went on my own, I was on my own for like 3 months, and then it went to decimals, and then it was harder to make money because the markets then could be, anything.
Penny wise. A 16th is bigger than a penny. Just a little, isn't it 8 cents or something like that? It's like 8.25 cents.
Or 6 something. I don't know. I don't even remember. It's been so
16.
long.
And that's why they would call them teenies. The 16th, it's a teeny. But so that's why that narrowed the markets even more. It's crazy taking that walk down memory lane. But I'm redoing my office here. So I'm getting all of the old trading paraphernalia and everything around. So maybe once I'm done with it, I'll take a picture and post it.
0.0625. Yeah, 6 cents. Yeah, that's how we got the no.
So when it goes to a penny, if you could have a penny-wide market, that was taking away from the market makers on the floor, only making it better for the retail traders.
Right. Which is why a lot of traders were leaving. It was getting harder to make money down there. And you had to make a lot of money just to cover your costs.
Okay, so then, yeah, you did. Yeah.
Right. Do you remember? I want to say when I first got on a badge, it might have been $4,000 a month in rent.
It was more than that when you were first on a badge. It was way more than that. It was closer to 10 when you first got on a badge.
Maybe it was like $12,000 a month to pay your rent if you rented a seat. But then when I left, the rent for the seat was only like $700 a month. That's how bad it was.
Yep. True. It's crazy.
And you would sit there every morning and I got to make X amount of money just to cover my rent.
Yeah. It was, but and that's pretty interesting. it's a pretty interesting time that we lived through. How many? Okay, I got one more question for you, and then we'll get into the markets because I know the SPOOs are down 94. We can see it. We've got eyes, but we got eyes. But it was a huge jobs report this morning, so it was the unemployment went down way less than expected. I don't know. I don't even know if that's the right reason. I just know the jobs numbers blew it out of the water, and that's why markets went down. I kind of expected bonds to go the opposite direction, but stocks down, bonds down, which I think is bonkers. But here's what I was going to say too. On this note, because we were having this discussion the other day, what percentage of the population do you think knows how to trade options? Population.
Less than 1% for sure.
Yeah, less than 1%.
It's so small. How many? I don't know how many tasty traders are there. How many people are there trading options? Not many. Although somehow they're on my feed now. On my Facebook feed, I keep getting pop-ups of people like trade 0DT SPX trades. Let me show you how to make $800 a day. I keep getting these pop-ups on Facebook.
Well, yeah, because never mind. You know how the algorithm works. If you ever look at anything with 0DT SPX, you're going to get it to the umpteenth degree.
I don't think I've ever looked up 0DT SPX.
Yeah, but you know who's listening? You know who's listening to you? Everyone that you can't say their name, your two friends that you have, and they'll put it on your Facebook. Like we say it all the time.
Right. So now that's what I'm getting. How to make $800 a day in 0DT SPX. Speaking of 0DT SPX, I know the market's red. I know we were down on the open. Oh.
You know how I feel. I already posted it on Twitter. Go to it first.
Oh, okay. Let's go to Twitter. Let's go to Twitter. Here we go. What did you post? Oh my gosh, look at that picture. The rules are there ain't no rules.
We were talking about doing it today. We said our rules yesterday. We're only going to do it on an update, blah, 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 blah. Not today. Let's do it.
It's down 98. I'm putting in the Jajun trade.
I like it.
Because on a volatile day like this could be one of the days we get in and out in the same minute. It comes the same fill. Hang on. 58.20, 50.25.
They're just going to hand us $50.
Hang on.
Josh.
260, and now I'm going to put in 310.
310. Come on, baby.
Come on. Make sure you push these out. So,
oh shoot, I forgot about my job.
Do you see how I'm kind of losing packets? I don't know if you see that.
I can't. While I'm pushing it out, I can't see anything, but that's okay.
310. Come on. I think things are moving so much. My internet's not keeping up. I'm dropping packets a little bit. And I never even knew what that meant until we worked in this industry.
Dropping packets?
Yeah, like if you see like a little like blank space, I think I learned that from Garrett, dropping packets. I don't know. But I've got it in. So where did I get filled? Like SPOO's down 98, 97?
99-ish, I want to say. Oh, breaking news from Frank the Great. I love this. Brett in the chat. Hello, Brett. Brett, shout out to you. Filled the Jajun trade in 3 minutes.
Yeah. I think, we're getting a lot of whippy movement. Oh, it could be quick. It could be quick, but it might not work if we keep going down, if we go from... But we'll see. The market's bouncing around, so just a little bit of a move, and we might be able to get out. Well, it's right there. It's right there.
Come on, Jajun.
We'll see. I was hoping for all in the same minute, so you could see fill in and out in the same.
Well, we need to pop. I mean, honestly, it should be happening pretty quickly. We're only at $10. It's weird.
I know, right? When SPOOs were down 93, I would think that it would have filled.
Yeah, well, that's okay. Let's just keep moving on. We can't vote. We can't just silently watch the Jajun trade.
Oh, we can't? I can't do that for the full hour?
Fun, but no.
Do you think I'm getting... So I don't know if you noticed this watching the platform where you see things like little blank spaces. I wonder if that has to do with the snow outside, too. I don't know.
I doubt it. It's a light dusting. If the snow is going to take out the platform, we got bigger issues.
Well, I don't. So because I live in where Liz lives, where you are, Liz, you don't see any wires, right? You don't see any electric lines, nothing like that. It's a newer neighborhood. Everything's underground.
And I'm going to knock on wood. We've never lost power.
And I believe that. You've got a very modern neighborhood.
Thank you.
So where I live, it's so old, all the power lines are exposed, just like old-fashioned, like the big wooden poles, the power lines all down the street, the lines running to your houses. This neighborhood was built in the 1800s, and snow does take us out sometimes. Snow and ice takes down the power lines and the cable lines. So I don't know, but my internet seems a little bit slow today, but hopefully we'll last till 11.
We'll last till 11. It just seems to be Tesla that is, maybe it wants you to go to it. Go to Tesla. Maybe that's what it means. Trade me. Trade me. Trade me.
Maybe it's maybe it's not the snow or the internet connection. Maybe it's just the I don't know what I want to call them, but the haunting people that are in my house.
The ghost that lives in your house.
The ghost. I don't know if it's one or two. The other day I was in my kitchen and the towel just started moving, and I thought, what do they want now? What do they want me to do?
Can we
wipe the counter?
Can we name your ghost?
I don't know if it's more than one.
Okay.
But it has a very weird laugh because I told you my mom's heard it in her hearing aids.
Can I name it Arbitrage?
Arbitrage. I'd like to think it's a woman.
Well, Arbitrage is a unisex name.
Okay. Okay. So
Arbitrage. Your ghost name is now Arbitrage.
They could be called Arbitrage.
It's a unisex name for sure.
I guess. I don't know who it is because it could be someone from long, long, long ago. But the woman who owned this house before me did die here. She was old.
Arbitrage passed away there.
Arbitrage. Rolled out of.
No, your house is new.
Well, the house that was here before that, they
house that got
down.
leveled. Yeah, the house that got leveled. I thought it was the next one with the dead.
Oh, yes, she did too. But the woman here, everyone here, I think, just rolled out of bed, fell.
Oh, yikes! That's
I don't know. I'm not sure exactly, but I do know there is a movie that was made in town about hauntings here in town, and I think it's called The Girl in the Second Story Window. I think it's a B movie, but they filmed that here about a house that was a brothel back in the old days and how many girls died in that house.
This show is taking a turn.
But this is okay. I guess this all started because
this show is taking a turn. But I think Arbitrage wants us to look at now the VIX because VIX is blinking. VIX and Tesla.
Well, okay, let's take a look at VIX because we put on, it was in the unusual option activity, and we put on this VIX trade, 1819 call spread. Now, with VIX up $1.70 and beyond our spread, this is only up $11. But that is, we only paid 23 cents for it. So it's almost 50%. And I hesitate to close a trade for $11, but I'm going to put in a 50% GTC for this because that's just...
Okay, so we know you're up above it, but you've got 39 days left in a debit spread. Whether this is VIX, whether it is Tesla, whether it is anything. When you've got a debit spread and you still have that much time left, you and I both know that those don't come out until the end.
It's the 1819. I'm curious to see.
Yeah, but there's still 39 days left.
Well, that's what I wanted to see. So in the 4-day, in this weekly, it's 65 cents instead of 30-something cents.
Yeah, in the weekly, 39 days later. So we're expecting it to stay up. I think we got to take our very small profit. Can we take a look at Walgreens Boots Alliance, Jenny Andrews?
Oh, that is. So some of the dogs are up today. Look at Walgreens Boots up $2 today.
Dun, dun,
so
dun,
that's
dun, 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 dun.
Dun, dun, dun. Walgreens rising like a phoenix. Walgreens Boots. Look at this. Who knew?
It's weird. Okay, so this was earnings. Delta Airlines is up huge because of earnings. What's going on with this market? Why can't Walgreens and Delta be holding up this market?
Well, they're coming for Delta's not a pig. I was going to say they're coming for the pigs because Walgreens sure has been. We had sold a strangle around our stock. So we have 100 shares of stock. We sold a strangle around it. Do we close the whole thing?
Yeah, we do.
Right. I think so. I think so.
We made some money back. It is so far away. If we want to get back into Walgreens Boots Alliance, you'd start by selling a put in the Feb. Close that whole thing.
Oh, I mean, if someone wanted to keep it, you would just roll your 10 call out and you get 21 cents to roll it to Feb. But I say we close the whole thing.
I say we close the whole thing. Yeah, let's get out of it.
Close position. Well, close it all.
On a day like today, you got to look at the silver lining, right?
Yeah. So let me see. There's nothing left in that put. And if we're closing the stock and the 10 call, it should close for 10 minus this 8 or 9 cents. Oh, and it's like the math works out perfectly, because if someone's wondering, the markets are all over the place. What if this market's wide? Where should I get filled? Well, if I've got a covered call stock and that 10 call, it should close for 10 minus the extrinsic value. And you see that's 9-10 cents. So we should be closing for about 9.90, 9.91.
Yes.
Maybe even a little less, because we have to buy that put. Ooh, I think we have to just close the covered call and the put separately. So I can close the stock and the call.
Okay. Yeah,
991, 990, whatever. That's fine. I'm flying blind on some of this. Did you see it blacked out my price?
Oh, look at you. You're doing great.
And I'll buy back this put.
I love having Frank have my text number, because he knows I can't be doing everything at once. Listen to this. So DBO on the floor named his son Andrew Richard, so his initials would be ARB, A-R-B.
That's funny.
That is funny. I like that, Frank.
That is funny. Okay, so we are out of part of it. Let me get out of this covered call portion of our Walgreens trade. And here's a situation where, yeah, we sold a strangle around it. It blew through the call. We would have been better off if we didn't sell that call. But the expected move was very low. The expected move was not 208. That's for sure.
I had very low expectations for Walgreens. Let me just put it that way. The expected move was low. My expectations were low as well. I was pleasantly surprised with the move today, but.
So I'll tell you, yesterday's close, it closed at 922. Okay, yeah. 922. The nine call, I believe it was the 9 call, because I went into Logan's account. Because Logan's worst performer last year was Walgreens Boots Alliance. He was accidentally long too much of it for his account. I didn't realize he was assigned on puts and a put spread and long too much Walgreens. Anyway, it was one of his biggest losers, and he doesn't have it this year. So we went into his account yesterday and didn't want the risk of having shares, but he just bought the 9 call at the end of the day, and it was only 67 cents.
Well, good for him, because then he made.
But I'm just saying, like, that means that the expected move was not very big if that at the money call was trading 67 cents.
Jenny, I think we got 50 cents. Is it Jajun?
No, it's Walgreens.
Oh, okay.
Why? Where I spoozed? Oh, down 92. It should.
Yeah, I'm trying to be cool. Trying to be cool. But we're only up $15 in it. It's holding some value, which is crazy.
It's kind of weird, right?
Mm-hmm.
That we should be out of this.
Well, now we're only down. We're down 95.
But I don't know. I don't like it, Liz. I don't like it.
But I don't think it's
like
going to
be the 6 point pop up and spooze, and we should be getting out.
You would think
99 to 9. It was 93.
It was 93, but I don't know where it was when we put it on. To be honest with you,
thought we were down maybe 97.
Yeah, I mean, but yeah. I know what you mean.
Well, this is a scenario where maybe we were better off doing a TP style, like NDX out of the money put spread. I don't know.
Yeah, and the liquidity is the issue there.
I know. I have a few things open, things to look at. Oh, and then this is one. Okay, so bonds. This morning I called Liz. She was not happy. Bonds were down to like in the 110 handle. The 110 handle.
Yeah, they were.
And so I had something pulled up, but I think it's gone now. Okay. You talked about throwing in the towel in bonds.
I'm throwing the towel in bonds.
I just want to show you something.
Not only did I talk about it, I'm doing it.
I'm going to give you a couple periods in history. Number one, I was long the yen, taking heat, threw the towel in yen, then it skyrocketed. No, that's true story. I can't forget about it. So I'm not.
That's why you're never throwing the towel in bonds. But bonds went down. Bonds can go lower. Like where is it? 107 is the lowest.
Okay, so for a blip, for like a very short blip in time in 2023, we had a move to this level, and a little lower. But then you go back in history, you want to go back to a period of time where bonds were around this level, and you're looking at 2008. 2008, you could see 112, 111, 112, even then 2007 to get into that 110 handle. But this is what I wanted to show you. You've got these low levels here, 2008, and then you want to see what happens after this. Wait for it. Do you see that move?
So yeah, because typically, Jenny, typically stocks down, bonds up. That's the inverse relationship. Now we're getting bonds down, stocks down.
And I'm pretty sure. So then you had this like skyrocket from 110 to 140. That happened in a matter of weeks, which was insane. And then we never got.
Did you see the Teams message that just popped through? Did you get the Teams message on your computer?
No.
Okay, the Teams message that just popped through, and I love that I can't stop it from coming live through. It was about the YouTube chat. We got 850 people on that YouTube chat right now, so we're giving you guys a big shout out. We love all 850 of you. Thank you very much.
Yes, thank you. Thank you.
That was the Teams message we just got. I don't know why they're reporting on how many people are in our YouTube chat.
So it's lovely. We like having everyone on Twitter, on YouTube. If you post something on YouTube, Frank the Great will share it with all of us on Twitter. And at some point, maybe we could figure out sharing YouTube. But right now, the cleanest way is for Frank to post it. He'll share it here on X. If there's some question or comment or something coming from our YouTube viewers. All right, Scott Sommer, Meta ladies, do you have a position in this?
We do not, and I do not.
I don't either, but we'll take a look. And what does Mikey say? No joke, we had a ghost in our house. I was once reaching for a cord behind our fish tank, and hand to God, the cord slowly moved over to where I could grab it. Maybe, Mikey, you have like a magnetic force in your body, and the cord came to you.
I love it.
No, I'm sure I've got some here in this house. But there's been quite a few incidents. Yeah.
My house is brand new and on a cornfield. I don't think I have any ghosts.
No, I think you're good.
Yeah.
I think you're good. And on a cornfield, not anymore. She doesn't have corn in the back of her yard. The cornfield was torn down.
Cornfield was torn down.
All right, Mikey. Liz, have you noticed I've been dropping some packets?
Oh my God, Mikey, you are the best.
Oh, look, Daniel's returned. Daniel, I haven't seen you in forever. He's returned.
Oh, wow.
And do you remember years ago, Daniel was the rat in the wheel, right? Where we would always say, like, you got to run faster when he was trying to make the markets go the way we wanted.
Yes. And he actually was at one of our live events on stage.
I know. Yeah. He won something.
Yeah.
Okay. So if you click the settings gear, then click general and then change the zoom level, and this will fix your dropping packets issue. And then you can change the zoom back. I'm going to do that, but maybe I should do that after the show. If you click the settings gear, then click general and change the zoom level. Oh, the zoom level. I know, because I'm zoomed in a little bit.
Yeah, change it. This is live TV. Let's do what Daniel said. Go ahead, do it. All
right, let's see if I can.
She's doing it while we're on Twitter, so we don't have to watch.
Click the settings gear. Click general. Okay, I know how to do this.
Okay, settings gear.
Hang on. Hold on.
She's got this. Daniel, to the rescue.
Settings.
Okay.
Right.
Yeah.
Got to go
general. You know how to change the zoom level.
I know how to do it. Zoom level. But what do it's 100%. Where do I
toggle
go?
that? Toggle it.
And then go back?
Yeah, then go back.
Is that what he said?
I don't know, but there you go. Problem solved.
Problem solved. Daniel to the rescue. What the heck? Why does that change it?
Hey, my question is, how does Daniel know that?
I don't know. This is why we love our viewers. That's amazing. Now it's not the ghost. Everyone can breathe a sigh of relief.
Arbitrage. Come on, come back. Arbitrage. That's funny. Okay. Oh, wait, can we look at Delta Airlines? Okay, are you done with your bond discussion? I'm sorry. Go back to your bond discussion.
Oh, no, that's all right. Okay, here's my discussion. This is 7 days to go. Defined risk. We're leaving it. I'm not giving up on the bonds. I'm not throwing in the towel because it's going to be just like the yen. And I'll show you that if you want to. It was painful. And
listen, I'm going to be a fair weather fan. When it starts to go up, I will jump in because if they're going to be a big move up, then I would like to participate in the move. But I think
not 6E, 6J. Okay, so 6J, and it was, I think, over the summer. Was it over the summer?
I don't know. I remember you complaining about this a lot.
Yes. Yeah. Oh, it had to be here. Where like maybe I got in here and then wrote it down to here and added and then wrote it down to here. And day,
I regret to inform you, you got in higher than that.
I don't even know, Liz, but all I know is this one green bar day when it popped up, I was like, I'm out. I'm never looking back. I'm out. And then right back up.
I know what I'm going to do with the bonds. I know exactly what I'm going to do with the bonds. I'm going to do the exact opposite of you. I'm getting out now. And then as soon as I get the pop, as soon as it pops up, I'm going to ride the wave.
I'm pretty sure Ilya said the same thing. He'll get back in when it starts going back up.
Yep, that's me. Ilya.
And I don't know if he said that. I could be putting words in his mouth, but I think I heard someone say that.
Ilya, we're here. We're here.
You and Liz. Okay, so we don't need to do anything with 6E or ZB. We can leave those for now. Scott, our international man of mystery, wanted us to look at Meta, which I don't have it's up today. Meta's up today.
You know what else is up too? Snap.
And DraftKings.
Yes. And guess what? I'm long all that, and it's not helping my account because the bonds are taking me down.
No. I a couple days into the year, and I said to Liz, I want to just close all. I want to hit close all. I think it was the 3rd day of January. Maybe it was the 4th day. I said, I just want to close all because this is a really good start to the year, and I just don't see this lasting. And I didn't close all, and now my P&L for the year is very little.
Well, at least you have a little.
Very little. All that work for what?
And you know what though? Hey, I'd rather get tested early than late.
I really liked how the year was going at the start. And it's funny, they were talking at work, and people like Tom and Tony who were thinking like, oh, the market's going to keep going down. And the younger generation, like Nikki and Mike, think buy the dip. And we've almost been converted to that camp, the camp of the younger generation, thinking buy the dip.
Well, no. I mean, I don't know. It's in certain things, yes. And there's certain long-term positions. Like I feel like I'm kind of converted into Tom, where I've got core positions now, which I didn't have core positions before. Before I was small enough where I was just trading in and trading out. Now I've got core positions, and in my core positions I stay with. I'm being smart about it. I'm not just buying the dip, but I might put a put in when things go down because vol goes up.
And I don't mind the down moves to get a boost in vol. I don't. And I'm not taking too much heat in these moves because my longs are to your point, we pick them, and it's not just everything. It's not like, oh, we are just long everything. My deltas are long, but it mostly comes from a handful of stocks.
And I did, so I'm trying to do 3 things at once because I was trying to push trades out. So I glanced at the chat because I only have 2 monitors, so I have to occasionally jump in there. And Sunflower, there is not a close all button. Jenny's making this up.
I wish there were, because I could have pushed it on January 4th, and I would have been.
If there were a close all button, it'd be a lot easier than having to open up each position and close it. Because otherwise it would hurt. Be like, oh, I gotta close this. Oh, I gotta close this. Instead of just hitting boop.
I had a tile guy here today because we were talking about redoing Lily's bathroom, and I was like, well, thanks for coming. If you would have been here on January 4th, I might have done it. But today, you came on a bad day.
Tile guys, I'm sure he totally understood what you're talking about. I love talking markets with the general pop because nobody looks at this like we do. No one even knows that the SPOOs are down. And don't look at this, Jenny, 107.
I know. I could see it.
Yeah.
I can see it. All right. Yeah. Delta. You mentioned Delta. Well, and let's go back to Meta. I don't want to forget about Meta. So we do not have a position in Meta. It's up today, which is kind of crazy. Does this make you feel a little bit safer getting into Meta? Market down 110, Meta's up. Do you think an iron condor? But we do have earnings coming. So
most things are going to have earnings now. And take a look at this. So Walgreens had earnings and it's up like crazy. Delta had earnings and it's up like crazy. The jobs numbers were great. Earnings are if anything is going to save this market, it's going to have to be earnings.
Right. And I'm looking forward to the big earnings coming up. I kind of liked the diagonals that we would do for earnings. Those were pretty good to us last season.
Yeah, they were. But last season, Jenny, correct me if I'm wrong. Last season, the moves were so big, either up or down. It wasn't like 9 times out of 10 when we are trading earnings, we say that the moves are the volatility is overstated and the moves are understated from the volatility perspective. I would argue last earnings, most things blew out of the water to the upside or out of the water to the downside.
We did have a lot of big movers. There were a lot of big movers.
Yeah.
So. So Meta, with earnings on the horizon, I don't know what I would do. I would wait.
Well, he was just asking if we have a position in it. Now, we can't do an earnings setup calendar, can we?
It's going to be way too expensive. Look at the expected move, $60.
And it's a $600 product.
So I don't even have to open them to look at this and say $60. Well, you know that at the money call is going to be $30. So, half of this. You've got $60 expected move. You're going to have $30 on the call, $30 on the put.
Yeah.
So that's $3,000.
Yeah, that's going to be expensive.
Mm-hmm. I mean, you're not going to get much for selling the 14-day, $500. It's expensive.
Yeah, that is expensive. No, we're going to probably wait till earnings, I think, right?
I think so. Unless someone wanted to play the meta wave. If I feel like, this is going to keep going up, my go-to lately is just buy a call. And I still have a lot of these on. I've been doing these weekly, buy a call spread and sell a put spread to cover a chunk of the cost of it. And most of them are okay. Most of them are not through their puts. I really don't think I have any of those in my account right now for next week that are through my puts.
So let me ask you a question. I know why you were doing, and this is just a discussion point. I'm not trying to pick holes into this, because when things are working, they're working. I would argue this is a move you would do when things are going up and up and up and up and up, and you want to participate in it. When things are going back and forth, then I'm just selling the put spread. Do you know what I'm saying? I'd rather that risk, because when you're getting the two-way movement, that's not when I would put on those. That's my go-to move. The diagonals and the buying a debit spread financed by a put spread are almost when things are going up and you want to participate in the up move, not when things are going back and forth. Otherwise, I just like selling puts because it gives you more room to be wrong. Put spreads or puts.
So I think my thought was when we were up and so many positions and bullish positions had made money, it was like, okay, take most of the risk off of those. But if you want to still keep a bullish position going, those are a really low risk way to keep a bullish position going. So they might have been already bullish positions, but then a low risk way to keep a bullish position going, because then you're only risking the $250, the width of that put spread, but you've got the $250 profit potential if it keeps going up.
It's a way to keep a bullish position going. It's almost not a starting position for something that is within I think that you articulated that very well. It's a way to keep a bullish position going without risking too much.
So if someone thought Meta's up today, what if it keeps going up and the market's not bringing it down, SPOO's down 100 and Meta's not down? That's a way to, if you think it's going to keep going up, it's a lower risk commitment to a way to keep a bullish position going.
Right. I do like that.
All right, we still have time. It's only 10:42. So I have a handful of things that we do need to address in the account, and I've got them open.
This is one of them, right?
Mm-hmm.
Okay.
Right. This Delta calendar, it blew through it. We had a roll in here, so we're not really down $94. What did we pay for this Delta calendar? Let me take a look.
65 cents or something? Don't you have the price in there? Trade price, $152.
No, that's a roll.
Okay.
So you see, right? I think, so we bought it for $1.29. Then we took in $1.23 credit. So we pretty much have it on for free. So it's a small winner. It's like a $50 winner.
Yeah, it's a $50 winner. Yeah. And it's a calendar, so you can't expect it to be a crazy win, you know?
This is honestly better than I thought. I forgot that we rolled it and we took in almost what we paid. So you see 129 debit, 123 credit. Now we'll get 55-cent credit. So it's about a $50 winner.
Okay, yeah, let's close it.
Okay. I'm going to give up a couple pennies just to get filled. Yeah, Daniel really solved my dropping packets problem.
It's so funny.
Who knew? Who knew?
Daniel for the win. Good job.
Oh, that's just Delta.
It's not Jejune because we shouldn't be filled on Jejune yet.
No, it's only
anything else expiring today? I know it's only January 10th, but every day is expiration day now.
I've got it. I've already vetted what we have going on that we have to deal with. Okay, so here's CCJ. This put is pretty deep in the money now. We have the short 55 put. It's trading 50. Do we just leave it as Feb, or would we ever add on a call, or do we just leave this?
Can you do me a favor? With something like this that's going through earnings, you basically have the covered call. So you have the covered call at the 55 level. It doesn't look that bad.
Okay, then we just leave it. It was just something that I wanted to bring up.
I was gonna say sometimes here's what I'll do when things are deep in the money, and that's $5. So it is deep, but this has $5 wide strike, so it's kind of deceiving. I was gonna say sometimes I'll switch it to a zebra if it's gonna save me capital, but I don't know if it will.
So the zebra is $962. So then you're just long CCJ. And if we buy this back, we get back $1,000. It's a wash. They're the same. So maybe we just leave it because there's still $1.50 to come out of that.
Yeah, we can leave that. There's $1.50.
Okay. All right, then we'll leave it. I don't know why this is open. I don't think we need to do anything with Disney. GDX, we're short the 35 put. It's up 40%, which I'm kind of surprised with 42 days to go, and it's only $1 out of the money. I'm surprised it's up 40%. I thought of maybe closing that.
What did we sell it for? 157?
Mm-hmm.
You could close that 40%. That's close. And we've had it on for 4 days.
So close this and keep an eye on GDX, and on a down day in gold, we can get back in.
You're funny. Down day in gold. I'm just kidding. It's the only things that are up is the metals. Wait, are we filling up? Jajune's only down 93, or Spoons are down 93. Is Jajune?
It's up like 10 to, no, it's only, because last time we were down 93, it's up $25.
Okay.
I mean, do you want to take it off? Because.
Well, let's leave it till the end of the show. We've got 10 minutes left.
Yeah. Okay. It's really bouncing around.
Yeah, it has been.
So close. I'm going to take it down to 3. See if we get $40 out of it. 3 is right there.
I know.
All right. That's working. PayPal is a bearish position. PayPal's been going down. We have a diagonal. I know it's longer term, but I feel like $100 on a PayPal diagonal is worth taking.
100% it is.
Okay. Close that.
Yeah. PayPal. Every time I see a fill, I get so excited, and it's not the right fill.
I know. SPX, that's our Jajune trade. Maybe that's all we had to do. I think that's all we had to do. And Tesla, it was flashing earlier. We thought of looking at it, but we do have earnings coming up.
Yeah, Tesla does have earnings. I'm surprised. Okay, so with Tesla, it's down $4, 1%, which is, it's a move. But Tesla's not. That's with the market down as much as it is. I'm surprised Tesla's only down $4.
I mean, the last time I looked at Tesla, it was up. It was up. I mean, it was $3.99, or it was up $4 today at some point.
It was up pre-market for sure. It was up pre-market, and then when everything opened, it went down.
I think like at 9 o'clock, I feel like it was up right before our show. I don't know. When I was going through our positions, I thought it was up.
Well, I don't know. I didn't relog in, so my positions were marking funny, so don't quote me on anything.
No, DraftKings was another one up. Yeah, look at the run DraftKings has been having this week.
Mm-hmm. Yeah.
Yeah. So that's been helpful.
Yeah, that has been, I mean, a little bit. Do we have DraftKings position in here? We do,
We
right?
do. We have, I think we just have a put in here. We have the 40 put.
Okay.
So it's in the money. And we probably just rolled.
Yeah, okay.
I'm going to just adjust a couple of these. 95-cent debit.
And then let's pop back into Twitter, too. There's a couple tweets that have been coming in.
Okay. So we're out of GDX, and I want to make sure we got a PayPal, too. And
we're out of PayPal. PayPal's filled and pushed.
What is this? Goldman Sachs. Oh, just a short call spread.
Yeah, we did that yesterday. On not yesterday, because we didn't trade yesterday. Wednesday. And what's your assumption?
Okay, I'm going to buy that back. All right, so into Twitter. I see.
Hold on, I'm pushing everything through.
Why not a durational trade where vol is staying bid in this name, in Delta? Okay, yeah, if vol's staying bid, Delta had a big move though today. So earnings are out. It's up $6, 57 rank. I would probably sell both sides. Like I wouldn't mind the 60.75 for $2.
I don't mind that at all. You're getting $2 and you're only using six and change to. It's a good return on capital.
Right. So $2. Yesterday we sold Strangle and Micron for, I think it was yesterday, sold Micron Strangle for $2. Now Delta Strangle for $2. Not bad.
And so this is what happens when volatility stays high. So when the market's down and vol is high, we typically we are selling things. This is a different market than we were in when everything was going straight up and you're putting on the debit spreads and a put spread to finance it. That's not the market we're in right now.
So you see, we put this on Wednesday because we weren't on yesterday. Even with the down move, Micron's not really taking a hit and the Strangle's a scratch from where we put it on.
Yeah, that's not bad.
Okay, so we're working that Delta Strangle. I'll take it down to 202. So thank you, Scott, for the trade idea.
Yeah, I love it.
Frank Walsh, and this is from YouTube, from InvestWise. At what point should I start to roll down my short puts if still not in the money, but getting very close to the strike price and still has more than 21 days? So if you're rolling down your puts, you're paying a debit to move those. I rarely do that. I have done it, but I rarely do it. What about you, Liz?
Okay, I'm sorry. I was pushing things out. So can you read that to me one more time?
So they're asking at what point do we start rolling down your puts? Meaning like here's an example. And I've done it.
Oh, no, I don't roll down puts.
I've done it once or twice, but rarely. So I have done it in IBIT where like let's say I had these 55 puts and I was short those and I did move them and I paid to move them just to give myself a little bit better footing. And then you pay to do it, but you've got yourself in a little bit better shape. But rarely do I pay to roll my puts.
I don't do that. I don't roll my puts down. I roll them up. I'll change a trade from an in the money put to something else.
Now, some people, if you've got, and how many days did he say till expiration? Very close to the strike price and still has more than 21 days. There's nothing wrong with moving them further out in time and adjusting them if that's going to make you feel better. If you're going to get a better strike, there's nothing wrong with buying them and back and moving them out in time. But we would rarely just pay and move them in that same cycle.
So you're right. I mean, I don't move them in that same cycle, but I will get them the heck out of the way. Meaning I've notoriously taken strikes that are at the money and moved them 2-3 months out in time because you can move them out and up if you're going out in time.
Like
not down, out and up.
Not up, out and down.
Out and down. I'm sorry, out and down. Giving yourself you're right, a better strike, not a worse strike, a better strike.
But if you're in Feb with 42 days, I personally wouldn't go further than Feb with 42 days. So if you're in Feb with 42 days, if you've got Feb and 40, like we looked at CCJ. So just for example, CCJ, we have this Feb put, it's in the money. Where did it go? Oh, it's it's here. Okay, we have this. Would we ever say, and I don't. This isn't necessary. This isn't I don't know that there's a cut and dry right or wrong. We said, oh, we'll just leave that. We could have bought it back and moved it down, paid, but definitely give ourselves better footing. Then we're just out of the money and we have $3 extra extrinsic value instead of $1.50.
But you also have no profit potential.
Well, but it's kind of like you're looking for it more of a longer duration if you want to just keep having puts out of the money, out of the money, out of the money. There are people that do it. The problem is if we bounce back up, well, then you make money on your new puts, but you're not making as much. You probably paid more debit than you collected originally.
Do you remember Karen the Super Trader? She would say, I'm getting it the heck out of the way, meaning that if things are getting tested, now I don't consider this getting tested because you're wrapped around the at the monies, right? Like you got the synthetic covered call that just out of the monies. So I don't consider this that problem. But when things are getting really, really tested, you can get it the heck out of the way. Go 3 months out. For me, sometimes I will do that. If it's a long-term position or one of my core positions or something that I don't mind holding, I want to get it out of the way. I would go to March. I would go where you're
still like here, and this is where it's a case by case. Like I looked at going to March, I'm keeping it's the same strike, I'm getting 63 cents, then I'm not going to March. It's almost like a case by case.
But this one's not being tested. CCJ, we opened it up. I get it's in the money, but it's one strike in the money. Do you know what I mean?
So there's a difference, right, in trading where my account, I sell puts and products I don't mind owning. So I don't mind leaving them if the put gets in the money. I don't mind leaving them and they become a synthetic covered call. And that's my style of trading. I only sell puts and products I don't mind getting long, and I could afford to get long if I had to. Where if someone's just trying to make their money selling SPY strangles, I think it's a little bit different of a story.
Oh, you're right. If you're using SPY strangles, it is a different story. And the getting the heck out of the way is a core position, meaning that you're going to have it for life anyway. Do you know what I mean?
And so then maybe I would move it. Maybe I would pay to move it and give yourself more room.
It
kind of depends on the position. It depends on the position.
I never pay to move my strike. But once again, to your point, Johnny, these are trading styles.
And so I every week I'm selling, at the money puts and IBIT, and I have paid to move them because I'm just on pretty much at the money, just trying to collect that weekly premium. And I have paid to move those. So it kind of depends. It's not something that I just want to keep going with a synthetic covered call. I'm just trying to get the weekly premium there. So it's a different mindset.
Yeah, I think it is. And I think it's a trading style. As long as you know what you're doing, keep doing it. As long as you're comfortable with it, and if it's working for you, keep doing it.
But if there's a trade that's making you uncomfortable, then I don't see, and you don't want to add on calls, because usually our answer to something like that is, well, that's when you add calls or roll down calls, or sometimes you'll see us in a position where, oh, the puts are in the money, let's add on a call for some extra premium. But if that's not your style, then, and it's making you nervous, there's nothing wrong with paying to move it. I don't think, if it's going to make you sleep better at night.
Well, the other thing that you used to do, which made me a little bit nervous, is you would take it, move it to the at the money, and double it.
And if I don't start with my full size, I will. Again, here I might do something like that, like buy this back for $6.40 and sell 2 here, and I'm not paying anything. But now I have 2 at $50 instead of 1 at $55, and it kind of depends on your size. And then when I get to my size, then I won't add anymore. I've learned my lesson on, you not keep adding, because then I'm not going to, when it gets to 45, sell 2 of my 50s and buy 4 and sell 4 45s. Like it can snowball into too big of a position, but it can be a strategy if you start small.
And I want to say something too, because Frank makes it very, 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 very good point. If you're uncomfortable in any, and he capitalizes the trade, close it out.
Sure. And I remember
so you can sleep.
We used to have this discussion on if there's a trade you don't like, close the trade, wait a few minutes, look back at that cycle, at that trade page, and would you put that trade back on? If you took it off and waited a few minutes just to get a clear head, would you put that trade back on? If you wouldn't put that trade back on, then put something else on.
The answer is always no.
Right. Yeah. Right.
Because you don't want it. You know what I mean?
Mm-hmm.
The answer is always no.
So let me just make sure we got to everyone's. Ladies, do we have a position in, that's Meta. And we answered that. And we put on the strangle in Delta. And we see that Mikey has ghosts in his house.
Yep.
Glad I'm not the only one, Mikey. Glad I'm not the only one.
I think we got to everybody on Twitter. The Jajun trade is down $50.
Is it?
Mm-hmm. 45. Yes.
What are we gonna do? I know we said it's 10:53.
We gotta close it.
It's 10:53. We have 7 minutes.
10:53. It's 10:58.
No, it's 10:53. What are you looking at?
It's 10:58.
Oh my God. Nick Batista's trying to get in. Do you see it now?
My clock was wrong. All right. 2:20, 2:10. That's not terrible.
It's 10:58. Nikki Batista is like teamsing us, being like, "Let me in."
Okay, here we go. Jajun.
Jajun.
What a way to end the week. Oh. All right, everybody out there, thanks for tuning in. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We will see you on Monday, everybody.
Bye, everybody. Have a good weekend.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How's it going, sir?
Things are going well. It is a nice little Friday here.
Mm-hmm.
Got some amazing football on deck tonight, college football, tomorrow, playoffs, Sunday, playoffs, Monday, playoffs. What else could you want? And then we've also got some Hawaiian golf, so we can pretend like we're there and not in this snowy, frozen tundra of Chicago.
Quite the sports weekend. Yeah, I was at bowling at the bowling league yesterday. Lots of Irishmen in the league. Were excited about the Fighting Irish last night. The win obviously was a big win for them. An interesting end to the game. So I know a lot of people that had a lot of money on that game, so I'm happy for them. But what's your picks for this weekend? Who do you like? Chargers, Ravens, Tampa Bay.
I would love that's the game that I'm going to be sad regardless, because I would love to see both of those teams advance, which is impossible. But yeah, I'm going with the public Chargers, Herbert McConkey smash, and I don't think Baltimore's going to lose to Pittsburgh. Pittsburgh just has no offense like at all. So. And yeah, I was already on Herbert and McConkey, that stack. But Tom is apparently going to the game in Texas. So that was the icing on the cake I needed. And his son's a Chargers fan. So I was like, okay, then this just confirms that Herbert's going to throw for 400 yards, 5 touchdowns, and it's going to be an onslaught.
Mm-hmm. Agreed.
But we'll see. But yeah, I haven't thought about Sunday yet. I can only do one day at a time.
It's fair. There's a lot going on, so I don't blame you.
My secret pick is DJ Chark. I have a weird feeling about DJ Chark this weekend.
He did nothing all year. He's been non-existent.
Exactly. That's my point. But I looked at the snap counts. He's on the field just as much as everyone else now. He's ramped up to be basically the wide receiver 3, and nobody's going to play him.
See, I thought you were going to go Deontay Johnson or something like that. That was going to be your value dart throw.
I'm trying to be less public for tomorrow.
You think that's going to be public?
Deontay Johnson?
Yeah.
Yeah. I think Deontay Johnson, Wallace will be super owned. The only way you get different, I think, is with Nelson Aguilar, DJ Chark, and Davis from Chargers. Nelson Aguilar might be the slate breaker because he's back too. It's going to be crazy.
All right. Well, if you don't see Mike on Monday, you know that he binked a milli or something like that. So we'll see. E-mini S&P 500 futures right now, we're at the lows of the session, down 111 points here. We've had a wild ride. The overnight session, we were down like 30 or 40. They rallied kind of back, and then you had the jobs number come out earlier this morning, and they were down 60, 70 points into that. And we've just continued to sell off. Yields have gone to the moon. You have bonds basically in the dumps. It's not a fun market here for anybody playing to the upside. NASDAQ down 450, the Dow down 750, and the Russell down 64. So the Russell really taking it on the chin. It's basically reversed most of the last year movement. We're basically back to the lows here. The NASDAQ and the Russell, the weakest of the group today. Oil also catching a bid, /CL up $2.32. It was actually higher this morning. We got up to 77.86. That was the high of the session. So definitely seeing some volatility there. And speaking of volatility, you got volatility futures up $1.41 right now, 1938. High of the day right now. No really contraction at all throughout the session today. It's stayed bid throughout. Bonds down 28 ticks. They cannot catch an up move. It seems impossible for bonds to go up. You've got gold and silver both taking a leg higher. Gold's up $30, silver up 34 cents. And then Bitcoin was up $2 or $3 in the overnight, or $2 or $3,000 in the overnight session. It's only up 1,800 here on the futures. Spots actually down on the session, which is starting at midnight 1201 today, but it has had definitely some risk on type sentiment over the last couple days here.
Yep. And volatility is flat pretty much across the entire curve, which is interesting. I just updated my volatility watch list for 2025 symbols. I tweeted out a picture of all the codes. So if you want to get into that, it takes like 2 minutes.
Yes. When you do it, so codes. So when you my contract monthly codes. Okay. So here, like on my volatility watch list on the left side here. So this is my own. You can make your own list if you click on the gear from the watch list. You can make your own list if you don't already have one, but I have one here. So when you're typing it in, so I have the January, I have this one, which is updating to the front contract, but I add in the January, February, and then the March as well here. If you wanted to add more, you would type in the actual symbol that you want in there. So you go /VXJ25, type that in, and you can sort it however you want and put them in however you want. But this is how you can get the curve, or at least somewhat the curve on the platform of volatility here. You just type in the specific symbol. You can see here they're all in the mid 19 handle, which is what Mikey's saying. They've all kind of flattened out. There's no real contango or backwardation here, which is not a shock considering the move that we've seen in the last 2 weeks or so.
Yeah. And the last 2 weeks have been pretty wild. I mean, very unfortunate to see what's happening on the West Coast.
Yeah.
And, you never know what kind of catalyst could send the market tumbling, but they always happen at some point.
I don't know if that's the market mover. I think it's, at least right now, getting blamed more on the bond market and just where rates are currently. I think that's kind of what's spooking the market. But I agree. You never know when some crazy event is going to happen, or when volatility actually does get realized, which we are getting some today.
Yeah. Yep. With that said, though, I've been buying some dips. I'm staying true to my until proven otherwise theory.
The reason being simply buying the dip on the follow page here.
Yes, buying the dip. But yeah, the market for the past couple of years has been very V bottom, very dip buying, and you can see it in the charts. So I'm just kind of sticking with that, staying small though, still having a short premium component to reduce cost basis, et cetera. But I went to 3 of the products that I highlighted for my 2025 bullish trades, which were Costco, Microsoft, AMD, Netflix, and IBIT. So I'm already in IBIT, leaning bullish. That's our year-long trade in this account here. And then Netflix, I'm going to wait till earnings because they're coming around the corner here. But I bought a call diagonal spread in AMD, bought the 120, 130 long March short Feb for $5. So 10 points wide for $5. Plenty of room to the upside if we get a reversal here. I bought a 15-point wide in Microsoft. So I bought the 420, shorted the 435 long March short Feb for $10.65. And then I bought a calendar spread in Costco at the 1,000 strike. So I bought the long March 1,000 call, short the 1,000 call for Feb for $9.40. Because Costco is just too expensive to do diagonal spreads, but that'll still print if you get a reversal back to 1,000 or anywhere near it.
I like it.
A couple of dip buys.
I too cleaned up a couple positions this morning. Well, I added to my micro euro long here, adding another contract. I've had some nice little scalping in there. You've had some big moves in both directions in the euro, so we're back to near the lows. Figure I'd get back in. I also closed out of a gold position. I see you did the exact same thing, basically. I had a call diagonal spread that pretty much got bailed out with today or the last 2 days of movement in the gold in the metals. So I closed out just this naked long option that I had. So took a small little win on that, but nothing. It was more about just like closing the position, scratching it, and then I can start something fresh either today or sometime in the future. I also rolled my DraftKings strangle. I added upside play in NVIDIA into this dip, and then I bought in the risk on my ARKK position. It's one that I think we started with a strangle, went significantly lower. I rolled down. I frozen.
No, I see you.
Oh, you see me? I rolled down on the calls. I rolled out in time to a straddle, like buying the guts, not really selling the wings, but selling out a out of the money strangle. I've had to do multiple rolls there, and then I have ARK there. That's why I was like, I thought I was frozen because the chart wasn't updating. ARKK. So I've been managing this position. The buying power on this position has gone from like 1,000 to 2,500 or almost $3,000. So I just went in and all I did was buy the wings on this at the money straddle. So we're getting a nice little move lower, which is exactly what I need. I need to get closer to 55. I bought the 45-65 strangle. I did it at $1.12. This makes it a 10-point wide iron fly, and so that strangle hasn't really moved. But it makes it a 10-point wide spread. I've collected about $3 net credit on the position, which means I'm only using like $500 or $600 on this position versus the $2,000 that I was using or $2,500 that I was using when it was naked. So just freeing up some capital so I have some more, bullets in the chamber.
There you go. And yeah, I did the same thing. I closed my GLD. I had a remaining long call at 250.
Me too.
Closed that. It was only 7 days left, so I retained $120 of value. 7 days left is with a long option is just too volatile. And then SLV did the same thing. I had the 27.29 call zebra. That was a $100 loser. I think gold was like a $200 or $300 loser, but retained a total value of $300 between the two of those spreads. So we live to fight another day. And yes. Very, very much open to new trade ideas if we've got any in the chat.
I know, Mike, you'll be looking to buy the dip.
Absolutely. I am staying steadfast with the buy the dip crew until proven otherwise. Volatility curve flattening out could be proven otherwise if we go into backwardation. But we'll see. We'll see. All right, popping over to the YouTube chat now. If you want to join us there, we're streaming live. Just come over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. UVXY put debit spread.
Ooh. Oh, trying to short volatility. Sure. Yeah, I mean you're getting a pop today, which is nice. I typically look to do these on a short duration, so I would probably do like the January monthly. I guess you could go into February. It's just going to be a very slow moving trade. If you're going into February, I might do just like a meteor in the money position, something like the 30-20. I mean, just by looking at this, you could see, it's expensive to be short volatility in UVXY, and that's because, when you look at the chart, it goes down. And so I think if you're looking for a short term, like if you think in the middle of next week we're back down to the 18 handle in volatility, you should be using the January expiration.
Yeah.
Get more of a 50-50 type shot. You can do like a little 26-22 type thing.
Mm-hmm.
Should I put that on a little short term?
I like it. I was also looking at SVXY.
All right. I'm in. I'm short some volatility with you as well.
There you go. I'm looking at SVXY.
Okay.
Like something like selling a 45-40 put spread. It's just these markets are so wide.
Yeah. 20 cents wide.
Yeah. But yeah, SPXY is another product where it's going to dip when volatility is popping and it'll rise as volatility is collapsing. So I really like this product for just like longer term bullish strategies. If you see a big pop in volatility, like you're kind of seeing now. But if you go back to like end of July, August, it went from 60 all the way down to 40 in that Japanese yen unwind, and then it popped right back up. So
yes.
SPXY, I think, is a much higher probability way of playing a volatility collapse after the fact.
I have to give a quick shout out because we're doing a little career fair in my hometown of Glencoe at Central School, which was my grade school, and we got some peeps watching right now. So shout out to Glencoe, shout out to Central School. Love you. Hopefully see you in the office soon. Couple years, 10 years.
There you go. You know what I just learned today, or not today, but recently I learned that the elementary school I went to, which was 1st to 6th grade, is now a 6th grade to 8th grade school.
Ah.
Very interesting.
How does that make you feel? Does it make
I don't know.
you feel?
And they got rid of the junior high I went to.
Really?
Yeah.
Wow, that's sad.
So they basically merged and did a whole thing, and now you can't go through the same process I went through when I was a kid. It's kind of wild.
That's sad. That's your childhood, your memories are gone.
Yeah. Question of the day. If you win a trade 60%, if you get 60% profit within a few days on a 52-day vertical put spread, do you open another one as there's still 42 days to go? You can. You're just moving your risk up. If you're like closing that one and then opening a new one.
Yeah.
Totally can. Or you can just let that one decay a little bit more, or just close it, wait for a reversal of that move, something like that. I personally don't like rolling up spreads into that. I think it's a little different if it was a naked short put where you just wanted to have bullish exposure for an entire year or something like that, where it matters less if you get whipsawed because you're going to roll that forever. But yeah, that's my thought.
Yeah, I would say if you get that amount of profit that quickly, you not only got the direction correct, but you probably got a contraction in volatility, because spreads just don't move 60% in just a couple days without both those things happening in your favor. And so for that big of a win, I would say, you know what, the capital is probably more efficiently used somewhere else, and I would go look for something higher volatility and go into that underlying. And then maybe if you get, a reversion back to where your original position started, then you can get back into it, at similar prices. So that's another thing you could consider.
Leroy Jenkins asking about the new positions tab right next to closed. There's a P&L button now. So yeah, this was actually an old school thing we used to have a while back that has resurfaced. But yeah, it is ultimately a accumulation of all the positions that are in your portfolio. You can adjust them. So if you notice when you click the P&L button, you'll see a check mark.
Where is this?
on the positions tab.
Does this show for everybody out there? I don't think it does the way I'm using Teams. Okay.
Yeah, the pop-up doesn't show, but basically you'll see a graph of all your positions, but along the left side there's a bunch of check marks. So you can uncheck and check whatever you want to see. Just be mindful of the fact that the pop-up that shows the days forward is looking at the expiration that is most accounted for in your position. So like for me, when I click that, my days forward is 70 days. So it's looking at the March cycle. If I uncheck things and I check different things, then the days forward is different. So just keep that in mind. But yeah, a cool way to visualize theoretical beta weighted deltas based on SPY. Did you adjust your SPX 15-point wide iron condor?
I thought I had a butterfly. I have this free butterfly in this account. I don't. I think I did one in my Johnny Trader account, but no, I have not done it. So for my Johnny Trader account, I have the 5625, 5610, and we can actually pull this up from the follow-up page. SPX. Let's see. So I did this at 5:30. It was sort of a bigger position than what I typically put on. It's a somewhat core position. So I have the 5625, 5610 put spread, the 5150, 5165 call spread. It's up about $100, which is nice, or 70, 80 cents, depending on where we get marked here. 42 days to go till expiration, so not a rush to really do anything here. It actually leans slightly long at this point. Price-wise, I mean, the spreads themselves don't have a ton of delta because it's a 15-point wide spread. But I'm okay with leaning a little long here, so I'm not gonna touch this now or in the near future unless we have some sort of crazy move to the downside.
Cool. Wells Fargo is confirmed before the bell on January 15th. So yeah, when you're looking at the platform, if you see a line without a little bell next to it, that means that it's estimated. So you might January 10th estimation, and then it changed to the January 15th confirmation. So now you see the little bell point, just January 15th before the market opens. But yeah, that is when the earnings will be.
Yeah, the banks start middle of next week, so back into earnings season. Another one is back on the horizon. It's pretty wild. Things go so quick nowadays.
Mm-hmm. Loaded up on IBIT put spreads yesterday at the 52 strike. Nice. Yeah, that'll be a fun one. I'm very excited for that. The year-long IBIT trade. See where it's at. CCI on the lows, dividend around 7%. I like shares here, but selling puts should include the dividend too. 80 strike if doing that.
Which stock was it? I'm sorry, I missed that.
CCI.
CCI. Okay, the 80 strike puts.
Mm-hmm.
I don't know. Does this thing trade very much? Where are we? Yeah, it's gotten killed over the last couple months here, but when you look at volume and open interest, it's not one that's super enticing in my opinion. Just when you look at liquidity, it's not the most liquid.
Yeah. Yeah, it's not too, the markets aren't too great, but yeah, if you're willing to take that risk, then I think it's fine.
Mm-hmm. Hey, you're at a 52-week low right now, so there hasn't been a better time to sell puts relative to the last 52 weeks. That's how I would look at this.
True. But yeah, definitely high implied volatility there.
Yeah. I don't know anything about this company either, so.
SOXL, short put at 25.
SOXL. This is the leveraged, right? It's I think it's semis. I don't know what the multiple is here.
3x.
3x. So this is a big boy one. So, I mean, this, for the most part, when I look at these sort of products, and I don't trade them in these accounts very often because they're really very directional, typically short-term trades. So I usually look to do just long calls, long puts as just a leverage play. I think that's really the way to do it. I guess you could do some sort of like diagonal spread, like if you wanted to do like a February Jan, maybe. Can't really do Jan. It's hard. It's hard to go out to May and trade this. And selling the puts, I guess you could sell like the 25 strike puts. Just a capital intensive trade. Buy the 15s. I mean, it's certainly a leveraged way. Should I do this? $2. I mean, like, I'd almost rather trade SMH straight up, because these options, I mean, they have the multiple, like the 3x multiple baked into the value of it. I'd almost rather sell an out of the money put spread in SMH and collect basically the same amount of credit. 235, 225 maybe. Where's 235? Down here, basically new lows. Or do maybe a little diagonal spread here, March, February.
Certainly could.
250, 260. I'm going to go with the put spread. I'm going to put a little bit less risk on the table. Same amount of capital being used, but my risk is further out of the money here versus the call diagonal, where you kind of need some sort of directional move for your trade to work out. So I'm just going to do it. I mean, I'm sure this is right around the 30 delta too. Yeah. 30 delta for the short, go 10 points wide, collect, roughly 1/3 or a little bit less, 242. There we go. We're in.
Boom.
Add it to my NVIDIA call diagonal spread. I'm in both.
You're levering up.
Yes.
Is SVOL a tamer way to short volatility? So SVOL appears to be a fund that shorts volatility consistently, and then they use a portion of the premium to buy VIX calls to hedge.
Okay. Is it it's not like a multiplier, right? It's just straight. It's not like a 1.5x type thing.
I think it's straight. I'm not sure. Oh, actually, it looks like 1/5 to 3/10 the inverse of the performance of the VIX.
Yeah, I mean, that sounds like a drag. It seems like it's not a good or bad. It just seems like a nothing product. Like, I don't know.
I mean, so in theory, this should be grinding higher. If this is short volatility futures and they're hedging effectively with VIX calls, this should still be grinding higher, because VIX, if the VIX is in contango, or if the VIX futures are in contango, a product like this should grind higher. Like SPXY generally grinds higher until there's a big pop in volatility. So I would just use SPXY personally.
Yeah. I will have to look into this more. I mean, this seems like something that just, and you could see it in the price action. Like, it hasn't gone really anywhere. I mean, I guess it's down 10%, but because it's doing both. Like it's tail hedging volatility, but the core of the position is short volatility. So it's almost playing for the tail end of volatility. As long as volatility stays between, like, let's say 15 and 25, this thing basically goes nowhere. If volatility goes down to 10, this thing goes down, significantly. If volatility goes to 60, this thing probably explodes higher because you have the calls. But I would have to see what the makeup is of calls versus short futures to really make some. Overall, I just think it's a no product.
Yeah,
but certainly. Yeah, go on.
I would agree, just because in the biggest pop of volatility we saw last year, at the beginning of August, end of July, beginning of August, this thing went from 70 to 20. If they were hedging with VIX calls in a way where if VIX went from 15 to 30, they would actually be profitable, this thing shouldn't have moved.
Yeah.
Right. But it got crushed from August. In August, it was 50. And then a couple days later, during the vol expansion with the Japanese yen unwind, it went from 50 to 20. So I don't know. I would rather just stick with a more simple product like SVXY that still got crushed during that vol sell-off, but it has rebounded. Where SVOL hasn't really rebounded. It's kind of flat.
Yeah, and you could see it in the options. I mean, the 20 strike. So we're at 2027, and we're looking 70 days out in time. I mean, the straddle trades at 87 cents. So that's a 5% move in either direction into what has been a pop in volatility today. And if it's mostly short volatility, I don't know. This one's a mess, in my opinion. So don't watch it. Would be my suggestion.
Yeah. But yeah, SVXY is my favorite product to place a bullish trade if you're playing for a vol crash.
Yes. Is the bottom in?
It might be. I don't know. If we keep bouncing from here.
I know. 100-point down move. That's a big move. I mean, we've gone from. I have this conversation with my dad every time Tom poo-poos our generation as if, we haven't seen anything like, COVID, that was no big deal. The Japanese yen issue, VIXpiration, when we watched all the volatility products go to zero. We've seen all sorts of things. We started right in the 08 crash. Like that was basically, when we became men and started working. We've had our fair share of things that we've lived through, but when Tom poo-poos us and says that we just always go, buy the dip, blah, blah, blah. I look at this sort of chart and just the market as a whole, and you have to when Tom says, oh, we're going much lower, like how much lower are you playing for and how long are you willing to sit with that assumption? Like we've come down 10%-ish from the highs. That's a good sell-off. Like maybe you don't put 100% in the buy the dip right this second, but you should be nibbling on long positions. I was talking to Vecchio about this. Is like, yeah, sure, we can go lower and we can continue lower, but if I tell you just in a vacuum that everything's down 10%, you want to buy some of anything product you're looking at. If there's a 10% sale at Target, you're going to want to buy something. Like that's just what it is. So I don't know. That's my rant on markets.
Yeah.
You can't just sit. You can't just sit. Like Tom's like, oh, I can't sell puts there. Like I want him to tell me like what price he thinks is fair. Price is price. Like
I agree with you. I think there's just we're just in a different market. We're in a much faster market. Like maybe 20 years ago, COVID would have happened and we would have seen a slow trickle down, or a violent trickle down, and then it would have taken a longer time to get back up to where we were. But I just feel like we're in a market where you will see violent sell-offs, and we'll get down to levels that are minus 20%, minus 30%, but they're instantly bought up. There's no downward trend that just continues for an entire year anymore. It's just like a crash and then a chop, and then we go back up from there. But I don't know. Again, prove me wrong that this dip will not be bought. Even when it is, I'm still trading small, keeping a lot of cash on the side. Like you're saying, I'm not going crazy with this, but like prove to me that this dip will not be bought. But at least to a small degree.
Yeah.
And I know we're poo-pooing Tom a little bit here, but someone in the chat.
Is everybody getting mad that I poo-pooed him?
No, someone in the chat asked, does Tom leave a game early, 10 minutes early, so he can be the first out of the parking lot?
1,000%.
No, I've gone to Bulls games with Tom, and he stays the whole game. So I don't think so.
Yeah.
I guess I would say if it's like a blowout, like if the Chargers just destroy Houston or the other way around, then yeah, I'm sure they leave early, but I think they'll stay till the end. But we'll get confirmation. We'll get some Instagram confirmation. How about that?
Mm-hmm.
Got tickets to the Chicago show in March. Excited to see the show. Very nice.
Beautiful.
We will be there.
Yes.
Because we are hosting it.
Yes.
So, yeah, it'll be fun. Yeah. You should be most excited to see the coffee shop, obviously. Forget about the show.
I was in that area yesterday, and I had some time to kill, and I was like, oh my God, Bad Coffee is right around the corner from here. I'm going to stop by, because I haven't been there on like an actual open day. I was there for our recording at Live Bash, and I've been in there a couple times, but I'd never been to see it in its element, on a morning. So I walk in there, and sitting there are Tom and Scott having a powwow, just casually there. So I got a free piece of toast out of it and a cold brew. It was nice. They took care of me. It was very good. Even though
what was your toast selection?
It was actually very good. I had an avocado toast with a scrambled egg on top. It's really nice.
Love it.
Yeah, it's delicious.
Love to see it.
Yes.
All right. Meta. I've got a Meta call butterfly trade.
Okay.
The 595, 600, 605 for Feb. Just really need to close it. Should I wait or close it? This trade's not going to really move at all until Feb expiration.
Equal with 5 by 5?
Yeah. Like this will trade for 20 cents until February 21st.
Yes.
Just because it's too narrow relative to the stock price. You can see the deltas are virtually the same. The values are virtually the same. So there's nothing wrong with it, really. It's just like it's a cheap shot.
It's a lottery ticket.
It's a very cheap shot because you literally have to pin 600 on February 21st for this to have any value.
Yes. Yes.
For these things to move more effectively, they need to be much wider relative to the stock price. So if this was a 50-point wide butterfly, that's a different story.
Yes, and you could see it in the pop. The probability of profit is 4%, and that's because obviously it's very cheap, and just because it's very improbable to pin here at expiration, given the option market right now. So the option market is pricing in 42 days of price action. Anytime you have a spread, whether it be a butterfly or a short put spread or a short call spread, if it's inside the expected move, it's going to be trading somewhere between, somewhere around 50% of the width. So your spreads, when you're short one and long one, this trade's basically at zero because it's such a low probability of hitting. It's the same reason why if you were short a call spread and it's in the money here, it still hasn't moved all that much. It's still worth, around half the width of the spread, a little bit more because you're in the money, but it's because it's still a 50-50 shot. Even though it's 20 or 30 points in the money, it's still a 50-50 shot.
Yep. So yeah, it's 20 cents. We would just hold it unless you want to get rid of the position, but nothing too crazy. Nothing too. There's no assignment risk or anything like that either. Like you'll be fine. And that's because there's thousands of dollars of extrinsic value, which offsets assignment risk.
Yes.
Will Baidu ever rally again?
Probably not. Once Tom capitulates all these China stocks, then they'll rally.
Pavel's stuck on a short put since September.
Baidu?
Yeah, it's a tough one. Yeah, that's a tough one for sure. But depending on where the short put is, there's still extrinsic value in these options. Like even if you've rolled out to like February or something, you're at the 90 strike or 95 or 100, there's still 50 cents of extrinsic value. Like you're still getting some decay. But yeah, you need to see a rally here. I haven't traded these stocks in many years.
Hey, lucky you. I mean, they are death trap. They're death by paper cuts.
I mean, they're super volatile. They can be good trading vehicles, but I don't know. I just unsubscribe to the political notion of like something you just have, like, you wake up one day and you're like, why is Baidu down 20%? And it's like some weird thing that's happened. I feel like it happens consistently.
Yes.
What's Nick's year-long trade? SoFi, baby.
SoFi, yes. So I have so the other day, was this yesterday? My days are blending in. I think it was yesterday. Yes. Not yesterday, Wednesday. All these days off.
Markets were closed.
The days off in the middle of the week have been just melting my brain. I don't know what day it is. The markets are everything's confusing me. So on Wednesday, I actually rolled down. So we started this position long the stock, and then I did a covered strangle. So the stock covers the risk to the upside, that short call that you have right at that was out of the money. It's covered by the long stock. The extra put uses additional capital. It was very small amount, $200 or $300, because SoFi is such a low price product. But it has relatively high implied volatility. So I was getting paid for that premium. I think we sold it originally at like $1 or something like that, like $1 and change, $1.50-ish for the strangle. And so I have the ability to sell an extra call. So I'm naked a put, which is naked, and then the covered call is covered. So I have an extra call to sell. So I ended up selling. I actually did a roll down and added a contract. So I rolled from the 17 strike to the 16 strike, and I added a second contract, and I did that at $1.23. So I've captured about 20 cents out of that, but it didn't use additional buying power because I had that naked put already. So this core position, I'm going to keep it at 4 legs, long stock, short, or at up to 4 legs, long stock, short put, and then the ability to sell 2 calls. So I can either sell them at the same strike, scalp out of them. I have 1 covered to the upside. It's going to be a very fun, dynamic trade. I hope we have some big movements in both directions in SoFi. Currently, I'm down about 86 cents on the trade so far.
I like it.
But I'm certainly leaning long now.
Going back to SVOL, we were missing a piece of information. They pay a 15% dividend. So that changes things a little bit, but still, I'm just looking at the move in August when it went from 50 to 20. Or no, it was before then. What am I looking at?
Yeah, I don't know where. Ultimately, it is clearly not something that you can trade options on. Is the bottom line.
Yeah.
So it's just there's not much to this here. It's either you buy it or you sell it. You're trading the shares. They don't trade very much. share volume. You got 1 million shares today, which is probably on the higher end of when it trades because you're actually seeing some movement and volatility. The options are basically non-existent and not untradeable. So, you can't even do covered calls here if you wanted to, or covered puts if you play the short side. It's just a scalping vehicle, or I guess if you're buying it for dividend purposes, ultimately I have to look into it more. I just don't know enough about the product to really make a assessment on it, but it looks like it's a just not something that's interesting to me.
I was looking at a chart of SOXL during that whole period.
I was wondering what you were talking about when you were saying 15 to 20. I was like, this thing has stayed between like 17 and 22 for the last year.
Yeah. So what I would do is I would just compare, like go through these different time frames where volatility really moved, and just compare SVOL if you were to hold 100 shares of SVOL versus holding 100 shares of SVXY. I think that's an easy comparison because SVXY is much cleaner, and it is an inverse volatility product in a similar way. So yeah, I would just compare SVOL versus SVXY and see which one comes out on top. Like last year, because last year we had some vol pops, but it was mostly vol contraction. Do you have an SPX put broken wing butterfly for Jan?
Yeah, I bought in the risk. I have this. I think I did it at a net like 80 cent. It hasn't really moved because it's a relatively tight spread, but I put it on the 31st, right at the end of the year, for $3. I think this might have been in the cherry picks. I'm not totally sure, but I had a 25 by 50 broken wing butterfly. So I was using about $2,500 in cash to hold the position. It's trading at $9 now, so it's a tough one now. But I ended up buying in the risk on the 3rd. So I don't know will the view market snapshots show up if I pull that up. Do you see that, Mikey? No. Never mind. So when I started the position, we were at 1915, and then I bought in the risk at 58.95. Volatility had come in though, and so I bought that in at 380, which gives me a net value of this 50-point wide butterfly at 80 cent debit. It's basically trading at 80 cents. Not going to move all that much here in the short term.
Yeah, it's still wider than like the 5-point wide we were looking at, but yeah, you got to hold this closer to expiration. All these trades you got to hold closer to expiration ultimately.
Yeah. Yes. This is a lottery ticket in the purest sense of the word, and it's cash secured. So it's not something like there's no management here with this position as it is. There's nothing else to do here. It's just like if we're sitting around 5,700 a week of expiration, this might work for, $3, $4, $5 value. Yeah. So we'll see.
Switching to AMD. How about a 105 short put 42 days out? Crushed the last few days. You can get about 330 credit right now, earnings over 3 weeks out. Yeah, so you're getting the earnings premium in this short put. It'll still move directionally though. As you can see today, this option, if you look at the net change, is up $1.40. So this option has doubled in price into today's move. So if you get a $6 rally on Monday or something like that, this option will lose $1.50 or so. But yeah, I think it's totally fine. I went with the diagonal spread route just because into moves like this that are so violent, I would rather just have defined risk. And 50% IV is decent, but it's not anything crazy. But no, if you want to take the shares at 105 with a basis near 100, I think this is a totally fine strategy.
Yeah, I have enough semiconductor. I did the SMH just now. I did the NVIDIA one, so I'm fully loaded on the semis. But again, I don't hate the idea. I did a naked put in my Johnny Trader account at the 110 strike at $3.20. It's currently marked at like $5. So I have your AMD long in various ways. So I hope it works for you because that'll work for me.
MicroStrategy wants to vote to increase their common and preferred shares in the trillions. How does that affect the stock price?
Oh, we'll when we have more information, that would be, we'll be able to make an educated guess. I don't think they'll be able to go into the trillions of shares, but essentially, what would happen would be it would be a reverse stock split. I mean, you would basically, if you issue X amount of shares, the value of MicroStrategy doesn't change, but the value per share will change. So you'll have more shares. Like if you owned 100 shares right now, it might be 1,000 shares at $30.
Yeah.
Like it's just a reverse split.
Yeah.
Assuming there's no like dilution aspect. But again, we're, got to wait till it actually happens.
And they've already split once. They split last year. Like this was trading at 400 when it rallied to 2,000, and then they split or whatever it was to 1,000. So this is from last year. This is a $3,000 product, but they understand that if they want to get more activity in here, you got to keep the price manageable.
Yeah.
My brother actually did a long tweet. I retweeted it on my Twitter account. But he did an example of the gamma squeeze, just like a mathematical example of a gamma squeeze using MicroStrategy. I thought it was interesting if you want to check it out. But MicroStrategy it's basically a vol product of Bitcoin. Like when Bitcoin rips higher in a meaningful way, I'm not talking like this $3,000 rally today is not a meaningful rally. I'm talking 10K move, another 10K move, another 10K move. That's when you're going to see MicroStrategy go from 300 to 600. Like that's just how it operates. But then you can see it go the opposite way too, like you saw in this chart. But yeah, if you're looking for a really leveraged, volatile way to expose yourself to Bitcoin, MicroStrategy is certainly one of them.
Yeah.
But that's kind of why we're in IBIT. We wanted to get smaller. We wanted to have less leverage. We wanted to just have a lot of exposure to pure implied volatility of Bitcoin's price movement. And IBIT was our perfect little product for that.
Yes.
How low can bonds go? Let's get long, lol.
Seriously, I think I still have my TLT. I did this. Who gave us this? I don't know. But I had a Zebra that in something with 17% implied volatility, you don't expect a Zebra to be basically worthless in the span of like 2 weeks.
Yeah.
And we are at that point. Maybe I just buy back this call and just be long bonds here.
I've got the 8890 call Zebra.
Yeah, I have that same thing. I think I'm going to buy back the 90 strike call and then just be long out of the money calls and bonds. But agreed. How low can they go? I mean, yields have just been skyrocketing. So,
Crazy. Stock Messiah is looking at Oclo 25 long call in March or Feb, and then selling stuff against it if you're scared.
Don't call me scared. We're going February
or March. Looks like they have earnings coming up at some point.
But don't they like not have earnings? Isn't it like not functional?
I don't know. I'm seeing a Feb 13 earnings.
No, I meant like actually like having revenue. I meant like the actual act of earning money via business. I'm sure they have to. Yeah.
I mean, in June they reported in August, and they reported an 8,000% miss on earnings per share. So there you go.
Okay.
They were expected to have a 6-cent earnings per share loss. They reported a $5.17 earnings per share loss.
Okay.
Unless this is like bad data, but I'm seeing an 8,000% surprise to the downside. But yeah,
it's a tough one. There's so much skew. Like even if you did, I mean, you could do like a March Feb 30 or 25-35 for $3. I wanted to do it twice. I guess I could do like a crab trade here. A cheapie. See, I wanted to go 1 by like 2 and do it for $1 or $2. But it uses a little bit too much capital. Like
Beta trader, all my losing trades are a result of blatant manipulation where all the winners are due to his trading genius.
Yes, exactly. All right, I'm going to follow the stock Messiah. I'm going to do the 25-35. March Feb. There you go. I'm in.
Beautiful. 401ks are perpetually buying. I mean, yeah, it certainly contributes to the long-term upward drift of the market. But I think for like answering the question of why are dips bought and why are markets moving so quickly, it's just the technology and accessibility, and like everything is digested so much more quickly than it used to be.
Yes.
Which is why you see more violent graphs.
Yes. And things have gotten bigger. I mean, the market itself is so big now that, you know, things move. There's so much liquidity out there.
When we buy calendars or diagonals, why are we buying them as opposed to selling premium, I guess? The main answer is just when we look at a lot of these products, they're moving in a big way, but their implied volatility is still generally low. I like diagonals like in AMD, the one I did. It's just like I'm risking $500 to make 500 or more. If I'm selling an option, undefined risk, I'm collecting less, risking more, which is a higher probability trade. But when the markets are flying around like this violently, I would rather define my risk. That's also earnings trades. Like earnings trades, I exclusively do diagonal spreads because I want to participate in my assumption while reducing cost basis in the most implied volatility exposed way, which is with a weekly option that's really close to the earnings date. But I don't want to get killed if I'm totally wrong. Like there's been so many situations last year where I had an earnings trade go to zero, just full loss immediately, but it was like $500 on a 30-point move, where it would have been thousands of dollars if it was undefined risk. So really, it's more for protecting risk with earnings trades. If you're doing regular long-term trades, I think you could flip a coin. But with some of these products, they're just too expensive for me to sell undefined risk premium. But I've got a strangle on an IBIT, and I thought I had some other stuff, undefined risk. But I like to do more long-term stuff with undefined risk because it just gives you that additional time effect.
Mm-hmm.
You don't have to worry about, closing.
You're still selling premium though. Like
yeah, right. I've got short
net
premium in all these trades.
Yeah, you're not net short value, but you are selling value as part of your position. So there's always a component of short volatility, short premium, long theta. We're always incorporating that into the setup.
Yeah. And yes, we will talk more about it in the March event. The March event will be very centered around the math transactional nature behind adjusting short premium positions, and it hopefully will open the Pandora's box to show you that you can do really whatever you want as long as you understand the transaction and how you're adjusting your risk.
Yes.
That's it. We're out of time. Thanks for tuning in. If you got any questions, you can reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned, though. We have plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central on Monday. We'll see you then. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
We are back. It is Friday, January 10th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to take you through this non-farm payrolls Friday. Stocks aren't liking the good news, Ilya.
Ooh, it is painful out there. And the reason I'm smiling is because, of course, I still had my shorts going into this, so I'm not mad at that. But I, of course, was also short the U.S. dollar, and that part of the equation is not great.
No, this morning I dropped off my car to get new tires, which I guess inflation exists still in this economy, which ran about $1,200 plus then labor. And so when I saw the stock market reaction, I said, oh, good news is bad news. Hold on a second. I've seen this before. If you fade any sell-off on non-farm payrolls, come on. Daddy needs some new tires. Let's buy some zero DTE calls and look for the market bounce back. And that has not worked out for me whatsoever today. Why might that be the case, Ilya? So not only am I not buying for my tires, I'm paying for a little bit more than tires today. Why might that be the case? Let's look at this December non-farm payrolls review. It was better than expected at the headline, 256K versus 160K expected. The unemployment rate comes in at 4.1% versus 4.2% expected. Wages, a touch softer on the headline, if only because of a rounding issue in the month over month. The month over month is 0.3. But it's really 0.2% and change. And so you don't get the full 4% on the year over year. Outside of that blemish, you even look to the household employment survey from where the actual unemployment rate is derived. And that comes in at 478,000 jobs added. So Ilya, you check all the boxes here. This is actually a pretty good jobs report, all things considered, especially in light of the fact that it's probably the first jobs report since September where you can't point to strikes or hurricanes as a reason for some noise in that top line figure.
No, this was clean. This was a clean set of numbers. We even got a little bit of a revision on the prior numbers. It was revised a little bit lower, but not terribly so, down to 212. If we look at the overall kind of direction of revisions, it's been hit or miss, but it hasn't been consistent. On the whole, though, I mean, the reaction, if you want to back out of that, and we always do, we always want to look at the price action first, it's very, very clear what the market saw here. And it was higher yields, and it was a stronger dollar, and it was a dilution further of the Fed's expected capacity to cut rates. If we look at where we are currently, we are sub 30 basis points for the entire rate cut tally of 2025. So we'll manage one cut, and it interestingly looks like the market didn't want to necessarily reduce the full tally this year and next, because what Fed funds futures show us here is it's not so much that the second cut from this year has been taken off the board, it's that it's been delayed. So we see the outlook for 2026 actually get more dovish. And there we went from, let's call it 19 basis points yesterday to 30 basis points today. And so what it looks like has happened here is the market said, okay, fine, you're not going to do two cuts this year. You can't even manage that. You'll do one. And with that, you're going to see a little bit more easing next year. But nevertheless, all of this is very light compared to the Fed's own forecast of 50 basis points this year, 50 basis points next. So the markets are really out there with higher yields and a stronger dollar. Gold is up, which is kind of interesting in this context. But clearly the response was, this is a hawkish lead for policy officials.
If you look at the charts, as we're going to do here, we'll see that it wasn't really the cuts necessarily coming off the board as a result of the non-farm payrolls report that drove the move. I think it was the cuts coming off the board as a result of the Michigan consumer sentiment survey.
That too.
That was really hot. The 1-year inflation expectations there jumped up to 3.3% in January 2025, which is the highest reading that we've seen since May 2024. And if you want to go back, you haven't seen something that high above 3.3% since November 23 when they were at 4.5%. Obviously, when you look at the consumer sentiment data, because it's the Michigan, they segregate it out by political affiliation. And so Democrats and independents are thinking inflation is going up. Republicans think it's going down. There's clearly beginning to see the pass-through of those tariffs coming through in the figures. But this perhaps is the bigger deal here. We have hot jobs data now contextualized by anticipation that prices are moving higher. Cut odds are now pointing to October being the only cut in all of 2025 if we look to Fed funds or the SR3 contracts. So we're beginning to scrape the bottom of the barrel here. Obviously, that's not good for bonds. It's hurting most major currencies versus the U.S. dollar. Although notably, the Japanese yen is up versus the buck today. So with gold up,
I bought a little bit of it this week.
This is kind of a classic, rates are too high, risk off mix right now.
Yes.
I suppose the question is, you see this long lower wick forming. We are up about 40 points off the low right now. That's not nothing. Is this a head and shoulders neckline break?
Maybe, but until it closes under that support, I am not going to assume that it is. I already have quite a bit of short exposure. I've been selling ES at swing tops, basically starting in that narrow range where things topped in December. And so I have plenty of exposure here. As we've talked about earlier this week, I also got short NASDAQ. The longest one I've been holding of the bunch has been a Russell short, which is actually trying to make headway through its digestion range, which is encouraging. I was thinking it might have bounced from there, but it is trying to break down. It also hasn't made a conclusive push, and so probably needs a little bit more time. I might have to roll out the expiry there because I've had the trade on for, how long has it been now? 36 days. I'm
so going back into December.
Yeah, I'm like over a month now. I've had that short. So I might need to roll that out if I want to remain engaged, or I may just take it off and then put it back on if the break is there on Monday. But the thing here now is you don't want to get this overly cavalier, because this is a Friday. This is a response to economic data. We had the idea already this week. The markets showed us very clearly, and we talked about this when we discussed expectations for NFP on Macro Money on Wednesday. We saw the ISM numbers this week. They were hot. We saw how the markets treated that hotness. They did not like it. They did not like yields going any higher. And obviously last year, there was a lot more resilience to rates going higher. And this year, clearly the story is not that so far. That hot ISM number did not sit well with stocks at all. And so obviously when we were looking ahead to this NFP number, if it was going to be hot, stocks were not going to like it. And that's what we're seeing. They are also not making the kind of critical break that tells you you've reset risk reward. Now your underside is no longer, let's call it 58, 50, 58, 70 on ES. I think you probably really need to get through 57, 80 to get really conclusive. And if you can get through that, well, then we're looking at 5,500. But until you've done that, I'm not really looking to assume anything. Shorting stocks is in general a dangerous endeavor, because this is a market that preternaturally likes going higher and does not like going lower. It's not a two-way market the way commodities or currencies are. It has a bias. And so if this is a head and shoulders, which would mean capitulation, which would mean a lot of selling downwind, there's going to be plenty of time. This is not the place I would add.
You know, it's fitting that you and I started the week together, and we're bookending this week with the market potentially making a break. I think on Monday and consistently, you and I were saying like this could be a top, it could be continuation. You happen to have bearish positions on. I'm coming into the new year relatively flat, taking a few very small pokes here and there, like today, for example, seeing the market sell off. I got it at 5,900 basically. So if this market is now 40 points off the low, if we want to keep this going, I'll be more than content with that. Let's just get to 5,950 before the end of the day. Maybe that's where the strikes are. But I'm not operating in size the way that I have been, the way I was in November, December, all for much of last year, because it's still very much a sideways technical chop. And even today, if we get back to 5,900, it's a down day. It's a bad close. But bears kind of feel like you fumbled the ball a little bit, at least on a technical basis, where there was an opportunity for a significant drive, and we just clearly don't get through there. Earlier this week, I put on the Tasty Live Traders blog that if you're thinking about a head and shoulders pattern, it would mean a neckline right around 58.65 or 59.15, depending upon how aggressive you are with your measurement. And so we're not really fully through that neckline zone just yet. But if we are, you think about the high, you think about 61.78 or so, and you think about this neckline, depending upon where you draw it, that is a measured move into the 5600s, potentially into the 5500s. You mentioned a drop down there. I think then the September swing low very much becomes a possibility given the structure here in ES. But we haven't crossed that bridge yet despite all this pain. Same thing for the NASDAQ, right? Lower wicks are beginning to form here. There is some buying interest right now. One of the hallmarks of the labor market through 2023 and 2024 was that it was resilient. And on days that you saw data like today, ultimately stocks would recover because, yes, no more cuts are coming, but it probably meant corporate earnings would still be good. Net, can't be upset that the economy is still going up. I'm a little surprised by the lack of positive reaction after that first 30 or 60 minutes or so. I was expecting to see a little bit more of a pickup. But I'm also encouraged by the fact that this market isn't down 2-3% right now, where it looked like it was heading just an hour or so ago.
Yeah, I mean, just look at the candle from Wednesday, because you really get a very similar kind of thing, right? You got an ISM number that was hot, but is that bad news economically? No, it's not bad news economically. The sector that employs the most Americans is growing at a brisk speed. Okay, the pricing component in there is up, but that pricing component isn't prices facing consumers alone. It's also wages. And that's not a bad thing at the consumer level. If service providers are facing a higher pricing structure, a good part of that is strong demand, and a good part of that is paying their workers. So that's not all bad news in the slightest. That's not necessarily inflation of end consumer services at all. So when you looked at those numbers, economically, they're not bad numbers. But because those numbers drove up yields, the markets clearly voted and said, we don't want yields higher. This is not the year. And that makes sense because, as we've talked about at length before, we're in a situation this year where everybody's cheap COVID money starts rolling over. A unique bit, and I know I've said this a gazillion times, and I'll say it again. The unique part of this tightening cycle that makes it different from every other tightening cycle since the early 1970s, when the current financial universe as we know it was born, with the untethering of the dollar from gold. Every single interest rate hike cycle has seen corporates' credit servicing outlays rise. Companies have paid more to service their debt because interest rates were higher, which is what's supposed to happen. That's the whole idea of raising rates. Except for this tightening cycle. And it's because during the COVID years, everybody borrowed oodles of dollars for next to nothing, while everything was on lockdown, and of course saved oodles of dollars too, because everything was on lockdown and there was nothing to do. So everybody came into this tightening cycle flush with cash. Well, it's typically 3 to 5 year money, which means it rolls off this year and next. And people have to refinance it much more expensive, 3, 4, 5 times more expensive, because it was borrowed, call it close to zero, and is going to have to get rolled over at 3, 4, 5, 6%, depending on sort of what the risk is of the borrower, et cetera. So not surprisingly, the markets are saying, you know what, this is the year we have to pay the piper, and we want rate cuts, because if we have to get this money at 5%, some of these businesses that need it, their business model doesn't work at 5% money. It might work at 2%, it might work at 3%, but it maybe doesn't work at 5%.
I think that's the story of Russell today. right? Like, why is the Russell underperforming everything else? If you were betting on small caps because you thought that the sweet nectar of lower rates from the Fed were coming, you were betting on the fact that a lot of the companies in the Russell, they don't have the kind of financial moats that the mega cap tech teams do. And they have a lot of floating rate debt. And so the hope there was, by looking at a Fed rate cut cycle that's coming, all right, this floating rate debt's going to be a lot easier to service moving forward in 2025. If we have to roll over our debt, it's not going to be rolled over at as high of a rate as we feared. So, the path forward for free cash flow is actually going to be a little bit stronger. And that plays out until you get to an economy that effectively isn't slowing down right now. We talk about a hard landing, soft landing.
I sold.
Well, there's no landing right now. Right. And so if the economy itself isn't slowing down to a point where inflation's defeated, now we're going to sprinkle in all of these tariffs, then the Fed clearly is in a place where it might think it's stuck. And you kind of have a narrative forming here as we start this year, where the Fed told us on Wednesday that they are very uncertain about how the tariffs will play out and impact the economy.
And all of them are concerned.
They're all basically concerned. And now you have consumer inflation expectations, which this is a survey completed before the general public heard what the FOMC minutes said. Not that I think people responding to the Michigan Consumer Sentiment Survey paying that much attention to the Fed when they answer the phone. But like there's all, but
that'd be an interesting thing for U of M to ask. By the way, how many of you all actually pay attention to Fed monetary policy when you're setting your inflation expectations, or is it all just the supermarkets out of eggs?
Yeah, I mean, we think about the bird flu here. Last month, and I retweeted this recently because I have we talked about this on Overtime earlier this week. I have my bird flu conspiracy, and so. The spread of bird flu among
the name of our next album, by the way. Bird flu conspiracy.
In America right now is up 160% month over month. So I go to the grocery store and I've seen signs now up in ShopRite, or like both ShopRite and Stop and Shop nearby. That's like due to the bird flu outbreak. Egg supplies are limited. Prices may be higher than what you're used to seeing, like something along those lines.
And they're rationing. I mean, even Whole Foods is starting to ration how many packages of eggs you can buy.
That's a problem for me. I have 3 to 5 eggs a day. So
yeah. See, this is an issue for me. I too eat a ridiculous amount of eggs, and so this is not going to work.
It's not going to fly. It's not going to fly as the chicken goes.
As the chicken goes, that's right.
2203 here in the Russell. It's down 2.21% today. We're staging a little bit of a comeback here. S&P's up 58.95. Hey, maybe the market wants to give me those tires, right? That'd be nice.
Daddy needs tires. Let's go.
From someone who has been bearish now for what's been the better part of the past month, more than that, and you've seen this market come down from. You've taken it's a 10% correction from the high. So now we're in a technical corrective territory. When is enough for you, right? Like when do you say, I'm going to take half profit, I'm going to take the full thing off the table, I'm going to roll this out to buy myself more time. So if we do see another one of these little rebounds back to the 1 month moving average, I'm not all of a sudden stuck on the other side of 21 DTE, wrong side of the decay curve, and I've just basically pissed away this profit for no reason, when if I had just rolled out sooner, I'd be able to maintain the position and this would have retained a lot more intrinsic value. When do you do that?
I mean, I think you look at this and you say you have to let the price action dictate. This is not anything you can buy here, clearly. There is no reason. The price
action.
Unless
like falling knives.
Right. Right. Unless you want to grab a falling hatchet with bare hands. Like, why would you do this? There's no reason. There is barely any IV here still. So you don't really have any reason to be a put seller. You look at this and you say, okay, fine. This is either going to break or it isn't. So if I'm already short, as I am, I'm just sitting and holding and waiting. And if you are not already short, I think you do nothing here. You take a step back and you go, listen, this is an asset class that does not like falling. But if it's falling, it's as we've talked about a lot, and you like to say this, it stairs up, elevator down. If this thing is really breaking down, if it's really falling, you are not going to want to try to bottom fish this thing until it's good and done. Because if the stock market is really rolling over, finally, this is just the beginning, and the pain is going to be intense. And there's going to be a lot of it. So I think we have to basically look at this now and say, it's unclear whether it's going to hold or whether it won't. But if it doesn't, you're in for a painful time being long. So do nothing if there's no exposure is what I would do, and wait. And if you get confirmation, sell. But wait a good bit to get confirmation on the flip side if you're going to try to pick this bottom, because if the floor falls out from this thing, which could be the close today, then this thing could really sink and quick across indexes.
When we were looking at the Russell on Wednesday on the blog, it was noted that while momentum had improved insofar MACD gave you that buy signal a few days ago, the price action was speaking for itself. Russell had not rallied, leaving open the possibility of a bear flag having formed in recent weeks. A drop below 2,200 will require another leg higher in U.S. Treasury yields, which can't be ruled out, and that seems to be playing out here today. The rules of a momentum trading profile are the same up or down, right? We've talked about this all of last year when the markets were moving up and you had pullbacks into the 1 month moving average. If it was one of those atypical, the market's gone too far too fast, we're more than 3% above our 1 month moving average. Just because you have a pullback to it doesn't mean the trend's over. It's just a sign of near-term exuberance shaking off. You buy that dip. Recently, you have the big sell-off. You trade sideways. Monday, we bounce into the 1 month. Pin bar, that was the tell that this thing was a bear flag. And now we extend ourselves down to new lows. So is this a falling knife? Like I was saying, I'm never going to sell stocks in the middle of an uptrend. So to that point, if I'm looking to deploy capital here, am I trying to get long deltas in the Russell right now? There's nothing technically there to suggest that. Okay. No. If we were to flip this chart upside down, for example, would this be the day that people would be saying I should get short? No, it wouldn't be, because then you just broke out the recent swing highs. That'd be lunacy.
That would be lunacy.
So 33.3 IVR, that's certainly nowhere close to highs that we've seen in recent weeks. Back in November, we were up in the 50s. Obviously, some of that is jaded by the fact that we have the August inclusion into that calculation. So if we wanted to go to RVX, for example, we are at a 24.36 raw volatility reading, which, considering where that is, similar levels to where we were back in mid-July last year before we exploded higher. And at the time, those IVRs were in the 70s or 80s. So how do we square those two observations? If we were to see some semblance of a turn down here on like a 4-hour time frame, right? You get recovery back up to 2230, which in this market, that's more than a 1% move to the upside, right? But if you were to see more than a 1% move to the upside off of here and get back into the flag, consolidatively, I like to play reversals or false breakouts as a move to the other side of the consolidation. And that opens up the floor for a move, or opens up the sky here at least, opens up the sky for a move to 2320 or so. And then under those circumstances, right, you get back to 2230. You can sell a put spread against today's lows. You can look for a swing higher. It doesn't mean that the downtrend is over, but you need certain technical conditions there to be in place to have the kind of confidence to lay out that trade right now. I just don't have it. I prefer to be in Ilya's shoes where I've been short for the past month, and today we're now in 10% to correction territory, because it's always easiest to trade when the market's moving in your favor. S&P on this 4-hour chart, we can see ourselves poking back up through that neckline area, so to speak. I drew this new trend line here today. I'm not sure if I love it. High on October 17th, the low on November 19th, also the direct low on December 20th. It's one of the reasons why I feel like this is almost bear trappy. Vol hasn't exactly blown out through the roof.
No.
We're at 18.77. It was higher today. It's been coming in all session long. More wood needs to be chopped for the bears. This has been a nice pullback, but not quite necessarily the top that you want to see just yet. Close, but not yet.
No. And look, if you did the pot odds at the top of December, as I did, and said, look, we have a narrow range, this thing has no conviction. If I'm wrong quickly. Let's take a stab at this thing with a put vertical, simple, risk defined. It's not going to run away on you, and you'll take it off fast if it pokes up above the high. That made sense. There's been a nice run. Good. It's making money. But before you jump out the window, you have to let this thing do that first. It's standing on the windowsill. It hasn't jumped.
Hasn't jumped yet. Yeah, the breath was bad in December. That was obviously not, in hindsight, obviously not very good and something to be more mindful of. But that extended for 14 days before the market ultimately keeled over on Fed Day. I think that was 11 days in when we got to the Fed Day at the time. We'll see what happens. 25.5 IVR. I really would expect it to be a lot more significant. And I think about a market that's kind of round tripped in some of these indicators. The last time we were oversold in stochastics, the market was effectively here. I wouldn't call this a significant divergence by any stretch. So we shall see. Another 60 points, by the way, would go a long way towards covering the cost of these tires, S&P, so maybe we can get those in my pocket. Otherwise, you see the market moves today, and it's not just the non-farm payrolls report, but we talk about the inflation expectations coming out of those U Michigan surveys, and bonds just aren't having a great time with it. ZN here now stretching down 2 new lows, and what a pretty chart this was, right? We could see
I'm happy
former
I got
support.
out of TLT early this week.
Fortunate. And the ZN call spread that I had on weeks ago, I'm just riding it into the ground because there was already a max loss coming into this week, so there was no reason to do anything with it. More importantly, when I tried to find a buyer for it, no one was willing to take it off my hands, so I understand why. But this isn't a shock, right? Like, we're looking for a bond market that's showing signs of exhaustion. You and I were covering the volume figures, I believe, in ZB this week, or maybe it was a conversation with Jamal. And when we think about the longer term signs of bottoming in the longer term or longer end of the futures curve here, let's go out to 4 years, 5 years. The volume figures that we see in, and this is daily. Okay, now we're ready for there we go. End of February, beginning March 2020, back-to-back weeks of 3 million contracts traded in ZB futures. You don't see that threshold for volume reached again until you get to the lows in October of 2023, Ilya. I was looking at the volume figures these past few weeks, and while we have sniffed 3 million traded in 1 week, we have not done it in back-to-back weeks. Perhaps that's because of the holidays, but that also means there's been a lot of people sitting on the sidelines or just sitting on their hands who haven't been selling. So as we get through the final volume figures for this week, they should be a little bit firmer. I don't know if we're going to cross 3 million. We're already at 448,000 traded today across all ZB futures, which is great. But it feels like we need a little bit more. Now, obviously, higher jobs, good. That's going to be inflating those growth expectations at the long end of the curve. We also see that oil has been shooting up today, now up by 3.17%. That's going to help the inflation expectations part of the curve. So there are reasons why yield should be higher when you look at the broad scope of what we've seen today. I guess my question is, most traders are trying to call a low right now. I've seen the questions come in. They're not playing this directionally by riding this as a momentum trade. If you are the kind of person who's looking at this and saying, I want to be a contrarian, I want to fade the move in bonds, 5% is just too much for the 10-year yield, yada, yada, yada. What are you looking for, either in rate cut pricing or economic data or something technical on the chart? What are you looking for to get bulled up here with confidence?
Only the price action and the price action and the price action. Because there's every reason to think that this is overextended. If we learned anything from last year, it is that the markets are hyperactive in their expectations for Fed policy, and the Fed isn't. So yields swing, they go back and forth, markets speculate, they go back and forth. The Fed told us in December 2023, we're going to do 3 cuts in 2024. And the market said, no, come on. You're going to do 6. And then, okay, fine. 5, 4, 3, 2. Are you going to do any cuts? Okay, now you need to do 4 again. Okay, now you need to do 3. Okay, maybe not. Oh, you did 2 cuts in one shot in September? That's too many. And what did the Fed ultimately end up with? Much closer to what they originally said. Okay, yes, they did 1 extra cut. They squeezed 1 in December. And there was a descent. So the Fed is not nearly as jumpy. And when you look at this, you have to respect that you're not trading the Fed when you're trading this. You're trading the market's perception of the Fed. You're trading speculative interest in the Fed. You have to trade the market, not what Fed officials do, not even what the economy does. Look at the response to NFP. This is a good jobs report, which is going to be good for earnings. But the markets don't see it that way. So you have to trade what the market's lens is. Mm-hmm. And when something is falling like this, what in the world would you be doing buying it? Why? Why is the market going to stop here? What in the world is going to tell it, okay, this is too far? It always drives me crazy when people go, well, if it gets to 5%, that's it. Why? Why is 5% so magical?
It's a round number.
5.2?
That's not a round number.
Why not 5.5?
Still not a round number.
Multiples of 5, though. Why not 6? Why not 4? Why not 100? It's a ridiculous game to say just because you've reached a number, that's an automatic activator of some kind of something. It blows my mind how people think this way. It makes 0 sense. So, no, I don't think there is anything that's linked to a particular number that's actionable, and you'd be silly to think that there is. Let the price action tell you. Let there be a green candle on this chart of substance. Let there be some kind of a bottoming structure. And then, yeah, okay, I'm in. I want to be a buyer of bonds. I think this is overextended. It's not lost on me by any stretch that jobs data is lagged. U.S. economic numbers, on the whole, ISM notwithstanding, have been cooling relative to forecasts since mid-November. This economy is going to start creaking under these rates and show weaker numbers eventually, and may already have. But for 1 or 2 numbers, one of which, the jobs report, is notoriously behind the curve of the business cycle. So is it possible that we're near a bottom on bonds here? Of course it's possible. And of course, I am interested in being a buyer of them here. But not until the price action says that it's time. Because to try to pick this bottom ahead of it, you're just asking to get a sledgehammer to the jaw.
We've had this flag drawn, or this channel drawn. It looks like a flag now in hindsight if we step back and look at like a weekly chart. That looks like a pretty convincing bear flag. If we think about the daily time frame here, we've been trading in this breakout mode since the FOMC meeting on December 18th. If there is a swing low on the continuous contract that perhaps draws some interest, you can go back to the April 2024 lows, which, mind you, that kind of makes sense why we're nearing on those lows. Where were we at the end of April last year? We were at a point where effectively we're saying over the next 12 months, not only would we not see any more rate cuts, we had to start thinking about the possibility of a rate hike. Where are we right now in the market, according to Fed Funds Futures, which you can also see on the platform comparatively through the SR3 contract, the 3-month SOFRs? We are looking at a market that is saying no rate cuts now potentially until June. And then that's it. Game over.
Yeah.
No more cuts. One cut, and then it's done. So in terms of this being like a floor, obviously, as you move further away from the short end of the curve, the correlation between Fed funds futures and treasuries whimpers out a little bit, which makes sense, particularly when you think about the SR3 contract, overnight collateral. You're not going to use 30-year bonds as overnight collateral. Point I'm getting at is, unless we really start to see a hike come onto the horizon, the only things that are moving our long end of the curve have to be growth expectations, inflation expectations, or term premia. We can say that growth is probably fully priced in at 2.5% or 3%, maybe still going on a little bit stronger than people anticipated for longer. So then this is why yields are up where they are. But inflation's probably the bigger variable, and the term premia, thanks to tariffs and perceived threats to any central bank independence, yada, yada, yada. We're probably exhausting one or two of those catalysts right now. I'm not going to be the person to be a hero here and pick the low. But as we get into those April 2024 lows, one has to think about the pricing of this market and think if we are at an extreme Ilya, which makes me think about what's happening in gold and silver today, because these guys are just fine. All week long, this has been the story of the metals market. Higher yields, a stronger dollar. Gold, take a hike. Potentially breaking up today. Doesn't care at all. Silver too. Copper as well.
I'm glad I kept some of my longs here.
And I'm glad you did as well. 27.15 right now. It's not quite a market that's breaking the downtrend from the October and December swing highs. And Ilya, knowing you, that doesn't even bother you because you don't care about diagonals. You're more of a horizontal person. Fair enough.
Especially when there's only 2 points along the diagonal. It could be anything.
Could be anything. But we do see here that there is a zone, if you will, where the market broke.
That's what I'm looking at right there. Exactly that.
And that's kind of where we fade from today. So starting to get a little bit more blustery right now, which is good news and comports with the longer-term view on metals for myriad reasons, central bank buying, debt levels, yada, yada, yada.
Sure.
This is not, is it too late to get onto the bull train? Or do you think that the failure here is a sign that maybe bulls still need to be thinking longer term if they want to be a bull? This is not something that's going to transpire short term.
If you are just thinking risk reward wise, you wouldn't get in here because you're nose up against resistance. Nothing in the world tells you that you're necessarily going to break higher here. So if you're not long already, why would you be? You could be sitting here waiting. You could be waiting to either get a pullback and find yourself, let's call it, with a pullback to like 2660, 2650. Right in that congestion zone, let's call it from 2630 up to 2660 or so, is where we've seen things stall on the way up, on the way down. Basically going back to October. And so at this point, I think you wait and you watch. And if you get a breakout, great. Buy that. Because if you get up over these highs, if you, let's say, get a clean daily close above the December 12th swing high, that's 2730-ish, something like that. If you get a close above that, okay, well, then you're probably not just going to run into the October high there at 2790, 2800. You're probably going higher. And that becomes better risk reward. You've really restarted what has been a longer term advance, and then you can start to extrapolate some levels. Or, better yet, you get a pullback from this resistance and you can buy there. 26, 40, 50, 60, anywhere there. But right here, I don't think you do anything.
The one thing that throws me for a loop is that silver isn't participating the way that you'd want it to see. If this was truly a metals-driven move, silver would probably be outperforming gold. And moreover, as we see gold run into resistance, silver is actually nowhere close to the swing highs that it had in mid-December.
Pretty impressive that it's up, though, given the risk aversion.
Yeah, and the double bottom that we started working through that we had highlighted here the past few days, 29.15 up to about 30.55. So you're looking at like a $1.40. A $1.40 on top of that brings you to about 31.90. The high for today is about 31.84. So was the double bottom completed? We could call it that. The fact that we are up in the uptrend though from the August, November swing lows here, the consolidation remains. We're clearly back above this very interesting pivot zone. We're trying to get back through there. Moving averages. 1 week is now back above the 1 month. We have not seen that occur on a closing basis since December 11th. Momentum profiles picking up. First time we've seen overbought in a few weeks. So silver has some contours of improved technical structure right now, where
a little bit
not quite there yet, but trading being a function of price and time, if we can just simply hold these gains for the next few weeks, then we're going to break the downtrend off the highs. Gold would be in a similar position. These are looking like better long delta opportunities, just as copper is. This and natural gas have been my two best trades this week, aside from letting legacy losers just roll off and die, not really deploying new capital. I suppose the 0 DTEs in ES, the short put spread in HG and in NG have been the only things I've done so far this year. This has worked out, though. This has been a good trade this week, where the put spread that's currently on, 46 days to expiration. So there's a lot of time left here. Short the 405, long the 4, and this continues to work out well. And I'm liking that it's working out in the context of gapping through the former closing highs that we had here in mid-December. It feels like there's something happening right now that gives me a little bit more confidence with copper than either gold or silver, but I see no reason to change the modus operandi right now, even if volatility has come off the board, right? The IVR is down from 40s, 50s now into the 20s, but if I'm short puts and price is going up, that's fine by me. So I'll keep this metals exposure going into next week.
Yeah, I mean, there was a really great article out of Bloomberg yesterday talking about both silver and copper as being essentially tariff squeezes. That what this is, in the wake of course, that Washington Post story, is the possibility that tariffs are going to be targeted at strategic goods and flagging both copper and silver as possibly those things. And then, of course, the president-elect came out and said, no, we're going to do blanket tariffs. But all of that sounds about as blustery as saying we're going to join Canada into the 51st state or buy Greenland or rename the Gulf of Mexico. All of that sounds like there's going to be a wall and Mexico is going to pay for it. Right. Sure there is. That's not how sovereignty works. And so all of that sounds like a blustery kind of red meat for the faithful kind of rhetoric. And to the same extent, we're going to do massive blanket tariffs on all imported things. That sounds kind of like that also. That doesn't mean that there's not an intent to do tariffs. It just means that there's much more of a scalpel approach that ultimately happens in reality, as policy reality, rather than something that's more sledgehammer-esque. And so the argument in the Bloomberg article was, look at the futures curves in silver, look at the futures curves in copper. You're seeing significant response in the shape of the curve in both cases to what got said about tariffs this week, sort of how that might be aimed at specific imports of critical materials, especially since you could justify those on national security grounds. So the president could basically just sign that off and just do it. So that might be what's going on here. In the case of copper, you're running into significant resistance now. So is there a story here ultimately? I'm not sure. Obviously, it made sense to get long earlier because we're higher now. So in retrospect, good on you. I'm not participating. I'm not going to be participating unless we break this immediate resistance. And frankly, the question is, how does one participate? Because if you want to keep sizing to a reasonable, manageable thing relative to your capital, you either need a lot of capital, at least for my approach, or you don't take full HG contracts, and then you have to go, well, so what do? Do I use CPER, the ETF? What am I even looking at here as the vehicle? Because the ETFs aren't very liquid. Whereas
you always go buy MHG, although,
again,
not options available.
No options.
And not a lot of liquidity.
Not a lot of liquidity, no real sort of no cheap leverage to be had here.
There's the junkie in you looking for your cheap leverage. We got to keep this moving because we only have 8 minutes left.
Yes.
Oil today breaking out. I don't have a position here. You and I were kicking around the tires on what a position would look like if people wanted to get short. I think today's a good example of why, when you look at markets that have particular relationships with volatility, if markets are going up and volatility is low, and this is typically an asset that has, where price tends to have a positive correlation with volatility when shit hits the fan, right? Don't sell calls in that asset. It's like with gold and silver all of last year. When gold and silver were going up, even if vol was coming in, that wasn't an opportunity to get short through short calls, because it was painful when vol expanded and prices went up. Much more painful, and got more painful quicker than many people appreciate it does. And I know that from experience, So same thing with oil. If you were going to get short oil this week, was selling calls the way to do it? No. Because if there's a geopolitical explosion overnight and vol expands and prices go through the roof, you get double tapped really quickly. So we didn't get the bearish engulfing bar on, with that candle we saw on Wednesday. Almost, not quite. The close below the 1 week. You don't like your diagonals. Today vindicates not doing it through the calls. If that was done for people who got short through MCL, hopefully it was if they were picking the top there, it was a small exposure and can be managed. But this begs the question, Ilya, what's next here for oil? Because this is not a geopolitical driven move. This is not even sanctions are ending, so the world's going to be flush with oil. Copper's breaking out, though. Are we looking at legitimate commodity strength because of optimism around global growth?
I don't think so. It is much more compelling to say that we are getting optimism around U.S. growth. And as long as that holds up, yes, the global growth story is going to be okay. But the situation in Europe, and especially the situation in China, they released their inflation numbers this week, and they were, again, just flatline dead. So there's all kinds of issues with growth at a global level this year. There were issues, frankly, last year, because while the U.S. powered ahead, that did not spill over. Not even to Canada, which exports something like 80% of everything they sell abroad, they sell to the U.S. Even they couldn't find U.S. demand because all of this buoyancy in the U.S., just look at the PMIs, is in the service sector. And most of that is provided domestically. So all of this U.S. buoyancy, it isn't spilling over. Europe is in trouble. China is in trouble. There's no growth out there other than the U.S. at a big scale. I mean, obviously, there's economies that are doing better. There's economies that are doing worse. But that's not the kind of thing that makes for global growth. 58% of global GDP is the U.S., the Eurozone, and China. And the other 42% are mainly vendors to those three. Think Mexico and Canada with the U.S. Think Australia, New Zealand, Southeast Asia, the commodity exporters in South America with China. Think Central Europe, Eastern Europe, Nordic Europe with the Eurozone. So You just don't have the engine out there like that unless the U.S. starts to spill over. Maybe it will, but so far it's not occurring.
Ilya, a quick break on nat gas here. Looks like a bottom has indeed come together. This is one of the trades that we put on here at the start of the week. The short put spreads working almost immediately. We're in the NGH5 contract, just given where the expirations were. So there's 46 days to expiration. Short the 290, long the 275. That's working out great today with natural gas up 7%. Why did we put this on? Westwater was with us the other day, and we shared the inventories of natural gas stored in salt caverns in the United States right now. And we are drawing down our natural gas inventories much faster than we have at any pace over the past 5 years. And it's also faster than we have at the 10-year average. So there appears to be a legitimate fundamental reason. You have a breakout of the downtrend. You get the pullback to the breakout levels this week, and you hold that support more or less. So I put it on. It's working out well. It hopefully offsets the disappointment in equities, although we're back to 59.05 here, Ilya. That is a 60-point move now in the S&P 500 off the lows. We just need 45 more to pay for these tires. Let's go. Let's do it. King dollar and the yen as we wrap this up. Dollar's obviously doing well today. Can't ignore the Japanese yen. Outperforming the rest of its major peers, however. Maybe we are rounding out into an area where a bottom can be formed, because if the yen is not struggling when yields are going up, we're getting to a place where intervention talk has been prevalent previously. We think about the spot rates, and now the Fed isn't cutting more. So what does the BOJ have to do to keep those rate differentials in line? I really like the 007 calls, not in the H5 contract, but in the M5 contract. Look out to June. I think that's a place to operate. But Ilya, we need to wrap this up
already.
I know you're not going to cover this on Monday. We both have Futures Power Hour and Overtime, and I think you're on first call this week, so be sure to join Ilya there. Calendar for Monday. Where's my image? There are things happening on Monday, folks. I promise this should be in there. Let me just rattle this off then. This is the benefit of live television. So what are we doing on Monday, Ilya? Do you know off the top of your head as I pull up this calendar? Because I don't. But I do now have it off the top of my head. We have Chinese exports balance of trade figures next week. On Monday. We're going to have a speech from ECB policymaker Lane. Maybe new yuan loans as well. And then a U.S. monthly budget statement. Outside of that, it's a fairly quiet day. I'll make sure this is updated for when it's put on the website. But at the end of every one of these shows, we do a brief bit of education. Head over to tastylive.com, top banner Learn Beginner Futures, where you can find this great coursework put together by the fine folks on the Tasty Live research team. Today, we are talking contract size, notional, and tick values. The notional value of futures contract is the total value of the underlying asset which we have bought or sold, aka the contract size. Due to their unique physical characteristics, each product is measured in a slightly different way. So for gold, it's in troy ounces, and for crude, it's by the barrel. The minimum tick size is equivalent to the minimum price increment for any given futures contract. You can learn more about contract size, notional, and tick values, tastylive.com, top banner Learn Beginner Futures, or click the link here on the bottom of this slide. It takes you there directly. Ilya, it's been another good week here. Obviously a disjointed week, but we had non-farm payrolls today. It's a big market reaction and a big turnaround in intraday. There's still a lot left to go in the trading day, so we'll see how we settle this week out. But for Ilya Spivak, I've been Chris Vecchio. See you all on Sunday night for First Call for Ilya, or Monday with me here on Futures Power Hour again. Until then, good luck trading.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the guys. This is not good edition of what it is that we are trying to do, man. It is not good out there. The apocalypse has arrived, and I'm still not sure that this is real life. Like, I think we're probably trapped in season 6 of Lost, where we don't really know what's going on. Like, is this the before side? Is this the after side? We don't really know. But welcome to the show. I'm glad that you are here. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the discussion, you can join the conversation, and you can communicate with your brethren that are also watching the show. Man, I don't think anybody's celebrating today. I think we're all commiserating, the Bulls, the Bears, everybody, because that NFP print did indeed do us in. And of course, you could ask me whatever questions you have today. I think today, given the market action, given the fact that it's been pretty nasty out there, we're going to table our weekly Friday stock talk. We'll save it for next Friday. I want to get into the questions that you guys have for me a little bit earlier than we might do otherwise, just in case there's something burning through your skull that you could use my insight on. I really want to be able to kind of give you that. But I am notoriously slow and complete in answering my questions. So if you have a question for me that you want to make sure that I get it in the top of the chat, because I typically do move sequentially through. So Josh, go ahead and bring us in here, man. Do we still have a stock market? I mean, I don't know. You mean the S&P is down 63. You got the risk-free instrument. Not really risk-free in today either. This is a couple days in a row now that the risk-free instrument, i.e. the NASDAQ futures, i.e. extremely high-risk product, down 240. Got the boomers down over 500. And then you've got the Russell 2000 futures index down 53. Man, you got bonds down 27. You got notes down 23.5. You got gold up 26. There's your flight to quality, of course. You got, the Bitcoin bros up 600. There's another flight to quality. And of course, volatility is going to be on the rise today with the market getting hit. You've got volatility futures up 43 cents. And then you've got the spot volatility, which is going to be the old VIX. That guy is up 65 cents. So off of its highs significantly. If we look at the VIX, you can see this guy was over 20 earlier, I believe. Now, again, can we count today? I don't know. I got to wait for the weekly memo from VIX HQ to know which VIX prints can we count and which ones are just imaginary and they don't really count. I mean, sure, you bought VIX calls that you're hoping to get paid on, but that's all just details, man. That's all just fine print stuff. Don't worry about that. If you look at the high today, though, VIX 2031 was your high. So we're significantly off the high, but the market is just struggling to find some footing. I guess it's in a better spot than it was. I mean, you guys tell me, man, like, is the market in a better spot than it was a couple of hours ago? And I mean, what happened with this NFP print? I actually don't even know what the number was. So I've been watching the market all morning, and I'm always interested to see if, based on the market reaction, if I can discern whatever the news item might be, whether it's an NFP, a CPI, even a Fed announcement, whatever, right? When I saw the market action this morning, the first move was way down. And I was like, okay, that's pretty typical. And, from the standpoint of the first move being, kind of a knee-jerk reaction, and then there's oftentimes a recovery going the other direction. That didn't really happen this morning. I mean, there was obviously a lot of back and forth, and it did come back and whatever, but it just kept going lower and lower and lower. And now, obviously, it's found a little bit of strength in the last hour or two. But I was convinced. I was like, all right, the NFP print must have been super cold. I thought, all right, it must have been a very weak number, kind of showing, lack of job growth, kind of showing, recessions on the forefront, kind of showing like, all right, we could be in this, this kind of nasty stagflation, like whatever. And again, I mean, these numbers are just made up. They don't mean anything, but we're all looking at them together. So maybe they mean a little something. But I did hear through the grapevine, I still don't know what the number was, but apparently it was super hot. Like apparently the number came in way above expectations. And so that is very, very surprising to me. I would not have expected the market to be so weak given the super mega pint heat on the NFP print that I believe is what indeed came out. So help me out in the chat, guys. Let me know if the number was cold. Was it hot? I think it was hot, but I don't exactly know what the number was. All right. What I want to do though, man, look at the NASDAQ. I mean, this thing was down to, man, you want to talk about scaring the children. I mean, this is it, man. This is it. And especially on a day like today, it's Penelope's birthday today. Like today is Penelope's birthday. She's 10 today. I cannot believe it. She turns 10 today, January 10th. We actually moved to Chicago and I joined, the Tasty Network in January of 2016. And we actually moved to Chicago on her first birthday. So January 10th, 2016, we drove into the city. We had two cars. I had my car. My wife had her car. And I mean, it was snowing. It was sleeting. It was like an ice storm. And my wife was like, what did I sign up for? This is crazy. Take me back to North Carolina. And I'm like, we can't. Tom won't let us. And so, crazy memories in terms of Penelope's birthday being very monumental for me from a career standpoint. I mean, I've been here now for almost 9 years, and it's pretty crazy. I guess we can call it 9 years now. It's pretty crazy stuff. So, but NASDAQ, look at this, 874. Man, it was 200 points lower at one point. This thing was almost down 500 at one point. That's pretty crazy stuff. Like if you think about it, you go to ES here. This guy was all the way down to 58.45, another 40 points lower at one point. And so you want to talk about scaring the children. I mean, man, even the boomers are scared. Like even the boomers are frightened, down 600 today on the Dow Jones Industrial Index Futures contract. And so that is, that's some crazy stuff. That is some crazy stuff. So, all right, so what I'm going to do though, I do want to get to you all, man. I see you guys already in here. Look at you guys. Junior Mac. I see Ben Coates in the house. Sam L's in the house. Man, Gapper X in the house. Man, look, YouTube Jim's in the house. Man, look at you guys. I'm going to get to as many. Danu's in the house. Down 721 in the house. I'm going to get to a bunch of you guys here in a couple seconds. What I want to do, though, just quickly is two things. So, we don't really need to talk about too much happening in the portfolio, believe it or not. I mean, yeah, Bank of America is craptacular and Starbucks is craptacular. And we'll get back to the stock discussion, next week. But given the market craziness now, and I mean, it's falling fast again, as we speak, I thought it would be a bit more relevant to kind of see where you guys are at and see if I could help with anything that might be going on in your neck of the woods. But the two things I did want to talk about were MES and IBIT. So let's do IBIT first. This was our Bitcoin strangle. And you can see, I mean, we're basically at 50% of max profit. Like we're basically there. I mean, it's a rounding error at this point. And, it's like I always say, if it's good enough for government work, then it's good enough for me. So IBIT, we are at like 48.5% of max profit. And so it's like, man, let's take this off. I don't want to let the Bitcoin bros get us again. Like, let's take a little bit of money out of the crypto space, and see if, Michael Saylor will approve of this closing transaction. And then we can go ahead and move forward with, some other opportunities with that capital. So, yeah, almost at 50% of max profit. It was a strangle. We were never really tested on either side. This is exactly what you want. Like, this is exactly what you want. This is what you hope for. This is your textbook example of a short strangle. You put it on, you collect your theta, the stock bounces around, you never really take any heat, and then you take it off at, at or just before 50% of max profit. It's a beautiful thing. If only every trade was like this, right, that would be pretty awesome indeed. So let's go ahead $1.55, that's fine. See if we get filled. All right, so no takers at $1.55. The Bitcoin bros are making it difficult to get out. They like to hold, man. They like to hold. They like to hang on to it till the end, like all the way down to zero. They're going to ride it, and they're going to say, I told you guys need to hang on to this thing. I know it's, $50 now, but it's coming back, I promise. So IBIT, $1.59, I guess we got to go. That's fine. All right, so we got filled at $1.59. All right, beautiful. So we're out at $1.59. Nice trade in IBIT. I know one of you guys brought that to my attention, so thank you guys, whoever that was who actually brought that to my attention. I appreciate you guys so much. And so IBIT over and done with. Now, the next thing I want to talk about is this ratio spread, because this is very, very interesting for two reasons. Number one, we're at 21 days to go. And number two, look at the price and look at our strikes. So our strikes on this ratio spread are 59.20 and 58.70. This is ES, it's MES, but it's the EME S&P 500 futures contract. The stock is at 58.84. This is a great price for us. This is an amazing price for us. It's right in the middle of our long strike and our short strike. This is effectively, what you want. I mean, perfect scenario, you want to pin the short strike, but this is pretty close. Well, look at how interesting this is. Today, we're actually losing money on the spread. We're actually losing money on the position. Now, why is that happening? Like, what's going on here? Well, that's basically, one of the things you have to become familiar with when it comes to ratio spreads or even butterflies. It's kind of a similar phenomenon that if you actually get to or close to the perfect price on the strategy, so the short strike in the spread, if you do it too soon, if you do it too quickly, then you actually are showing a loss on the position. You'll actually be showing, kind of a negative outcome. Now, we're not showing a loss on the position simply because we've been in this trade for a while and we've already stockpiled enough theta to kind of, buffer and absorb this down move in the index that's actually causing us to lose a little bit of money today. But if we were at like 31 days to go or 41 days to go, we would certainly be showing a loser on this position. So the thing I wanted to point out is something that we talk about frequently when it comes up. Even when it doesn't come up, we find ways to weed this into just normal everyday conversation. When you have a ratio spread, when you have a butterfly spread, if the stock pins the short strike too early in the cycle, you will not be showing a profit, even though that is the best possible price for you. The reason why is because the at the money strikes always hold the most extrinsic value. Right, like if I look at any option chain, like here, let me just do it really quick. Let me go to, it could be IBIT, it could be, let's look at, I don't know, let's look at like IBM. What's IBM doing today? Down $3. So if we go to IBM, if I go to February, I'm just picking a strike at random. This works out well though, because we can look at like a really clean at the money strike. You've got the stock at exactly 220. So look at the 220 strike on both sides. You see the extrinsic value on the call side, almost $10, and then it drops off on both sides. It drops off out of the money, it drops off in the money. If I go to the put side, same type of thing, where you see the extrinsic value here is like $10 on the put side, drops off on both sides, drops off in the money, drops off out of the money. That's the phenomenon you're going to see writ large. It's ubiquitous. It is a function, it is a characteristic of the option pricing models. The extrinsic the at the money options are always going to carry the most extrinsic value. Okay, why is that important for what we're dealing with a ratio spread or even with a butterfly? If you want to earn maximum profit on that strategy, you need to pin the short strike on the strategy. So if I go back to MES here really quick, you can see that my short strike on the strategy is 58.70. So now the stock is 58.82. So it is getting closer and closer to pinning that short strike. The problem is if I do pin that short strike, especially early in the cycle, then the extrinsic value on that short put is going to fill up. It's going to increase. That is working against what I'm ultimately trying to do in the position. This is why when you go for maximum profit on something like a ratio spread, you can only truly achieve that at expiration when all of the extrinsic value is gone. When there is no time left, there is no added premium on the options price, the extrinsic value will collapse to zero. But at any time before that, the extrinsic value is going to be something positive. And of course, if you've still got 21 days to go or 31 days to go, it's going to be a lot more than just positive. It's going to be a pretty significant number. And so that is what is essentially working against us here today. And that is what is always working against you on a ratio spread or a butterfly if you get close to the short short strike too early in the strategy. So that's what's happening to us today. Now, again, I said when we put this trade on, which was a couple weeks ago now, I am going to, in fact, here I'll even show you for those of you that might be brand new to the show. Welcome aboard. I hope that you're not getting beaten up too badly in the markets today. But if you're looking for tools and skills to help you navigate days like today, you're in a good spot. Whether it be my show or the other shows we have on the network, you're in good hands. If we go to 1219, this is when I put this MES ratio spread on. So, we put this spread on at 12.19. I talked about how I really wanted to hold this guy closer to expiration. We're at 21 days to go, but that's going to be fine. We're going to move forward. We're going to keep this position on because it's a Friday, and from theory to practice Fridays, anything can happen. Absolutely anything can happen. So we're going to hold this strategy and just kind of let this guy run to the finish line. So that's MES, and we took off the IBIT strategy. That is all I wanted to do today. That is it. That's all I wanted to do today. The rest of the time is for you guys. Let's see where you guys are at, man. I see Trader Ice in the house. I see Bruce 2237 in the house. Max Virtual's in the house, man. I see you guys, man. I see Krishna's in the house. Jordan's in the house, man. Look at you guys, man. You guys are amazing. Dav's in the house. Chris King's in the house. Man, let's go. Let's see where you guys are at. All right. Don721 says, hey, Dr. J, in your opinion, is it useful to also look at the implied volatilities of the individual strikes when setting up a strangle? Or is the IVR and IVX enough? That's a great question. So if we go to an option chain, like here, we'll just stick with IBM since we already kind of have it up. If I go into February with IBM and, I'm looking to do a strangle, let's say. So I'm looking to do, let's say like a 16 delta strangle. So that would be, for the purposes of this, maybe I'm selling like a 195 put. That's about a 14 delta, so pretty close to 16. And then I'm selling like a 250 call, right? So that's going to be a 15 delta call, a 14 delta put. I'm going to be slightly bearish on the position because I have a little bit more deltas on the short call than I do on the short put. So if I go in here and I sell the 195 and I sell the 250. So let's say this is the strategy that I'm wanting to set up, and you can see here that I am a little bit bearish. Not a lot, right? Again, we're only talking about a difference of 1 in terms of the net delta, 14 versus 15. Okay. But what Don was asking about was actually the implied volatility of the strike, right? And so when, with IBM, IBM has earnings coming up, so it makes sense that their IV rank would be so high. So the IV rank is 89, so that looks like a good opportunity sell premium. However, you're going to need a Barry Bonds asterisk here, or at least like a Sammy Sosa asterisk, which I think would be the same asterisk, right? Like you've got Barry Bonds and you've got Sammy Sosa and you've got Mark McGwire. They're the same asterisks. But then you've got like Manny Ramirez. Then you've got like David Ortiz. Like they were kind of on the same list. Nobody talks about it, and those are my boys. But they were kind of on the same list too, so they get at least like a pound symbol or something. But anyway, with IBM, 89 IV rank with earnings coming up, so it looks like a good opportunity. But be careful getting it now with earnings coming up. You look at the IV index. So the IV of this cycle of February is 35. Right? That just gives you some semblance of the actual implied volatility. Remember, implied volatility rank just measures implied volatility relative to itself. The implied volatility itself is kind of showing you what's going into the option pricing model to determine option prices, where, of course, option prices and implied volatility, so not IVR, but the implied volatility itself, they're going to have a direct relationship, a positive relationship. When one goes up, the other one goes up. So higher implied volatility stocks are going to have higher option prices, ceteris paribus, all things being equal. Lower volatility stocks, lower IV stocks are going to have lower option premiums, ceteris paribus. So that's an important thing to understand. But Don wants to know, what about looking at the actual implied volatility of the strikes themselves? Okay, so whenever I'm looking at the implied volatility of the strikes themselves, so that would be like, this 34.29 on the call side and the 34.99 on the put side. What I'm trying, it's not really going to necessarily impact my ultimate selection in terms of doing that stock, doing that strategy, choosing those strikes, etc. However, it does give me some semblance of market awareness in terms of where is the market pricing in the higher velocity of risk, right? Like where is the market pricing in the potential for a higher velocity move? Now, it doesn't mean that there can't be a higher velocity move on the other side. And it doesn't mean that there can't be, a big outlier move, that opposes where the market is pricing in this risk. But this is just showing me where there's a lot of option demand and kind of where there could potentially be an explosive move if we start to move in that direction. And so this is that's how I use this, Don. That's how I use the individual strike IVs. It's pretty rare that it would actually influence where I sell that strike. I can't say it will never happen. It might happen, from time to time here and there, but it's not going to be something that happens on a regular basis. So hopefully that helps there, Don. Great question. So Orgdenu's in the house. Orgdenu says, greetings from Italy, Dr. Jim. What's going on, Orgdenu? Is it also a bear market in Italy there, Orgdenu? Or is this only like a U.S. thing? Is this only like a United States, Donald Trump? I'm playing a real life game of risk. Like let me grab some Canada, let me grab some Greenland. Like let's do a little Mexico while we're at it, and just kind of see how it all shakes out. Are all these things happening to you too in Italy with the Nasdaq down 300, with the S&P's down 81? I'm curious to know. But Orgdenu goes on to say, I will see you February 22nd. What's happening on February 22nd? Is that when the digital collectibles released? I think it is. And so that's awesome, my friend. Thank you so much for supporting that. That's amazing. I cannot wait. So quick little tangent. So I started putting together my talk the last couple of days because they're making me do it early. I got to get all my content in early so that, the powers that be can approve it, and they can, they can bless it, and they can do all the things that they do. Your Sosnoffs, your Batistas, etc. And so I'm putting together, the content, and I'm like, man, I'm pretty excited, right? Because I'll tell you what. So it's going to be a very interesting thing. So for those of you guys that can make it out Monday night, that's amazing. You can sign up on the Tasty Live site. I think you need to sign up. It might be, by ticket admission only or whatever. But I know that the seating is very limited, so I would sign up earlier rather than later. But for those of you that are going to be there Monday night, I cannot wait. It's going to be so much fun because it's really going to remind me of what it was like, back in my professor days. Like it's going to be like a live class, similar to the class sizes I used to teach, like 30, 40, 50, 60, whatever. We're going to have slides. We're going to have I've requested a chalkboard. We'll see if, the Sosnoff Enterprises can make that happen for me. And so we got all these things. It's going to be the face-to-face interaction, the back and forth. Like I cannot wait. But man, Monday night, I've only got an hour apparently. I'm like, yeah, that ain't going to work because we need 42 minutes just to set up the intro. Just for the intro setup, I need 36 minutes. And so I'm like, man, this is not good. This is not good at all. Now, Tuesday, Tom has told me when I do the actual recording for the digital collectible, and it's just me there, in silence, and, it's just, me all by my lonesome, then Tom told me I've got all day. I can take as much time as I want, and they'll just cut out all the stuff that's, B- quality. I'm like, well, that's going to be 100% of it. But, man, the difference between Monday and Tuesday is really going to be, it's going to be something. But anyway, I digress, and I'm excited for you guys. I'm excited to get to see and meet so many of you guys on Monday night. But Orgdenu goes on to say, when managing risk, what do you recommend? More positions but small size, or fewer positions but bigger size? Thank you so much. This is a great question, and it's actually, at first glance, the answer is simple, right? It would always be ceteris paribus, more positions, smaller size. Like that's kind of the textbook answer. That's kind of like that's the default setting. Like that's how you should always go into things, thinking about what you're trying to accomplish. However, we don't live in an ivory tower. We don't live in a vacuum. Like we don't necessarily operate inside of a textbook. We have to deal with, the real, living and breathing markets and our real living and breathing emotions and our real living and breathing account limitations or schedule limitations or whatever. And so the reality is this, yes, more smaller positions is better because it's going to allow you to kind of smooth out the probabilities over time. It'll allow things to converge on their expected values more quickly and all the things that we want. But man, if you find that once you get beyond 12 or 15 positions, you're just buried, or maybe it's 10, or maybe it's 8, or maybe it's 35, whatever the number is, you're just like, man, I can't manage all this. Like I can't manage all this. There's too many things happening. I'm really stressed out. I'm high anxiety. I can't step away from my screens for more than 35 seconds. I gotta know what's going on because I've just got too many logs in the fire. It's like, well, then those are all clear signs to you that you have too many positions on. You have too many things going on, so you need to pare those guys down. Now, again, the ultimate, number that people are going to settle on is going to be different for everybody. I mean, I know for me, as you guys have seen on the show, like if I go in here, let me just delete this strangle. If we go back to the positions tab, you can see I'm right around 10, right? I mean, I'm at 11. So I've got 11 positions. That's kind of comfy cozy for me. Like usually some number between, let's say, 8 and 12. That's pretty comfortable for me. When I start getting 13, 14, 15, It's like, man, that's difficult. That's difficult. And it's not that is somewhat a product of the show because I'm talking and teaching and trying to instruct. But even like, in like stealth accounts where it's just me all by my lonesome, I'm not usually, I mean, I might not even be over double digits very often, to be honest with you guys. And so, yeah, I would you got to find the number that's going to work for you. And it's not going to be necessarily the same as your trading buddies or the same as, a Tom Sosnoff, a Tony Batista, et cetera. So, smaller, more positions are better. But again, it's not that simple in my opinion. And now, does that mean with the positions you have left, you make them gargantuan in size? I wouldn't do that either because that doesn't really make a lot of sense. And so you're just going to have to make do with like a fewer number of small positions. So the answer, in my opinion, is kind of somewhere between kind of the two options that you gave. You don't necessarily want a lot of small positions and you don't want just a few large positions. You may find yourself operating best with just a few or a handful of small positions. But again, I mean, it's going to be different for everybody. So hopefully that helps a little bit. Gapper X is in the house, says, how's the hair today, Dr. Jim? I don't know. I think we're doing okay today. I mean, I would put it right there in the B- lane. Like it's basically what you would expect. But I mean, it's been much, much worse, even just earlier today. And so I appreciate you there, Gapper X. But Theta Trader is in the house. Theta Trader says, with all the market uncertainty, there's one thing I can say for sure. That is Dr. Jim, and I am not. And I have to get to work, so probably we'll miss the rest of this. Godspeed, Dr. Man. I appreciate you, Theta Trader. Your message there was a bit cryptic. I don't exactly know what that meant, but I know that you are in the middle of back alley crowns and back alley root canals, so that makes sense that you would be a bit distracted and maybe left some important words out of your comment. But I appreciate you, my friend. You know that I do. So if you watch this back on the archives, which I expect most of you to watch my shows 2 to 3 to 4 times per day, and so when you catch this on the replay, I appreciate you, my friend. YouTube Jim's in the house. Hello, Dr. Jim. How about a short put in PCG high IVR? What is PCG? I don't even know what that is. Well, it's just PG&E Corp. I mean, how could you not know? It's so simple. They don't even tell us what they are. They're just giving us a bunch of letters. Like, I don't know what this company does. And so, all right, perfect. Let's see here. PCG. All right, let's look at our liquidity meter. And let's see where we're at. Okay, 4 stars. All right, that's kind of nice. That's pretty interesting. You've got earnings on February 27th, so we might be able to sneak in here before earnings, actually, there, Jim. So this is some good stuff. What if, let's go to the trade page here. So I go to February before earnings, so that's kind of nice. Okay, so it's a lower price stock, only, $17, but you've got, so it's $17. I've got my at the money strikes. Decent markets. You've got, it's only a couple, a few cents wide between the bid and the ask. All right, so everything checks out. Okay. Jim said, hey, how about a short put in PCG? Okay. That's a great idea. I like where your mind is at. Here's the problem that I have, though. You've got a stock of $17, which is not necessarily a problem. Like, that's not, dead on arrival. Like, we have to do a bit more, investigating to figure out if we should move forward. The thing I don't like about this, though, Jim, is if I sell what is basically the at-the-money strike, the 17 strike, now the spreads are widening out for some reason. But if I sell the 17 strike, as we just talked about, a few minutes ago with extrinsic values and at-the-money strikes, this is going to give me the best bang for my buck, essentially. And I'm not getting that much. I'm only getting 60, 70 cents. That's not really a lot of premium. That doesn't really justify an undefined risk position, in my opinion. And so I'm going to pass on this just because there's not enough juice in the orange. Like, there's just not enough there. It's no different than when you go to Publix and you're looking at the oranges and you grab one and you feel it and you're like, man, this thing is dry as some cardboard. Like, I'm putting it back. Like, it's done. Like, I'm not going home with this guy. I'm not going home with PCG either. And so it's basically the exact same thing in a not really kind of way. So 64, 67 cents, just not going to be enough. And I'm going to pass on that. But YouTube Jim, I appreciate you, my friend. Thank you so much for being here. And so Trader, Gapper X says, what a move today. I agree. I mean, man, this is crazy. It's going to be wild to see what they do for this last hour and a half of trading. Like, what are they going to do? Are they going to stomp on them? Like, are they going to send this thing back down another 200 points and finish on the lows? Are they going to rally and back to unched? Or are they just going to chop around right here? I mean, I think that I think chopping around right here probably is the chalk. That's probably, kind of, plus or minus 100 points from here, let's say. That's essentially chopping around for the rest of the day. I'm talking about the NASDAQ. If they stomp on them, man, that is not going to be good for next week. If they rally them back, I mean, it's like, man, I don't know. I don't know what that means either. I don't know what any of this means. I'm trying to learn it with you guys. I'm trying to figure it out. Like, again, we don't know what we're trying to do. We're looking for it. Like, we're searching. But I don't think today's going to be our day. And so, but you're right there, Gapper X. I agree with you. Trader Ice in the house says, hey, Jim, what's going on there, Trader Ice? Thank you for being here, my friend. I know that you check out the show on a regular basis, if I'm not mistaken, and even pop in the chat from time to time. So thank you so much for being a part of what we do. I appreciate you. So Theta Trader came back, knocked out that crown real fast. Oh, and if you are buying shares, pick up 100 lot of CCI for the 7% dividend. 7% dividend. Look at this, CCI. Now, this will be a next week thing because I really want to do Crown Castle. Oh, so this is your supplier, right? This is your supplier for your back alley crowns. It would make sense that you have a vested interest in this company. So I'm not sure that I can objectively treat your advice as being neutral. I'm not sure that there isn't a whole lot of bias in this, but I'll keep reading. 7% dividend to hold and love. Again, I don't love the personal feeling type of words, descriptive terms like love. That kind of turns me off. I just want objective analysis, right? I just want data. I just need you to tell me what the X's and O's are, and I'll figure it out from there. Stock at a 52-week low. All right, so you've got CCI. Remind me of this next week there, Theta Trader. And 7% dividend. That's good. Unless they can't pay their bills, then that's not so good. And so I would, if we wanted to go there, because we talked about dividends last week, right? And my plan today was to talk about non-dividend paying stocks. Like we talked about how amazing dividends are, and they are pretty amazing. So I thought, well, let's talk about non-dividend paying stocks. Like, should we only invest in dividend paying stocks? Like, I don't think so. Like, there's plenty of room for non-dividend paying stocks. So let's talk about why you would ever invest in a non-dividend paying stock and kind of make that case. Well, we'll do that next week. But one of the things you could also do, kind of as a continuation off of last week, if you want to invest in a dividend paying stock, one thing that's really, really good is go back and look at the dividend payment history of that stock. And what you generally want to see is you want to see steady growth of that dividend. That has become the expectation in the world of dividend paying stocks, and it is the requirement and the demand of dividend receiving investors, let's say. Like, there are so many companies out there that raise their dividend on a regular basis every year, every couple years, wherever. Usually it's going to be on an annual basis. But IBM, they've been raising their dividend. Coca-Cola, they've been raising their dividend. McDonald's, they're selling the same cardboard between two slices of bread, and they're raising their dividend. This is what investors are expecting. Right? So if I go into a CCI, now I didn't even know this company existed until 45 seconds ago. And so CCI, maybe they have a tremendous track record of raising dividends over time. Maybe they don't, right? That's what I want to see as a dividend investor. And that's what most dividend investors want to see. They don't want to see, not cutting your dividend is not enough. And they don't care about 2008. They don't care about 2020 COVID crashes. They don't care about any of that. They want to see the dividend going up over time. And if you don't deliver that, you are going to get absolutely punished in the market. You can see it for yourself. If you go back and look at any dividend history, you can just pull this up on like Yahoo Finance or whatever, right? Download the dividend history. Go back. If you see any cuts, look at the stock price reaction after that cut was made. I can assure you they got gorilla smacked. I can assure you they got absolutely steamrolled in the marketplace. And so, it's always good practice to go back and look at the dividend payment history. So I'd be curious to see what CCI is. But remind me of that next week there, Theta Trader, and maybe we'll do a little something to help out your crown supplier. And so Emmett Morrison's in the house. What's going on there, Emmett? Happy Friday. Dr. Jim, happy Friday to you too there, Emmett. I appreciate you, my friend. You know that I do. If I'm not mistaken, you are going to make it out to the pop-up event in a couple of Mondays, so in a few weeks. And I'm very excited. I think it's going to be fun. It's going to be great to get to shoot the breeze and catch up. And I think it's going to be some good stuff. I'm really, really pumped. And so let's see. Scramble Everything says, there he is, Dr. J, ready to sell some Palantir puts. Nah, don't I already have a Palantir position on? I got something on in there. Yeah, I got a put spread on in there. Now we're going to sit tight and just stew on this guy. I don't really feel like doubling up on Palantir. That doesn't exactly get me super excited for a new position. So I'm going to sit tight on Palantir, but yes, I am here and I am ready to go, and hoping to help a little bit. Even S&P's now down 80 again, Nasdaq down almost 300, Dow down 635. Man, the boomers, guys, somebody check on your local boomer. Somebody check on like your neighborhood boomer. Just make sure that they're doing okay. Make sure they have what they need. Make sure they've got their afternoon programming. And you got to do it early because they're in bed by 4:45. So I would not wait. Like once this show is over, I'd go find one like now. I'd go find one like really, really quickly because you're going to miss your chance if you don't do it quickly. So let's see. Jim's in the house. YouTube, Jim, thanks for your help. And the B- Super Band, you are welcome. You are very, very welcome. I try to deliver both. And try to give a little bit of help and a whole lot of B- humor, and there you go. And so Junior Mac says, "Good morning from Australia. Lost. Come on now, brother. Oh, is this a negative comment about Lost? Ooh, Junior Mac, this is not good. I know that you are a staple of the show, and I know that you are part of our core position, but you're about to be on the outside of the inner circle here real fast." Junior Mac says, "Lost. Come on now, brother. How could you get through that show, man? I'm not even going to respond to that. I'm just going to say that you are treading on very, very, very thin ice. So moving on. Ben Coates says, "Happy Friday, Dr. Jim and everyone." What's going on there, Ben? I appreciate you, my friend. Thank you for being here. And I appreciate you so much. And so Sam L says, "Dr. Jim in the house." What's going on there, Sam L? We hit some legs today. It was a leg day Friday, which was, I don't know how I feel about that, but it's just, it's what was on the itinerary, man. You can't question the itinerary. You just got to execute. Sam L knows what's up. But Sam L says, "Market collapsing." You called it, Doc. Did I? I can't remember what I called. I mean, people have been tweeting at me and telling me I said blah, 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 and I'm like, I probably did say that, but I don't recall necessarily saying that. And so, but yeah, it's like, this is the beautiful thing. This is the beautiful thing about being an internet trader. This is the beautiful thing about being an internet trading wizard. I've been saying the market's going to drop since 2022, right? And you can bet your bottom biscuit I'm taking a victory lap today. Don't worry about the last 3 years. Don't worry about the all-time highs. Don't worry about the fact that, I called it an S&P, 4,200. None of that matters. The only thing that matters is today we are right. Today we bask in glory, we bask in victory, and we enjoy the spoils of that big win. And so, yes, Sam L. Here we go. So give us your most effective supplements for options gains. Okay, so well, my most effective supplements for option gains are very, very simple. You need a heavy dose, a daily dose of undefined risk. You just need a big bottle that says undefined risk on it. And what the actual undefined risk is doesn't really matter. It just needs to be undefined risk. But if you're talking about actual like bodybuilding gains, then of course, the slam dunk supplement is going to be creatine. You need to be taking creatine. If you're a man, if you're a woman, if you're an adult, if you're a child, if you're an infant, I don't care. You need to be taking creatine. It is a wonder drug. I don't even know if it's a drug, whatever it is, supplement, whatever, mineral, I don't care. You need to be taking some creatine. Let's see. Gapper X says, "You're good, Jim. No worries. I appreciate you, my friend. Thank you so much." Trader Ice says, "We were down 110 and 450 today, so it's all nothing now." I know. It kind of feels that way, doesn't it? Like, well, actually, maybe it doesn't. It still feels pretty down, actually. The other day, we did something similar where we were down, like, I don't know, 300, and then we were only down, like, 180, and it felt like we were green. Like, I can't really explain, and maybe it's just me in my own world. That's very possible. That happens often. But when I'm looking at the market and kind of watching the action and, doing whatever, sometimes it just has a certain feel to it. Today does not have, even though we were down 480 at one point, now we're only down 280 on the NASDAQ, it doesn't really feel like that's a victory. It doesn't really feel like, all right, maybe we're out of the woods. It doesn't feel that way at all. It actually feels like the VIX is going to be 22, 23, 24, maybe next week. And so, yeah. Chris King says, "Good news is bad news and bad news is bad news." That's not a good situation to be in. That's not a good situation to be in, at all. Paul Heyman's in the house. Paul Heyman says, "Selling more January 17th, 2025. So that's in like a week, right? GME 100 call options with an implied volatility at 364 for income from your audio-only listener. Risk-free money." Let's go, Paul. Yeah, GME. They're still in business? That's unbelievable. Wow, 32. Look at that, man. Roaring Kitty just making it happen. Look at this guy. Yeah, man, he's been shopping between 25 and 35 for about 3 years now. And so that's some good stuff. So GME at 32. Paul Heyman wants to go in and just sell some absolute junk. And I'm talking like even like the recycling company won't even pick this up. It's such junk. Like the trash company, you try to put this out by the curb, they'll reject it. It's too junky for even them. The 100 call and a 365% implied volatility is selling for 14 cents. Yeah, that's some pure junk, man. That is like, what are we even doing here? Like, for real. I mean, like, yeah, it has an implied volatility of 1 million, right? But the premium is so low, that doesn't even matter. Like, I know we've talked about this before, Paul, and you could be trolling me, and I'm trying to kind of give you a serious answer while baking in an inside troll inside of that answer. Yeah, this is probably not something that I would do with, my money, Tom's money, anybody's money, your money, like fake money, paper accounts, like anything. I wouldn't even sell this in a paper account. I don't think I'd even do this in a demo account. It's that junky. And so, but man, go for it, man. Absolutely 100% go for it. And by that, I mean, I wouldn't touch it. Scramble Everything says, Paul Heyman, oh yeah, Scramble Everything's calling you out. There you go. It's a team effort now. Dav's in the house. What's going on there, Dav? I appreciate you. Adam Armfield in the house. There was Trump not getting jailed. Might have had an effect. Oh yeah, I heard about that. The sentencing was this morning, and it's like it's all just theater, man. All of it. It's 100% theater, all of it, and it just makes me laugh. Like I watch it for the same reasons I used to watch, like Real World back in the day, for the same reasons you may have turned on like Jersey Shore back in the day, like watching all these politicians and watching debt ceiling discussions and fake sentencings and blah 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 blah. It's all theater, man. That's all it is. So Trader Ice in the house says, so I have a serious question. Ratio spread, say we sell 3 ES 10 delta puts and we buy 1 ES 20 delta put, say 45 to 80 days to go, market goes down. When do we start adjusting the trade in your opinion? Yes. So with the ratio spread, so generally speaking, a 1x3 might be a little bit different because you have or might be a lot different because you have all that added risk from 2 extra units as opposed to 1 extra unit. But I still think the same basic idea is the same. So let's say you put the ratio spread on and the market starts falling like right away. Well, you need to have controlled your position size on entry such that you can sit in that trade for a while. And you can, you don't necessarily have to do something right away, because my modus operandi for a ratio spread when the market drop, a put ratio spread, and the market drops, a lot in the beginning or later on in the, the life of the trade, I'm looking to take off the vertical spread. So that long put spread that's baked in there, I'm looking to take that off for somewhere near max value. Now you can't get 100% of max value until you get all the way to expiration. So it doesn't need to be 100%, but I need probably at least 75%, 80%. So if you've got like a $5 wide spread that's baked in there, then I'm looking to close it out for $3.75 or so. And then I treat the extra put, if it's a 1x2, or the 2 extra puts, like in your case, as kind of standalone independent trades at that point. Keeping in mind, what happened with the spread, of course. But in terms of moving forward, like how do you adjust a short put? It's you kind of follow that playbook through the forest. So that's how I would think about that. And so I'd be thinking about, waiting until the strike gets hit. I'd be thinking about, potentially even waiting until the break-even point gets hit if you want to be even more patient. And so that's how I would view that and kind of think about that. But man, I gotta go, guys. I gotta run. It's already time for Jamal. Man, I really hope that today helped a little bit, just in terms of market action and market commentary. I'll see you guys. If I missed you guys, then come back. Please come back on Monday. Drop it early in the stream, and I'll try to get to as many of you guys as I can. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, There are essentially 5 keys to making those returns, and in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on one second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. I'm washing, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing, so I stop washing my hands and I'm grabbing like towels to clean. I'm listening to what he's listening to, and I hear your voice.
Why didn't you go knock on the door and say,
he's taking a shit, all right?
I know. Well, why didn't you knock on the door and say, hey, Tony Batista here?
I mean, what am I doing? Hey.
Right, autograph session happening right now.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network on a very red Friday. I am your host, Jamal Chandler. Of course, my special guest today is Josh Fabian. Rough day out there, Josh. What are you thinking about this, man?
Ugly day.
Surprised or no?
No. Actually, I'm not.
Am I?
I'm not in the least bit surprised. How about you? I'm going to
Neither am I.
Yes.
Yeah, neither am I. Of course, today's move is on the heels of the latest jobs report, which basically shows that the economy is doing well. All right. Mm-hmm. I mean, that's been the funny part. But when you couple that with early in the week, we had Jolt's report of job openings, which was basically inflationary, showing that there's more job openings available. I think it was the highest. I don't remember how many months, maybe going back to April. I can't remember. But it's the highest we've seen in a while. And, we've seen more and more recently inflation reports showing that there's still some inflation in the system. And you add all that up and it's starting to sort of, this sentiment comes out that basically markets were getting ahead of themselves of all these rate cuts that were coming. And looks like we're probably going to have to hold rates steady for a while. So I'm not surprised at all. Like, honestly, you could almost feel it coming earlier this week. The way that we were trading, you could kind of feel like, okay, this number's going to come in hot and market's not going to like it.
Yeah, I think you're right. I'm going to add to that. I also think a lot of the political BS right now. I mean, we have a guy about to be inaugurated in a few days, and he talked about bringing down grocery prices and inflation and all that, and all of a sudden he's pivoted to, we're going to take over Greenland. It's like, how about we focus? Let's focus on what we got going on at home before we start talking about, invading Greenland and things like that. So I think that it's just, you have an economy that's strong, and it has been strong. There's been no question it's been strong, but it hasn't felt that way for a lot of people. And I get that. So, you had our jobs number, our interest rates are ticking up. You've got the same thing happening in England. I think their rates are at the highest level since 2008. So, you definitely have this world inflation concern taking place everywhere except for China. And I mean, they're at the complete opposite end of the spectrum.
Yeah, probably them, and I would imagine maybe Japan as well. Yeah, perfect timing. Bringing up the I mean, this has really been the thing, right? And it's funny because somebody was asking me the other day, do you think, stocks are going to be able to withstand the way that rates are climbing? And honestly, I was like, I don't know, but I think we're going to find out really soon. And sure enough, we did. And this is kind of reminiscent of what we were dealing with in 2023, the beginning of 2023, of course, 2022. Every time we'd hit certain plateaus, right? So I feel like when rates first hit 4%, markets freaked out. 4.5%, 5%. It looks like we're heading towards 5 until something changes. Until I didn't really pay attention because, of course, it was a weird week, right? Like we had FOMC meeting minutes came out Wednesday afternoon ahead of Thursday. Obviously, we were closed, but
yesterday for me. Yesterday totally.
Yeah, I'm still thrown off by it. I'll be straight up. I'm still thrown off by it. But didn't they kind of say that I don't really care about their rhetoric and the way they word things because they got to word things carefully so that the market doesn't freak out. But it sounded like essentially they were saying they're going to cut rates at a slower pace.
Yeah, that was they said the same thing actually right after the meeting.
Yeah.
Last time. So the minutes just reflected that. But I mean, what else are you going to say? You have rates taking off here. You're going to come out and say you're going to cut them. I mean, you can't. The market isn't going to allow it. So, and I'll also throw into that whole thing, also oil. You can't look at the bonds and the yields without also looking at oil. And it's like, okay, if you're worried about inflation, if you were thinking that the bond yields are reflecting concerns about inflation from an overly strong economy, well, take a look at oil today, up 3.5%.
Dude, oil's been really quiet for like a couple of months here.
It had been, and all of a sudden it perked up in the last couple of days here.
Yeah, I'm just trying to look at looking at and I mean, you're looking at like yields here, right? 10-year yields ever since that last CPI report. I'm guessing this is where this is, like 12.10, 12.9, somewhere around there. It's just been a steady climb from around a little under 4.2% to 4.7 now. So solid 50 basis points. And it wasn't direct, right, with oil. That's the interesting thing about
oil lagged.
It did, right? Yeah. It did. I mean, look at this. Like, it wasn't really until what's that? Like almost 3 weeks ago now that we started seeing this move in oil. I really kind of slept on this because it was. I remember it being around 69, 70, and then again, I was off. I was trying not to pay much attention. All of a sudden, one day it's like 72, 73. I was like, that's interesting, but kind of whatever. I think on Monday we came in, it was 74, and I was like, that's interesting, but whatever. And then today, 76 in a meaningful way. So, this is something to keep an eye on.
I mean, we were buying oil at 68 and change, 67, not that long ago. You and I were both trading around the same low levels. So it's a very condensed, very strong move. Definitely something I think you have to keep an eye on oil and also yields and just ask a very basic question of what is this trying to tell me? And I think it's there's a message.
So does any of this worry you, like overall?
Like worry me like day to day, or worry me like broad picture?
Like day to day trading wise, like are you like, I know you like to, you're kind of like me, you kind of have a long delta bias from time to time. Does this I guess I won't lead you into it. What I'm saying here is actually when I see all of this stuff moving together, it actually gives me some comfort that there will be a change around. Like if it were just the market were just like consistently dropping 1% daily, kind of like or 1.5% daily, like we were seeing in 2022, I'd be a lot more worried, and I'd be like, oh man, this market is done. It's going to be really hard to trade. When I see a big one-day move on some data, and I see volatility indexes respond like this, and I see a lot of big tech names. Of course, Meta would be down today too if it wasn't for the discussion about TikTok and all that. But when I see like kind of a coordinated move, and I see correlation go up too, and I see again, you see oil that has been completely quiet, but all of a sudden because interest rates are hitting the levels that they are now, it's all of a sudden moving. When I see all of that, I feel a little more comforted saying, okay, this is a big dislocation and it's going to correct itself. That's just kind of how I look at things.
Yeah, I guess I take a slightly different look at it. I see it as there's going to be some chop. I think that for the most part last year, it was a pretty quiet market. You had some periods where there was some chop for sure, like August, obviously. I think we're gonna see some choppy trading for the next few months, as we really don't understand what the political platform is going to look like and the economic policies specifically. So I think there's going to be a little concern about that. Like, is this Greenland thing? I'll go back to it. Is this for real? I mean, are we actually going to spend time and money on Greenland? Because if we are, then I can see why the markets are going to be like, listen, this isn't what we need right now. But, I just, we've seen choppy Januaries before.
For sure.
And so I'm not too surprised with that. I'm not, my long delta bias is, I'm still long. I mean, I'm taking a bit of a hit right now, but I can also wait it out.
Yeah, same with me. I mean, I've often talked about the calendar call spreads that I have on. Most of my long exposure is in February, which, makes me feel, kind of better. I mean, I can sleep at night easier that way, knowing that it's not like 3 days out. It's not a week out, because there is going to be some chop. For sure. I think probably over the next week or so. And then I think earnings are going to kick in. Now, if earnings come in and those start off really rough with those banks, well, that could be rough. That could really be rough.
And also keep in mind, January expiration, there's a lot of leaps that will expire in January expiration. So that could also add to some of this volatility. But I totally agree with you. You have Wednesday before the open, you have JP Morgan, Citi, Goldman, and Wells. They're all announcing on the same day. So if they come out, the JP Morgan one is the one that everybody keys on, what Jamie Dimon has to say. So if they come out and they say that there's an issue, there's a problem, okay, then the breadth of the market or the tone of the market probably gets a little worse. But see what happens.
Wednesday is the 15th, right? Yeah. 16.8. We also have, I think we have CPI and PPI next week as well. I wonder how much those really matter. I mean, I know they matter. Obviously, inflation matters. Obviously, that's what we're dealing with.
Question. That's a really good question. Does economic data matter as much because what the administration wants in terms of lower interest rates?
Yeah.
So.
And we know there's still a bump in inflation.
Yeah.
I'm sure the report's going to show that.
Probably. I mean, I'd be surprised if it showed anything other.
Right. So do you sell off more? I don't know. I guess it depends on how leveraged people are at this point in time.
Yeah.
But, times like this, folks, it just makes it a little bit harder to trade near-term stuff. Like it's a whole lot harder. I put on my first near-term trade in a while, literally just minutes before the show. I put on the Iron Condor with the 5820, 5800, 5780, assuming we're going to trade back towards the lows of the day. We'll see how that works out. It was only a $1.30, $1.25, $1.30. So we'll see how that plays out. But yeah, man, it's been like the first week has literally been all about what's going on with the 10-year, how much markets don't like it. And now you're adding another wrinkle to it when you talk about what's going on with oil. You got to mention gold a little bit too. Gold had been pretty quiet, and it seemed as though gold was like done. I mean, I still think it's done doing what it did most of 2024. Remains to be seen. I don't have anything on in here, but this kind of move today kind of catches your attention.
Yeah, I mean, it's I'm with you. I don't think we're going to see a repeat of 2024 in gold, but yeah, today kind of caught my attention as well.
Silver doing obviously silver thing, similar deal. I'm guessing copper is not up. That's kind of interesting. Or was up at one point and then it faded. Kind of weird.
It's still open. Is copper still open right now?
I'm not even sure the trading hours. It might not be. It might be closed. That's a good question.
I don't know.
It might be closed. I mean, there's a print. So
yeah, I have no idea what time copper trades. I'll be honest.
Me neither.
No clue. Yeah,
that was a good question. Me neither. Otherwise, man, what else is going on? How's the new year been treating you so far, trading wise? What else you been doing? Anything, or you just been kind of chilling on the sidelines, watching all this mess take place?
Pretty much watching on the sidelines. I do think there's some interesting things going on tangentially related to the market. You sent me something earlier this morning about sports betting. And, we're starting to see more of these sports betting or these sports bets make their way into the marketplace. This is the next leg without question. You already had the political betting, and now you're starting to see the sports betting come in. Speaking of which, real fast, what do you think the home field advantage in a football game is worth? I just saw this, so.
Well, just a football game, period? Are we talking college or are we talking NFL?
NFL football game.
NFL football game, a touchdown.
You think home field's worth a touchdown?
Sure. What's it worth? Field goal?
So it used to be it was worth a field goal. It was worth 3 points. But this article was talking about how teams now travel based on our circadian rhythms, so that they're traveling at times so that people adjust and adapt more quickly. Like, they figured this all out, which is crazy to me. So now a home field advantage is only worth 1.75 points.
Wait, what do you mean adapt for time? Like, I mean, it really only matters if you're crossing multiple time zones, right?
Well, it used to, you'd get tired. It's like if you were traveling from, say, California to New York, and you had to adjust for the change of time, it could really mess you up. But now they're saying but now they're saying these guys have cracked a code on, they know exactly when they need to leave and when they need to arrive and, leave California, arrive in New York in order for it to have a minimal effect on people, on the players. I mean, the article I was reading was just, it really got into the weeds quite a bit, but I just found it fascinating that, they've shaved some points off of the home field advantage based on how we've learned to better travel.
I mean, that makes sense. I mean, it's definitely a huge deal for college games. They often talk about that because, again, you're talking about kickoff. For a college game on the West Coast is 9 a.m. or whatever, something like that.
Yeah.
And for the early games, and so going over to East for sure. And that's the most extreme advantage, right? I mean, that's the most extreme situation, I would say. Other than that, I wonder how much it matters, if you're going from, Cleveland to New York. You know what I mean? That's kind of,
yeah.
You know what I mean? I wonder.
Basketball's probably a bigger deal too, because, that you're ending a game at night, jumping on a plane if you're playing back-to-back nights and you're flying who knows where. But, I mean, I'm sure there's always been a range, but just broadly speaking, but I think but getting back to my original point, I think it's really interesting that we're starting to see a broader adoption of sports betting. I know even on Kalshi right now, they've got markets on the next coach for the various openings. And here, I'm going to open this up.
Yeah, who's in the league? And to sort of hammer home what Josh is talking about, I sent him something that he actually has been talking about for a long time, this marriage of sports, being able to bet on sports and brokerages, and how, sort of there's often a mesh between the two. And, it's fairly true. I mean, I know a lot of people that I follow on Twitter often say, okay, markets closed on Friday, now off to my other betting situation. You know
Exactly.
what I mean? Seriously, I mean, that's what people often say.
We all do it because it's numbers, and it's, there's a similar feel. I mean, trading is definitely much more strategic.
Yeah, for sure. Much more strategic.
This gets close. And it gives you an excuse to watch football. So
very true.
but so the Kalshi markets, I think, are interesting also because you got these, coaches. So who do you think is in the lead? Who are the top two for the Bears? Who would you guess?
Oh, geez. I mean, well, the top two, I think that's pretty straightforward. I think it's Vrabel and Ben Johnson.
You would think. Whoops, hang on. What did I just do? No, not now. Ben Johnson, and then they got Brian Flores next.
Really?
Yeah.
Interesting.
And Johnson's 47%, Flores is 16%.
And he's the DC in Minnesota, right? So it's both same division.
Right. Vrabel is 84% for New England, which is probably why he's not in the Bears' top two. But it's just, it's like there's literally nothing, and Tom says this all the time, there's nothing you can't make a market about. And I think this speaks to that. And I think it's just kind of it's kind of interesting to see how this is expanding in these different directions. And I think actually from a trading perspective, this is going to be what brings people in, because they're going to find an interest in whether it's sports betting or coach betting, whatever, political betting, and it generates this interest. And then you want to find more, and then you can find trading and where it is being more strategic. But Rex Ryan, 14% for the Jets.
14. He's the highest?
No, Aaron Glenn's 27%.
Oh, he played there. I totally forgot about that until just now. Huh.
Aaron Glenn's also 44% for the Saints.
What about the Raiders? He played there too, actually, for the Saints, I think. What about the Raiders?
Raiders.
Aaron Glenn, funny story. A friend of mine got married in 03. Was that 03? It was 03 he got married in Houston, and his wife's brother went to Texas A&M with Aaron Glenn. So Aaron Glenn lent them this cool ass car to like drive out of the wedding, whatever, like to drive with get married or whatever. It was like this is like Phantom. It was ridiculous, dude. It was ridiculous.
Cool. Well, the Raiders, you would never guess who the top two are. Cliff Kingsbury.
Really?
20%. Number 2, Pete Carroll.
Really?
23%. Mm-hmm.
Pete Carroll's like 80, isn't he?
Pete Carroll may not make it through the next season. I mean, like, let's be honest. The guy, I don't know how old he is, but he's old, okay? Like, he's getting up there, and, like, it's not an easy job. So I just found this really interesting. It's like there's a market for everything everywhere you look.
There really is. As I pull up DraftKings and Flutter. Flutter's the one. I believe this is the parent company of, God, what's the other one? Not DraftKings, but
FanDuel?
Yes, FanDuel. Yeah. I think this is their parent. I've never traded.
They had a story the other day on, I think it was on Tuesday night or Wednesday, that this season saw the most teams cover the spread. Like the favored teams cover the spread in the NFL than ever before. So if you took the team and gave the points, they covered.
Really?
Yeah.
Huh.
JJ told me that. I don't know if I believe him or not. But no, I think it was true.
But you're spreading it anyway.
He said, I don't question.
So this season had the highest percentage of teams cover the spread?
Mm-hmm. Yeah.
I wonder why that would be. Does that just mean they're getting better at...
I think so. I think so. I think they're getting better at... I mean, listen, if they can figure out when teams need to fly in order for their circadian rhythm to be in line for a game, then they're probably getting better at it.
And again, that's the difference between trading and betting markets, because the betting markets are made by these the places in Las Vegas, and it's I guess is like what I'm getting at is, does that make you less and less willing to bet? It actually makes me, so I haven't bet that much in the last like 3 months, just because sometimes whether it's FanDuel or DraftKings, there's certain things that they do. They lock markets, which, unless you have crazy volatile days in the stock market. And this is why it's so different. Unless you have crazy volatile days in the stock market, markets don't get locked, right? Or volatile, something in a name where there's like a talk of a buyout, et cetera. That's the only time you ever see really markets get locked. These guys lock markets all the time when something's going on, when there's a touchdown, the scoring, and it just sucks. I don't like that. But also, I'd rather wait for the crazy things to happen. So the most recent bet I did was the what game was it? The Ohio State and Oregon game, when they were up like 28 or 30 something, and it was like the points spread was like plus 30. I'm like, okay, it's really hard to beat a team by 30, especially a team like that. And it's not a home game. It's neutral, but they're on the West Coast. They do have fans there. Yeah, I'm taking the points, and I took the points, and that worked out well. But I just wait for wild times. Other than that,
I'm with you on that.
I think you gain no edge a lot of times betting before a game starts. That's like trying to buy stock on a Saturday. When you put in an order on Saturday, hoping it's for Monday, that's a license for steal for brokers, because who knows where the stock is going to open up.
Yeah, I agree with you. Last night, I guess Notre Dame was getting +8 at halftime. And, Penn State should have been up by a boatload in that game. They had dominated. And Penn State was, Notre Dame +8 at halftime. I didn't bet it, but in hindsight, that is the type of bet I wouldn't. That's to your point. Those are the types of bet that I kind of find interesting. Like, okay, like Penn State's not playing all that. They're not putting the points on the board for as well as they're playing. That means Notre Dame's got a shot. That's a bet I'll take. I mean, I do gimmick bets every now and again just because I want to be able to brag to you on Monday that I picked 8 out of 8 winners and on a Sunday, which
I mean, no doubt.
I am consistently good at 7 out of 8 and losing my bet. I'm really good at 7 out of 8 and losing.
That was why I started doing those round robins for a while there, man, for that exact reason. Like I would have things like, 6 out of 8 hit or 7 out of 8. And I'm like, damn, I mean, if I could get something for just like that type of precision, I should be good, right? Like what's up?
I swing for the fences. I want it all. Like, I want it all, man.
Yeah, man. So, we're winding this week down. Obviously, we'll see where markets end up here overall. But, I mean, not really too many surprises here, folks. Like, I mean, we're well off the lows of the day. We're at least 30 handles off the lows of the day. But, do you would you expect VIX to be up more, or you think? I mean, what's the high?
I'm a little surprised actually, but I think
we're never quite got over 20. That is a little surprising.
I think we're going to sell off, though. That's just my gut. Is that the trend has always been when we have these big sell-offs that you kind of rebound pretty quickly, and I just don't think I think we're going to see more chop. I would not be shocked. Let me put it this way: I don't think we're going to sell off. I would not be shocked if we sold off and closed on the lows of the day.
You see my bet. I told you already, so I'm right there with you. I think I actually would prefer that, especially somebody being long. I would prefer if we do that, because then you come into next week with a different mindset, and I think markets would be like, you know what, maybe it was a little bit overblown over the given what we expected. But however, I mean, I gotta say, the expected move is essentially, was right. It was a 1.2% expected move coming in today. I mean, obviously we're a little more over that now. We've had more than that throughout the day. So this was it wasn't too underpriced. I'll say that.
Yeah, no, it was perfectly priced. So yeah, it'll be interesting. I think that I wouldn't be surprised if it's kind of quiet Monday. If we do have CPI on Tuesday, then I'd be even more inclined to think Monday will be quiet. And then I think those bank stocks, we're going to get into earnings, and I think that's going to tell, that's going to tell the story for a while, I think.
Oh, we got a weird thing. Apparently PPI is. I don't know what makes them do that. Apparently PPI is on Tuesday, so PPI comes first, and then CPI is on Wednesday.
It's normally the other way.
I know. Are they starting to change it around? I mean, that makes sense.
Maybe in odd years. Maybe odd years as PPI goes first. I don't know.
Mess my head.
It's like the jobs number coming out today instead of last week. It's like all this, like, sometimes there's these little anomalies that take place, and I don't understand them.
I will say this. I've always believed this. You could do a study on it, but I'm pretty sure it's true because I've noticed it a lot. You mentioned like the idea of macro data. I think macro data for the most part doesn't matter until you start to see multiple things in a row. It's almost like volatility kind of clusters. It starts to matter. And I think, looking at next week, you got PPI on Tuesday, you got CPI on Wednesday, and you got retail sales on Thursday. All of those are basically going to be looking at inflation. I think those are probably going to really matter next week.
I agree with you. I think you have to look at it. You can't look at each individual report as a one-off. It's in aggregate. What are these things telling us? But I completely agree with you. And we're ticking down further here.
Yeah. Folks, that's the show. Josh, I'll see you on Monday, man. And we'll have more to chat about this. Folks, appreciate you watching. As always, be smart, be patient, trade them small, and trade them often. We'll see you later.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Stop when the clock hits 13. Sing 1, 2, 3, 4. Cut. like we do it.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, everybody. Well, so ends our one-day trading week. It occurred to me last night that I actually have 7 weeks in a row that I don't have just a nice, solid, boring 5-day week. You know, it started off Christmas and New Year's and the day of mourning, and I've got some travel days here and there, but it's okay. You know, you're probably suffering to some degree like I am. Like, it's today Monday, it was Wednesday, Friday. If you're as immersed in this as a lot of us are, you're sort of anchored to that nice, clean 5-day framework, and this gets confusing. But today is Friday, and we actually have 5 trading days next week. Although I will be traveling on Friday, so I won't be doing a show a week from today. But otherwise, I'll be here. Today is a terrific day. Red all over the place. The one blemish I had, which hasn't been too brutal, has been oil. Oil's up like almost 4%. But hanging in there. I got XOP puts earlier today. My COP puts are still down. I whipped out on my BP puts, but shame on me because those turned around. But yeah, it's a good day. Things are really starting to break down nicely. And it's 10 days till all our problems get solved. So in the meantime, we'll do the best we can. Let's jump in. I don't know why I'm yammering so much. There's a lot to talk about. There's the spider. You may notice the little semicircle I've drawn. That appears to be something I didn't realize before, which is that we've hammered out this cool little top. Yeah, so things could start to get interesting. And I will say, and mind you, we try to avoid talking politics here. I'm not doing that. Whoever the president might be, it could have been Yosemite Sam, fill in the blank, doesn't matter. Whoever it was who would have been president, and the one, God knows, who's going to be president, will be using one word more than any other: inherited. Because the problems forthcoming are unavoidable. And every time it's going to be, well, we inherited this and we inherited that. So whenever you hear inherited, think of me, because that's what's going to happen. Or make a drinking game out of it. One shot per inherited, and then, they'll W cirrhosis of liver. But yeah, inherited. You're going to hear a lot of that for, 4 years. And even before we have the changing of the guards here, we've got this really cool setup, which will almost certainly go plunge-a-rooney before the big day. But it's, it just sort of dawned on me today looking at this, like, oh, I see. Because today, for the first time in a long time, we have slipped below the midline of the very long-term channel. And we're also getting close to sealing up that election day gap. So a lot of good things happening, a lot of good things. The jobs report did the deed today. The market's going to fall hard anyway, but whatever excuse you want to put in there, today's excuse is the jobs report, which was strong. And that may seem odd to some more newcomers, but the general notion is, jobs market is strong. Powell will not have the liberty to slash rates anymore. Well, duh, we've been talking about that for months. He's not going to cut rates at all. He's going to raise them. And it's going to suck because he's not going to want to do that, but he's going to have to raise them a lot. So the 5-year-long bond bear market still continues apace. Here's TLT plunging again. Yeah, inflation's going to start raging. Powell's going to raise rates. His boss is going to flip his wig. It's going to be really cool. Here's the diamonds. We have broken below the election day gap. Yay. So we have slipped below that. Does not offer support anymore. We've cut beneath it fully. So that's, the Dow's lost thousands of points over the past month. Many tens of thousands to go, but this is, we're stepping in the right direction. EFA, worldwide markets outside North America, completing its diamond pattern, slipping below and out of that little oval I've drawn there. And China in particular, which of course has thrown trillions and trillions of yuan at their feeble equity markets, just keeps flopping. I mean, the Chinese stocks that I put on a while ago, BABA, PD, JD, all much lower now. Alibaba is the same price it was a decade ago. So, a decade of growth and profits and endless government help has yielded bupkis. This is not BABA, by the way. This is FXI, which is splendid performance compared to the likes of Alibaba. But yeah, China's still plunging away. Got some good news Wednesday night, I think it was, because I heard that the Biden administration was clamping down on semiconductor exports to China even more. That's done good things for our AMD position, down over 5%. Target price, way down here, low 90s. So that's going well. NVIDIA peaked, had a lifetime peak. If you think of things in terms of trading hours, it was just 15 trading hours ago, something like that, a very short amount of time. Market was closed, obviously, yesterday. It was, Tuesday morning that it was at the highest price ever. People were talking about a $4 trillion market cap. Fell hard on Wednesday. I've lost track. Fell hard on Tuesday. Fell some more Wednesday, and then more today. Got to stop these holidays. It's really throwing me. But NVIDIA breaking down nicely as well. And ARM, which is so vexatious, I've stopped trading it, but this is down again. And of course, Intel is just a hot mess. This is down back into the teens again. Even including dividends, we're at the same price we were back in the last millennium. 25 years, 0%, including dividends gain from Intel. Embarrassing. And naturally, given what semiconductors in general have done and the feeble performance of Intel, I'm very confident this will be a single-digit stock before maybe this year is out. Certainly the next couple of years. So yeah, Intel's just hot garbage. BP, I wimped out of. I'm sure I'll regret it. In fact, I'm thinking about just getting into it before the market closes again. It's still a nice pattern. It has violated the pattern to some degree, and that sort of irks me. I'm sort of a purist when it comes to these things. So it pushed its way deep enough into that pattern that it bothered me. But there's a lot of overhead supply, and it still could work out nicely. So maybe I'll do it. I did not only stuck with ConocoPhillips, I added more, and that one's red, God bless it, even with oil raging higher. So COP also violated its pattern to a small degree, but I sort of put my little fist to my hips and just stood by and bought more puts on that. So maybe I won't get into BP after all. I don't know. Some other short items here and there. Crocs slowly breaking down below this trend line, having completed the third reversal pattern. CrowdStrike, which we can all tip our hats to for bringing the internet down on August 5th. This one's starting to break down also, almost $10 on this one. And the key is to break the 336.56 level. That'll complete this pattern here. Let's just draw that so you don't have to remember such things. Just kind of rough this out like so. That's what we're working on. Good heavens, move down. Close. Like so, yes. Okay, so that's what we're looking to complete. AFLAC. Probably because of the fires, I assume this is breaking down, but the reason doesn't matter. It's the pattern. It's all that counts. We talked about this on Wednesday. So this is, I think I did my duck impression, but we're down, almost down to breaking in the double digits here. Carvana, which is mired in controversy again. This is reversed away from its bounce gains past couple of trading days. And then a new one. Haven't looked at this for eons, but Caesars Entertainment, thinking about taking a bearish position on this one, even though it has already lost the vast majority of its value already. It's down, what, 70, 80%? It's down a lot, but it's kind of breaking down into like the abyss here. There's nothing holding it up here. So toying with the idea of getting some puts on that as well. Palantir, the bloom seems well off the rose here. We peaked on this one at about 85. We're down to 67 now. That peaked Christmas Eve. So it has just been days at this point. Axon, another favorite of the post-election zeal. This is down about $10, and long term, I expect we'll be down, hundreds more. So it's a very long-term channel, and give it time. It could take a year or two to kind of work its way fully down, but that looks very vulnerable. This one is just kind of an object lesson here, not a position at all, not an idea at all, but just an illustration of pattern failure. This is CubeSmart. I actually pay these people because if you store stuff like there's public storage and there's extra storage, there's all these firms which have done exceptionally well as stocks, EXR. You put your junk. The business model is great. You put your junk there. You never want to see it again. And they bill you every month, and they increase the price over time. They're very systematic about it. They keep goosing the price up because through deep research, they know that you're just you do not want to deal with all that stuff because you got to hire movers and pull it out. And where else are you going to put it? It's a great business. So they've done well for decades, but this had broken out here. But look what happened after the breakout. It pushed back into the pattern again, and it's just been bleh ever since. So it's just a good example of why, as nice as a pattern may be, if it fails on you, that's probably a pretty big sign this ain't going to work out. And that definitely went that way with Cube. What else? It's my daily whinge about missing out on Wingstop. I think this has got a great future in terms of downside. Continues to slip lower, and we've breached that dashed red line you see there. Lots of downside to go on this. I'm not in it anymore. And the options stink, which is why I'm not. And another kind of in our theme that we talked about months ago about Dollar Tree, Dollar General, this continues to slip lower. It's moving in fits and starts, but on the whole, it's definitely moving in that direction. It's been quite calamitous. We've gone from about 250 to about 70 in a matter of, just a couple of years. What else is cooking before I say goodbye? Herbalife. Poor Bill Ackman. Well, he's not poor. He's a billionaire, but I feel bad because Bill Ackman was passionate about his Herbalife short. And Carl Icahn was passionate about Herbalife long. And there's a lot of just this epic battle between the two of them. And Carl Icahn squeezed and squeezed and squeezed that short position. And at some point, probably around here, Bill Ackman threw his hands up and said, enough. And he just covered it at a huge loss. He was right. He was right the whole time. The stock has completely collapsed. It's lost the vast majority of its value. They even did a movie about his position, I think. So Bill Ackman was absolutely correct. It just took time. Carl Icahn was wrong, but he squeezed him out of there. So, bleh. Interesting, though. I was right on this, but I have nothing to show for it. This is Huntsman. This one's going great, and it's doing exactly what we had talked about. You and I have looked at this chart again and again and again. Some of you are probably still in it, but it's been breaking down off that massive topping pattern little by little. This is not a dramatic stock like NVIDIA, but it's absolutely doing the right thing. A little more dramatic, though, is Netflix, down hard, almost $34, and it has broken the midline of its own channel. So that's pretty cool, too. One last chart to show you. IWM, you and I talked about this on Tuesday, I guess it was, because we'd gotten quite close to that dashed blue line here, which had changed roles from support to resistance. It fell away, and it's continuing to fall away, and we're beginning, I think, to finish up what could be a very substantial continuation pattern like so. And that's it. So next week, no earnings, obviously. That really doesn't kick in for a while, but we got the CPI, PPI coming up. and the charts are working terrific. So I'm really looking forward to resuming where we left off. So I'll see you on Monday, and you have a good weekend. Bye-bye.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
If you missed the live show, here's our Cherry on Top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funukkah. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up.
Right?
I was waiting for somebody to say something. And if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now
It's in their
been sitting
refrigerator.
out for hours.
Now, I got to talk about the chili. Here's my comment about the chili. You were right, not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was off.
You can chop him up a little finer.
And then maybe pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott. I really do. I really do. This is my favorite segment by far.
I made a little video. We have
Oh, no. Is this going to embarrass me?
the holiday spirit here
Oh, no.
at Tasty Live, so you're welcome.
Have we seen this?
Watch this. No, you've not.
I didn't proofread this. Oh, God.
You want me to get in first? You want to get in first?
Saz, get in here, you big stud. It's my bad arm. Been over your head?
So you're naughty.
I'm nice.
You're naughty.
I gotta read. I'm
No,
nice.
it's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Sounding off with the closing bell. Even the S&P's down at 95 handles. Sounding off a little bit surprised by this move lower. Volatility 1890, still about 70, 80 cents off of its highs, with the E-mini S&Ps only about 20 handles off of their lows, and even the S&Ps were just down another 5 or 6 handles a moment ago. NASDAQ down 357, Russell up 53, and the Dow down 700 and change. What's that?
Russell down 53.
What did I say, up?
Yes.
I stand corrected. Down 53 is the weakest of the group, Sadnov, by almost a full percentage point or so, down almost 2.5%. Everything else down around 1.5 to 1.75%. Bonds back to 1106. I say back to 1106 because they got over 12. They flirted with under 11. They're near the lower end of the range, I guess, closer to the lower end of the range than the higher end of the range. You can see here over the last 4 or 5 days, they've been steadily going lower. Bitcoin hanging in there, back up to 95,000 and change. Oil strong all day, really not too much back and forth action in oil, although it is $1.20 off its highs. You can see by that big green bar how price has really improved in oil over the last 2 weeks or so, going from around under 70 to up to 77. Gold off its highs by about $20, still up $24. IV rank of 60 in golds. But Sadnov, this was all about the chips today and the chips to the downside. Some other notable stocks that are lower: Netflix down by $35, Goldman Sachs down just about $20, Adobe down $11, CRM down around $8, Apple weak all day down around $6 and change. AMD continues its slide down $6 and change. You did have a few buckers. Lilly up around $8. Costco was strong all day, up 7. Meta up around 6. I don't get that one, but Meta is up around 6. And you got Delta and a bunch of the airlines like UAL also up. Delta up 5, UAL up 3. Stadnoff, that's all I've got for right now.
Yeah, I wouldn't exactly call this a mixed bag of tricks today, because it was for sure not when they're down 95 handles. That's not a mixed bag.
I'll give you that.
I would say that this was a little bit unexpected on virtually every level today.
Yeah, thanks, Joe Biden.
I think Joe Biden's out of the picture now. You can thank your boy.
This is all about his chip play. Don't worry. We're gonna fix it, though. We're gonna fix it.
Listen, you and all the Trump tards can keep thinking whatever you want. But
don't worry. You're going to mess with our chips right now. We're going to fix this.
Godspeed. You're going to need it. The next 4 years, you are going to need it. Be careful what you wish for in life. You have learned that lesson many times. Be careful what you wish for. It's way easier to be on the other side. Be careful what you wish for.
Buy it while you can, Sadnov, not when you have to. I'm going to tell you that right now.
So I flattened out today. I am flat right now.
So you did take a little bit off of the table here to the downside.
I did a couple things here that I don't know if I'm going to regret it. I added to my note position at 107.12 right here, or 107.12.
I mean, eventually you got to be right, Sadnov.
Eventually you got to be right. But I haven't bought any futures. I've only been short puts. I'm short the 108 puts. I've been short them forever. But now I bought the futures outright. I'm going in for the kill. And
it does look like a capitulation move here, but I don't think you can get a capitulation move.
I don't know.
In a bond product. Do you know what I'm trying to say?
I don't know if you can either. I don't know if you can either. There's a lot of inventory out there all around the world. 107.12, I bought a bunch of notes, and the bonds, I actually have to say that I did trade those pretty well today and actually made money scalping bonds from the long side. But I just tried to reload, and I got a partial fill at 111.05. So I mostly bought notes. I missed the whole bonds. The weird thing about today's market is a lot of the stocks that I like to be short didn't really. I mean, obviously Bitcoin's up 3,000, so MSTR and Coinbase were pretty strong all day relative to the rest of the market. Tesla is another stock I want to be on the short side. I'm a little bit short in there, and the stock was basically unchanged or up all day.
Coin was $10 lower though. I do want to say that. I do want to say that to you. And Tesla was a little bit lower too. Down at 383, about $10 lower than that. But you are right. They both could have been, especially Tesla. It's been green for most of the afternoon. Right now, it's basically
Tesla actually at one point today. Tesla traded down under 380, and it's
383 is the low.
Oh, why did I see 378 earlier? I looked at it. Are you sure? Or did they change it? Okay, maybe you're right.
383.49 is what I got as a low here. I mean, I don't know. You want me to call? You want me to call my friend Scott? You want me to call him?
No, it's okay.
All right, I don't want to bother him. I don't want to bother him. He's probably playing.
I don't need the wrath of Scott. This was a market today that I think was, obviously you mentioned the chip stocks. Also, there were a lot of really weak tech stocks, like Apple was down out of the chute. IBM was down out of the chute, along with the AMDs and the NVIDIAs of the world, of course. But those stocks were ugly. China was ugly all day. The only stocks that kind of, I mean, that's it. I'm going to leave it there. We don't have to go through every stock, but not the best day for the stock market, and also kind of giving a little more creed, a little more leverage to the idea that maybe we made an early high in here. I don't know yet. It's too early to tell. But we'll see. Let's put it this way. The velocity of risk has clearly been to the downside so far.
Okay, this is a 1 day year to date chart of the EDS.
We're 6 days in.
We're 6 days in, and we're just outside the lows made on the first day of the year.
Yep. This is.
Hold on.
Put that back up for a second. 6 days in, and there's 3 up and 3 down. And in this market, we've been averaging 5 up and 1 down for the last 15 years. So this is about.
I'll give you that.
That's about as bearish as I've ever seen anything. But more importantly, put up the bond chart if you want to see something.
Well, I wanted to put up the Russell. The Russell's actually the weakest of the group, and continuing that 2024 Russell weakest of the group, even if it makes even if it goes higher. You want to see the bonds?
The Russell was a dog today, too. I mean, I know it's down 53 and the S&Ps are down 93, but it was still a dog today. Yeah, the bonds. Yeah, the Russell has been continued weak. But here's the thing I want to mention about the Russell. So I have the Russell versus the S&Ps on, not the Russell versus NASDAQ anymore, Russell versus S&P. And the thing with the Russell is it basically mirrors the NASDAQ for some. I'm not really sure why. I mean, I know the financial stocks, whatever, but put the bonds back up again. Those are even uglier because if you go back into last year,
the bonds don't even have an uptick.
Yeah, they can't even buy green.
Right.
If this was a roulette table, if you went back, this is just this year, the first 6 days.
Right.
But if you went back into last year, you would be looking at this thing going, what are they?
Yeah, there's a dog with fleas, as my friend Tony from Mexico
Yeah, I know, but just do the last 6 days again. That's the fun part. So let's just make believe we're at a roulette table. Okay. so
we're gonna say the table's either tilted or black is coming up next for sure.
Well, here's the thing: you can't be down every single day this year. So at some point, there's got to be an uptick.
It is a debt instrument. Yeah, I would give you that too. Mm-hmm.
I got to tell you, I'm a retail trader now, so it's not like my positions are very small relative.
I know, but nobody wants to be wrong.
No, A, nobody wants to be wrong, and B, can you imagine if you were trading in the bond pit for the last couple of months? I mean,
it would be a tough one. Your flotola would be loaded.
Oh, your flotola was loaded about 10 points ago.
Yeah, right. I'm not saying at this moment,
I mean,
right?
You've been taking down stuff here for the last, from day one of this year.
Yeah,
you have
for
been
sure.
Choked.
No doubt.
And they've been dumping this stuff on you like there's no tomorrow.
Sure.
So
and since we're doing these 1 day moves, and I know we don't have a big oil position, but here's oil for you. I just had to give that to you. So oil definitely, and gold is going to definitely show a little bit of strength too.
I did something today. I went into the SPX in the middle of the day because I was testing some of our research, and I just felt like, you know what, I'm going to sell a 0-day SPX strangle with 3 hours to go in the day, even though I know it's statistically really bad to do. So I sold it for $10.55. And then I had to go into a board meeting for about an hour and a half that I couldn't look at the screens.
Which is not your favorite thing to do.
I hate board meetings. So I'm like, all right, well, I don't need this strangle. So I covered it and I made 20 cents. That thing is $11. It's $11 higher.
No, we're catching a little bit of a bid here. It's trading $16, $18 right now, but whatever, $6 to $10 higher. Yeah, mid price is $17 right now.
Yeah. So the question here is on the close. Do you think they mark them down or up?
And by the way, your put is completely in the money. It's just basically a naked put. You with that position that you have on, you would just need a rally in the market. What do you want to know? I'm sorry, what was the question? Mark them up or mark them down?
Yeah.
Oh, you could sell those 15 puts till your hands bleed. You can sell those SPX 15 puts at 210. They were just 210 bid. All right, make them. Yeah, there they go. They're 210 bid right now. You could sell those until your hands bleed.
I don't know.
Ah, yeah, you kidding me?
I'm
easy breezy.
I'm debating. I think it's a better trade to sell the 58.35 calls.
Well, sell them both then. There you go. Make your money that way. I don't know. My puts are 190 bid, sound off 190 bid. I'm out. I mean, you want to sell them? It's just like the old days. Because $2 bid on the screen.
Oh my God. Brings back fun memories. No.
It sure does.
I mean, if I had to pick a side here, I'd probably rather sell calls.
I'd rather sell the puts, 100%.
Gives me a lot of confidence. Anyway, let's see what else we got going on here this is what we truly call, this is limping.
You are stumbling into the close here.
We're stumbling, limping, we're dragging into the close.
Mm-hmm,
This is not a close for the ages, that's for sure.
No, absolutely not. And those, like you said though, like some of the stocks that we trade, I know you mentioned Tesla already, but some of the stocks we trade didn't really get hurt as much as you would expect on a $100 move on even the S&Ps.
Oh yeah.
Like my biggest loser today is Goldman Sachs and gold. Like, those aren't usually Goldman Sachs has been a thorn in my side all year already.
I stopped trading Goldman Sachs.
You're smart.
I stopped trading Goldman Sachs. Goldman Sachs is one of those stocks, I agree with you, that you can't make any money in. It's like I have a group of stocks like that, like ENPH, and there's a couple stocks that no matter what I do, it just doesn't work.
Yeah, so, it's got my number. There's no doubt about it.
Yeah. Goldman Sachs is kind of one of those. I have a whole handful of stocks like that that I stay away from at all costs. And there's just that's just the nature of this business. There's certain stocks that just don't pay you.
Yeah, or they just have your number, right? I mean, it's nothing personal. It's just business.
Exactly. It's nothing personal, just business. Tell that to the stock. I'm looking through my list really fast to see if there's anything else here that jumps off the screen at me. And I want to say, no, not really. So don't forget, we have a show this Sunday night, and I will be on. I missed last week. Oh,
look at this! Look at the Sazi selling them at 70 cents, the 05 puts, and buying them back at a Q.
I'm keeping my streak alive with the SPX.
Nice. Look at you taking a little page from the bat here, going with the put side. Good job out of you, Sosnov.
55 cents, little scalp. I like. For me, I don't know why, but it's always fun to scalp the end of the day, the SPX. It's not really.
Well, I mean, it's free money for people like you. And the Tesla low was 377.29. I must not have updated. I'm so sorry.
Yeah,
you are correct.
Yeah. Okay. Good.
Yep. One more time, Sosnov, on this day, which I really would like to rename the Sosnov Day, because I was privileged to.
When I tell you that something traded under a certain thing, I'm kind of like a savant when it comes to that stuff. I'm usually not wrong.
Okay, you know what? I would like to rename today Sosnov Day because I heard a conversation with you today. It was Sosnoff of old, man. I was proud. I was proud to
stop
say.
yourself. Okay, stop yourself.
I was proud to say I knew that man when he was a Bengal Tiger. I do. I knew him when. I do. Yep, I did. 100%. Good job out of you.
All right. So give me the call for next week. Next week is the first full week.
Full week.
It is also next week is expiration, right?
Mm-hmm. Mm-hmm. Yep. Yep.
And we also are going into, if I remember, is it in a long 3-day weekend too?
Martin Luther King, right?
Martin Luther King.
I believe so.
I mean,
Yes.
I think it's a week from Monday. So we have a very
January 20th. You are correct.
Perfect.
January. Yeah,
So
January
next
20th.
week's the first week we kind of have a full week. We had very, very heavy volume today. I didn't do anything like I would say crazy special, but the S&P's traded almost 2 million contracts. And
1.8 and change. That's a lot.
And I didn't do anything special except kind of adjust positions. We did do fast market earlier. We did like 7 out of 10 trades, but I made 135 trades today.
Well, that's what you're supposed to do. That's why we pay you the big bucks.
So I was definitely trading in and out of stuff all day. We are going home tonight, flat S&Ps.
Mm-hmm.
We are going home long bonds, long notes. Notes we bought good. The bonds we bought okay, but we're also losing money in both those positions on just our existing positions.
Yeah.
So we're long bonds, long notes, long Russell, short S&Ps,
Mm-hmm.
and then short a lot of premium. Our daily theta, let's see, our extrinsic is the highest it's been in a while, probably because of the pop in volatility here.
Mm-hmm. Yeah, definitely. But you know what? A lot of this morning they were trying to take a lot of money away from me. They gave it back this afternoon. I think with volatility kind of contracting at the same area that we were with even the S&Ps down here has really helped positions.
Well, a lot of times on days like today, when they look in the morning like they're crashing, they will widen out the markets and they will a little bit.
Mm-hmm.
They'll widen out the markets and they'll pump a little vol in there around lunchtime because, there's a chance they could yank them.
Continue. Sure.
And in the afternoon when that didn't happen, they eventually start to take some of the juice out.
Yeah, but they didn't take any juice out of the market to the downside is what I'm talking about here. Market did not act very well today.
No, it's a PIG pig, and
Mm-hmm.
There's a little bit different. I feel like we've had a tone change a little bit, and there's, I feel like all last year, every time they were down, they just rallied back. And today,
we had those days where we were down 50 or 100. We end up 50 or 100 in the same day.
But we did rally 60 handles today off the low.
Yeah, we most certainly did after the bat called the low there.
Yeah, and that fooled me and it fooled you a little bit. But then we went right back down.
I thought we'd be up 20 by the time we were having this show. I didn't think we'd be back down 90.
Well, because that's what's happened for the last 15 years. But then they traveled back down towards the lows. But they're going to get a few of these stocks that aren't
ladies and gentlemen, that's Tom Saldo's way of saying nice call, Bat. Way to step up.
I don't really think it was a very good call because unless you got out, which you never would have.
You're unbelievable. My 15 puts are trading at 20 cents, Sadnov. I'll take them in now if you want me to.
You're the paper trading king of America.
You're the king dipshit of the paper trading traders.
Yeah.
Even the S&Ps haven't moved, down 91. Volatility up 105, Sadnov, 105.
So what I was saying earlier is I think we're going to have a very interesting Sunday night show this week. Sunday at 4:55. Tune in. It's going to be pretty interesting because after a down 90 day in the S&Ps, there's usually there's a few sparks left over, and so we'll see what.
What do you think you call? What do you think you call this for Sunday's opening?
I I think now you have to call lower, maybe down 10.
Mm-hmm.
If they open up, if they open higher, you can just sell them. I think they open lower, and then because that's the most troubling thing. You know, there were a couple of turnaround stories today, but not a lot. Like the Japanese yen turned around a little bit. It closed. It basically closed up nothing, but it was up more.
Come on, you can't. I mean, come on.
No, I know.
A drowning man reaching for a straw. If you're talking about the yen.
Yeah, I know. I'm just saying the other currencies didn't turn around at all.
You're embarrassing me. Don't turn into the new Sosnoff. Stay the old Sosnoff.
I bought some Chinese stocks this morning. Those all went lower. I mean, there wasn't a lot to cheer about.
Bitcoin 90,000 or 100,000 first stop.
I think it's got a better chance.
95,000 traded down to 92. It was 100,000 3 days ago.
I think it's got a better chance of trading 90. But I don't think it matters because you can't really do much in there.
Yeah.
And I really don't like IBIT. I looked at it today. I'm like, ugh.
Yeah, nothing to trade in there. I looked in there too. It's hard to get fills too, I think, at least.
Really hard. Really hard. Now, I kind of, in a perfect world, I'd rather see a washout here because I think it would make for really good trading through the end of January. But I am concerned. First of all, next week is January expiration. And January expiration is one of the busiest cycles because of all the leaps and everything else that expire. And it's also one of the most bullish of all the expiration cycles of the year. I don't know why, but like it's almost 70% of the time, the Jan expiration cycle is bullish. Probably just because of the high level of churn and everything else. But that's later in the week. So I think if the market's going to be soft, it's going to be soft earlier in the week and maybe get a little weaker late in the week.
Yep.
I don't know. I just feel like if we're going to be soft, maybe, Sunday, Monday, Tuesday is the best chance. And if they're going to get strong, maybe Thursday and Friday is the best chance.
Well, you got a little bit of PPI. I know you don't care, but I've just put it out there on Wednesday and Thursday. On Tuesday and Wednesday, sorry. On Thursday, you got jobless claims coming out on the 16th.
Yeah, I don't Friday, think those are good. With bonds where they are right now, I don't think it means a damn thing. So I would.
Do you think the multiple rate cuts off the board?
Sure.
Brings weakness to the market.
No, well, it's already. Here's your weakness. You're looking at it today.
I mean, like I said, 50 handles.
I mean, you're talking about that stuff now. This sounds like a Vecchio Elia conversation. Sure, right now it's off the table. But if bonds rally 3 handles next week, which I think they could do, you're going to end up with, they're back on the table. So who knows?
So subject to market change is what you're saying. All you're saying is the Fed is just echoing what's going on in the market.
The Fed's in no man's land right now because they really don't know. The market's acting on the side of caution because everybody's nervous about, what Trump's going to do as soon as he gets in office because he's threatened, a lot of stuff on day one.
It's change, right?
I know, but he's talked about big, surprises and everything else on day one. So the market's is erring on the side of caution. But usually what happens in those cases is that it's your bark is much worse than your bite. So starting on, I think, right after Jan expiration, which is next week, next Monday or next Friday, the other side happens and the market realizes, oh, this is not as bad. And, and then the bond,
you get
a
little footing. Yeah.
And we'll see how they close here. I mean, they're not closing strong. That's for sure.
No. I mean, the S&Ps really have moved in a 4-point handle, 4-point range here.
Yeah, since the time we've been talking, they've moved in literally a 4-point range. And I'm watching a bunch of stocks, and they did not move.
No, sir. Well, my friend, even the S&Ps are going to close somewhere around down 91. That's a 1.5% move. NASDAQ down 330 and change, a 1.5% move. The Russell down 51, a 2.25% move. And the Dow down 700 and change, just about a 1.75% move. Volatility hanging at 19, a good number for premium selling, up $1. Sosnoff, I'm going to tune in on Sunday, see if you're right. And if you're not right, I might call in. Peace.
Can I bet $10 you don't tune in on Sunday?
I'm going to tune in on Sunday. I'm going to call.
I want to.